So let us start with our next topic, which is a tax audit and ethical compliances. So this was a topic which was there in your audit paper till last year. Are you listening?
Yes, sir.
But in the new course, the institute felt that Aarish Khan is not teaching anything to students properly. He does not have too much content to teach. So they thought that let's put one more topic in direct tax itself. Okay. So they have put this burden on me now rather than an audit teacher. They are free from this topic. So what are we going to learn in this topic? We are going to learn a lot of things in this topic with respect to tax audit and other aspects as well. We will also do the questions which are uploaded by ICAI on their newest material based on this topic. Okay. Now, what is the first thing that we are going to do over here is pay attention, please. Now, there is an overview which is given over here. As a chartered accountant, what all things you are going to do. Okay. So, as a chartered accountant, the first thing that we are going to do, I want your absolute involvement, please. Will I get or not?
Yes, sir.
As a chartered accountant, what is the first thing that we do? We do tax audit report, correct?
Yes, sir.
And along with that report, we need to fill form 3CA, 3CB, 3CD, etc., etc. Okay? Yes or no?
Yes, sir.
Now, when 3CA is applicable, when 3CB is applicable, when 3CD is applicable, I'll be speaking all the things in great detail here. Okay? After the end of this lecture, you will be an expert in tax audit. Okay? Apart from this, RCA is also responsible for other reports and certificate. Tell me. Or chartered accountants are only responsible for tax audit report? Do they give other reports and certificate as well? Tell me now, please.
Yes, sir.
Like, let me give you an example. Like certificate under form 15CB. We give or not for remittances? Tell me.
For remittances, yes, sir.
Yes, for ATIA, ATIB business, we have to give an audit report in form 10 CCB that the deductions are properly claimed by the assessee. For ATJJAA, we have to give form 10 DA report. We certify that. Okay. We check that whether the assessee has computed ATJJAA properly or not. Like one more example, form 29B, form 29C for book profit. We give or not? Please tell me.
Yes, sir. Yes, sir.
So the point I'm trying to say is we are not only responsible for tax audit. Okay. Apart from tax audit, there are many other responsibilities that has been put forth on us. Yes or no?
Yes, sir.
So there are some basic bhashan which is given. Bhashan, you understood? What do you mean by bhashan? Explanation. So there are some basic bhashan, basic explanation which is given over here. We will go through it first. Okay, shall I?
Yes, sir.
So first of all, they are giving a bhashan that the concept of tax audit came in India in 1984. When it came?
1984.
84. And it was a milestone in the history of chartered accountancy profession, blah, 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 blah. Okay. Yes.
Yes, sir.
And then the government, we need to thank the government that they have entrusted us. They have put a trust on us of this biggest responsibility, right? Right? Now, the time and again the changes are made in the audit report. Yes, the audit reports are changed or not? Please tell me.
Yes, sir.
And even ICAI has issued what? A guidance note on tax audit. ICAI has done what? Tell me, please. A guidance note on tax audit report has been given by the ICAI. Is the first paragraph clear? Please tell me. Tell me na fast. So it's a bhashan here. I'm not interested in bhashan much. I'm interested in the provision. Now, are the chartered accountants also responsible for other reports? Yes, why not? In addition to 44AB, there are other provisions where we are responsible. Like for trust, we are responsible to give form 10B, 10BB. Yes? Remember or not, to claim exemption under section 11 and 12, right? Similarly, for ATIA, ATIB business, we are supposed to give what? Form 10 CCB, right? It's a certification from our side that everything is computed properly. Yes or no?
Yes, sir.
Then for 80 JJAA people, we are supposed to give form 10 DA. For 15 GB, 115 JB, and for 115 JC, we are supposed to give form 29B, 29C, right?
Yes,
For slum sale assessee, we are supposed to give form 3 CEA saying that we have computed the net worth of the assessee properly. Is it clear? For 15 CB for remittances outside India to non-residents where it exceeds 5 lakh rupees, we have to give 15 CB form also. Yes, correct or not? Please tell me.
Yes, sir. Yes, sir.
So what is given in this paragraph? You need to find out the synopsis of every paragraph. Huh? Now this is the chapter that everybody has to do it from here only. This chapter I cannot put in the color book because I cannot summarize this. This is a new topic. I don't know what all things ICI will ask, what all things ICI will not ask. So I cannot summarize this to a great extent. So that is the reason everybody has to do this topic from here itself. Are you clear? Now check please. So what does this paragraph says? We need to make a synopsis of every paragraph. Tell me now fast.
The form to be certified by chartered accountant.
Yes, there are various forms and reports apart from tax audit reports which are certified by a chartered accountant. Correct or not?
Sir.
Shall I go ahead?
Yes, sir.
Now, government trust on our competency. Government has a lot of trust on our competency. Government feels that we are very competent enough. Okay, which we are definitely. So again, it is a bhashan. Shall I read it once?
Sir.
Louder than
Yes, sir.
the requirement of audit of accounts and furnishing of report of chartered accountant, certifying the correctness of the computation under different provisions of the Income Tax Act, indicate the trust reposed by the government. The revenue authorities rely upon the integrity of the chartered accountant. Huh? So they rely on our integrity. Okay. Further, the High Court has held, Delhi High Court, in a particular case that it is quite competent for the Income Tax Authority not only to accept the auditor report but also to draw proper inference from the same. The Income Tax Authority can therefore come to the conclusion, since the auditors were required by the statute to find out if the deductions claimed by the assessee were supported by the relevant entries in their books of accounts, the auditor must have done so. So what are they saying? What the Delhi High Court is saying?
Of account is the same as per the income tax claim made by the client.
So you have to assume that the auditor would have done so. Okay.
Yes, sir.
Auditor would have checked everything properly.
Yes, sir.
Okay. Further, where the original books of accounts of the assessee has been destroyed in fire, what has happened with assessee? The books of accounts are destroyed in fire. So you could rely upon the other material, mainly consisting audit report, from where you can get the supported evidence. Are you able to understand how important an audit report can be? Tell me. So what is this paragraph trying to tell us? Trying to understand, trying to create an importance of what? Chartered accountants. Yes or no?
Yes, sir.
This clearly demonstrates what? Please tell me. The faith of various statutory duties, right, which have been casted upon us, right?
Yes, sir.
It is in this context that the conduct of chartered accountant has to be appreciated. A chartered accountant cannot be oblivious to their professional duties and sign audit reports in a mechanical manner. Will you sign audit report in a mechanical manner? Please tell me.
No, sir.
You have to do scientific analysis of every assessee. Yes, and then you have to do a sign. Correct or not?
Correct, sir.
Now, guidance note on tax audit under 44AB. So this is whose guidance note? This is the ICAI's guidance note. Okay. So what does the ICAI guidance note says? We will go into the clause by clause discussion. All 44 clauses we are going to discuss. But before that, we have to do this bhashan first. Okay.
Yes, sir.
The audit report given under 44AB is to assess the income tax department. Is to
The income tax department.
assess the correct income of the assessee. The tax auditor should keep the necessary working paper, definitely, about the evidence on which he has relied upon while conducting the audit. Such working paper should include what? Among the others, work done while conducting the audit, explanation and information given to him, decision on various points, judicial pronouncement has to be there. Yes? Certificate issued by the client, management letters, all of them has to be there. Okay. If all of them are not there, there is a separate auditing standard. Do you remember? there is an auditing standard on sufficient and appropriate evidence. Remember or not? Arey, there is one SA 230 for audit documentation. Remember or not? So in this chapter now, we are going to link a lot of things. We are going to link all the income tax provisions. We are going to link audit. We are going to link accounting standards. Yes?
Yes, sir.
We are going to link professional ethics in audit. Do you know about professional ethics in audit?
Yes, sir.
Have you learned that?
First schedule, second schedule.
First schedule, second schedule. So all those things will also come over here. Okay?
Yes, sir.
So audit documentation, which provides that the tax auditor should prepare documentation that provides sufficient and appropriate record on the basis for auditor's report. And a chartered accountant is what? Deemed to be guilty. Remember, such words are there in professional ethics if you have read professional ethics earlier. Right? A chartered accountant is deemed to be guilty of professional misconduct. Now, you will understand this paragraph only if you have done professional ethics earlier. Otherwise, you will not understand. Shall I read?
Yes, sir.
A chartered accountant in practice would be deemed to be guilty of professional misconduct under clause 7 of part 1 of second schedule to the chartered accountant. If it does not exercise due diligence or grossly negligent, okay, or a chartered accountant, if he fails to obtain what? Tell me. Sufficient information to express his opinion, right?
Yes, sir.
So, you need to have proper documentations. You need to have proper information with you on the basis of which you will make your conclusions, right? Now, in this chapter, first we are going to understand the reporting requirement. Okay, now, do you remember that we have done in income tax law a penalty under 271J if a chartered accountant does a wrong reporting? Remember? In the chapter of penalty, 10,000 rupees penalty will be imposed on CA, on merchant banker, on registered valuer. In the chapter of penalty, we have done. Remember or not?
Remember, sir.
Now, the next thing which is given over here is the entire provision of section 44AB. See, from year till year. Entire 44AB is given from year till year. Okay. What is 44AB? Who is liable for audit? Tell me fast. We will have a recap. If your business is there and if your turnover is greater than 1 crore, see point number 1 is covered. What's for some businesses whose aggregate receipt and aggregate payment does not exceed 5% of total receipt in other than cash. So if your online payment is more than 95%, remember an online receipt is more than 95%, then the limit is 10 crore. Remember or not? Please tell me. Then for professional it is 50 lakhs, correct? Then for presumptive assessees under 44 AE truck, 44 BB, BBB non-resident, if they want to claim lower profits, they can claim lower profits by doing audit. Remember? Similarly, for 44 ADA and 44 AD, if they want to claim lower profit, they can do lower profits, claim lower profit by conducting audit. Remember or not? So tax audit is done under different clauses. It is done under what?
Different clauses.
Is this clear?
Clear, sir.
And it has to be done 1 month prior to the due date of filing of return. That also I hope you know that. Due date, right?
Yes, sir.
Correct?
Correct, sir.
Now, listen carefully. Do you remember for shipping business and for airline business, tax audit is not applicable? Remember, for them it is only always 7.5% and 5%. Remember or not? Array for shipping business, 7.5% of your turnover. And for airline business, 5% of your turnover. Always that only. They don't have an option to show lower profits also. Remember or not?
Remember, sir.
They don't have an option to show lower profits. Now, the big question which is going to start over here is, what is Form 3CA? What is Form 3CB? Okay. What is?
Form 3CA, what is Form 3CB?
Who will fill Form 3CA? Who will fill Form 3CB? And what is Form 3CD? Okay. So shall I start discussing this? Now see, 3CA will be, this is an audit report. Huh? This is an what?
Audit report.
And this is an annexure. This is an
Annexure.
to the report. Now who will fill this report? See, this will be filled by those people who are liable for audit in other laws. In
Other laws.
other laws. Like you are a company, you are liable for audit as per company law, correct?
Yes, sir.
Like you are an LLP, you are liable for audit as per LLP law, correct?
Correct, sir.
So you will fill form what? And then the annexure will be what? Where 44 clauses are there. Is it clear?
Pakka, sir.
There is no energy in your life. Okay, the energy is gone.
Pakka, sir.
Why before exam? Exams are far away from here. Still your energy is gone, Palani. What happened suddenly?
Nothing, sir.
Feeling sleepy or what?
No, nothing, sir.
Answer na then.
Yes, sir.
Who will fill form 3CB?
For audit under Income Tax Act.
Who is liable for audit under Income Tax Act? Yes?
Sir.
Who are not liable under other laws, like individual. Individuals are not liable under other laws. HUF are not liable under other laws. Firm are not liable under other laws. So they will all fill which form? Tell me please fast. Form 3CB. Check. In case a person whose business or profession is required by or under any other law, then form 3CA. Is it clear? And whose accounts are not required under other law, form 3CB. Correct? And 3CD everybody has to fill because that is an annexure. Are you clear? Whether you fill 3CA or 3CB, annexure has to be filled by everybody. Yes or no?
Yes, sir.
Now listen carefully. One very important thing. Sir, if my accounts are audited under other law, sir, if my accounts are, listen carefully, then, very important question. Huh? Suppose my accounts are audited under company law, then is the tax auditor again supposed to do an audit? Tell me.
If he is the same person, he not do audit.
Even if he is not a same person, is he supposed to do an audit?
No, sir.
Not required. Not required at all. Always remember. If you are, the auditor will only give a report that audit is done by this person. That's it. I am not supposed to do audit once again. I am a chartered accountant. You are my client. Okay. You have already done audit under some other law. I am not going to do audit once again. I am just going to fill these two forms. That's it. Are you able to understand or not?
Understood, sir.
The entire audit procedure will not start once again. Are you clear? So, in case where the accounts of the person are required to be audited by or under any other law, it will be sufficient compliance if the person gets its accounts audited under such other law before the specified date and also furnishes by said date the report of audit under such other law and a further report of an accountant in form 3CA. Are you clear? Again, audit is not required under the income tax law if you are already audited under other law. Are you clear?
Yes, sir.
Okay, now whether tax audit is applicable or not, that all depends upon turnover. That all depends upon sales, right?
Yes, sir.
That all depends upon your gross receipt. So the question is what?
What is the term?
What is the term? What is the term? Turnover. What is the term? Gross receipt. What is the term? Sales. So what do you mean by these terms? Okay, shall we start discussing this? Please, Palani, I want your absolute attention and absolute support. Okay.
Yes, sir.
First of all, you don't have to lean and sit like this in life. You have to sit like this in life with your chest out. Okay.
Yes, sir.
So what is sales, sir? What is turnover? What is gross receipt, sir? Okay.
Yes, sir.
So what is sales? What is turnover? What is
Gross.
gross receipt? So honestly speaking, these terms are what?
Not defined here.
Not defined in the law. It is not defined. So we have to understand in our commercial terms, in accounting language. Okay?
Okay, sir.
Yes or no?
Yes, sir.
It is not specifically defined in the law. So understand in common terms, commercial terms, in day-to-day language. Correct?
Yes, sir.
Now, the institute has given some examples below. Before that, they have given some bhashan over here which we already knew. So you please tell me whether you knew this or not. So the bhashan which is given over here, we all know that. Do we know that as per the income tax law, you have two options to maintain books of accounts, cash or mercantile. Remember, whichever is
Picture is beneficial.
whichever is regularly followed by the SSC. Remember that or not? Now, what does the term sales turnover or gross receipt will include, and what will it will not include? Okay, because the entire applicability of tax audit depends upon turnover, sales, and gross receipt. Correct? So we need to know as a student the meaning of these three terms. Shall we start?
Yes, sir.
So there are few typical cases which are given over here. First, discount allowed in sales invoice will reduce the sale price and therefore the same can be what? Deducted from the turnover. So if your gross turnover is 102 lakhs and you have given 4 lakh discount, okay, then your net turnover is how much?
8 lakhs.
So is the assessee liable for tax audit?
No, sir.
No. You have to deduct that discount from the sales and then determine the turnover. Are you clear?
Yes, sir.
Shall I go ahead?
Yes, sir.
But cash discount, which discount?
Cash discount.
Otherwise than that allowed in a cash memo or sales invoice is in the nature of financing charge and is not related to turnover. Therefore, it shall not be deducted from the figure of the turnover. See, there are two types of discounts in practical life. One is trade discount, one is cash discount. Correct? Trade discount you directly deduct from turnover. Correct or not?
Yes, sir.
But cash discount you show turnover full and then on the debit side of P&L you show discount separately. Correct?
Correct, sir.
So in case of cash discount, do not reduce from the what? Turnover. It means you have to include the cash discount and then see whether the turnover is exceeding the limit or not. Are you clear?
Clear, sir.
Turnover discount is normally allowed to customer if the sales made to him exceed a particular quantity. So you are my customer Palani and I am your seller. Okay. And I tell you, if you purchase 2 crore product, 2 crore rupees product, I will give you 5% discount. Okay. Businesses does this or not? Please tell me.
Yes, sir. Yes, sir.
So this is a turnover discount. It is a trade discount only. Okay. And if it is a trade discount, what will happen? Please tell me. It will be deducted from the figure of turnover. Is it clear or not? Please tell me.
Yes, sir.
Next, special rebate allowed to customer can be deducted. Okay. If it is in the nature of what? Please tell me.
Trade discount.
In whatever way, if you give a trade discount, that has to be deducted. It is as simple as this. But then you name them special rebate, you name them trade discount, you name them what? Turnover discount, whatever you want to say. Are you clear?
Yes, sir.
If something has to be directly reduced from the turnover, then you have to reduce from the turnover and find out. Okay. If it is in the nature of commission on sales, then the same cannot be deducted from what? From the turnover, because the commission on sale will be separately debited to the P&L. Are you clear? Louder zara and sit properly, Palani. Price of return goods. What do you feel? Price of return goods should be included in turnover or it should be deducted from turnover? Return goods. You have sold something and then that is sales return. Please tell me. It has to be deducted because that is not your sale only. Correct? Then the sale proceeds or fixed asset. What do you feel? Shall I take that in the turnover or I should not take that in the turnover? Sale proceeds or fixed? No, only stock in trade will be part of turnover. Yes or no? Sale proceeds of investment. Shall I take that in the turnover, or I should not take that in the turnover? Investment.
No, sir.
No, that is not turnover. Only what will come? Stock in trade. Correct? Similarly, sale proceeds of any share, security, debenture, will it come in the turnover? That depends. That depends, right? If the share, securities, etc. are your stocks, yes?
Sir.
If the shares and securities and debentures are your investments, which are in the nature of stock in trade, is it possible or not?
Yes, sir.
Then you will take it, or else you will not take it. It is as simple as that. Clear?
Yeah.
So what is the ultimate conclusion of this paragraph? Trade discount reduce, cash discount do not reduce. Correct? And only the turnover relating to stock in trade will come, not investment, not fixed asset, not other assets, right?
Right, sir.
Now, shall we see the definition? Not actually definition, but it's a general discussion, correct?
Yes, sir.
On what?
Gross receipt.
Gross receipt is also not defined, unfortunately, but it will include all receipts, whether in cash or whether in kind. Please, you take a pen and whatever I am highlighting now, you have to highlight that. Otherwise, you will take 10 janam to revise this during the examination. Okay? Alani. Or else if you want, I can share this particular, but I cannot share also this with you because this is the entire book. I cannot share the entire book with you.
Done, sir.
Or I will share it with you, don't do, because then you will waste a lot of time, right?
Okay, sir.
I will try to demerge this topic and share separately, okay?
Okay, sir.
So what does the term gross receipt will include? Shall we see?
Yes, sir.
First of all, it will include what? Cash, kind, all items, correct?
Yes, sir.
See here fast. See on the board. See on the board completely, continuously. Now, what all things will come? First, shall I read?
Yes, sir.
Cash assistance. Whatever cash assistance you are getting in the form of an export. Remember or not? The government give you cash assistance on exports, right?
Sir, duty drawback, sir.
Duty drawback, etc. All those things will come one by one. That will also be gross receipt, okay?
Yes, sir.
Any duty drawback, gross receipt, check.
Yes, sir.
Aggregate of gross income by way of interest received by money lender, okay? If I am a money lender, I am receiving what? Interest. That is also gross receipt, okay?
Okay, sir.
Commission, brokerage, service charge, other incidental charge received in the business of chit fund, okay?
Okay, sir.
That is also what? Gross receipt. Next one, pay attention. Reimbursement of expense. If the same is credited to what?
A separate account.
Only the net surplus will come in the gross receipt. Suppose I incurred 1 lakh rupees. How much?
I incurred 1 lakh.
On traveling, food, etc. But I got reimbursed 1 lakh 50.
Okay, sir.
So that 50,000 extra is gross receipt or not? Please tell me.
Yes, sir.
That is my income or not? Right or not?
Yes, sir. Yes, sir.
So only the net income, net would be considered to be what? Income, not the entire amount. Okay?
50,000 rupees cash and sir.
Are you clear?
Yes, sir.
Similarly, the net exchange difference on export sales will also be added back. Okay? There might be exchange difference or not on export sales. Sometime profit, sometime loss, sometime profit, sometime loss. Yes?
Yes, sir.
Arey, if you export something, there might be currency exchange difference or not? Tell me now. Yes, sometime profit, sometime loss. That has to be added back. Higher charges of cold storage, gross receipt. Okay?
Okay, sir.
Liquidated damages if you receive from your client, gross receipt. Okay? Insurance claim except for fixed asset, because for fixed asset we reduce from block. Remember?
Yes, sir.
Insurance claim for raw material, etc. gross receipt. Okay?
Oh, yes, sir.
For fixed asset,
That is for the last.
not gross receipt. Okay?
Yes, sir.
Sale proceeds from scrap, wastage, etc. gross receipt. Okay?
Okay.
Lease rent in case of operating lease, gross receipt. Okay?
Okay.
Higher charges in case of, finance income to reimburse or reward the lessor for investment and services. Lease income will also be gross receipt. Okay?
Okay, sir.
Higher charges in case of higher purchaser, gross receipt. Okay.
Okay, sir.
Advance receipt forfeited from customer, gross receipt. Okay.
Okay, sir.
And value of any benefit or perquisite arising from business. Okay.
Okay, sir. 190.
That is also gross receipt, which is chargeable under section 28, right? Now see here. Very important point. Suppose I have two businesses. I have, so to find out the gross receipt or turnover, will I club the turnover of both or I will individually see? I have two business. To find out the limit, whether 1 crore is crossing or not, will I club the turnover of both and find out the limit, or individually I will see?
We have to, sir, because it is the same person, sir.
Yes, you have to club both of them. Very important point. Mark down. Where the assessee carries on more than one business, the result of all business activity shall be clubbed. Correct?
Yes, sir.
In other words, the aggregate sales turnover gross receipts of all business carried on by an assessee would be taken into consideration. Correct?
Correct, sir.
But when you club all the business now, Palani,
Yes, sir.
you have to exclude the businesses if they are presumptive income businesses. Check. Suppose I have three business. See now. Two businesses are normal. One is presumptive business.
Yes, sir.
So while computing the limit of 1 crore or 10 crore, don't take the third business. Are you clear?
Clear, sir.
So you will only club which businesses which are other than presumptive. Are you clear?
Yes, sir.
Presumptive businesses will not be clubbed over here. Clear?
Clear, sir.
Now there are two examples over here. You have to go through these two examples fast. Then we'll go ahead. In first example, DB Private Limited has a turnover of 10.25 crore. So if a person has a turnover of 10.25 crore, is tax audit mandatory for him?
Mandatory for him, sir.
Then you don't have to check also na 95% online or not. Yes?
Yes, sir. Yes, sir.
Yes. The second case, check and tell me whether it is mandatory for him or not. Up to 10 crore, you can have a confusion whether mandatory or not. But above 10 crore, always mandatory. Yes?
Sir. The tax audit is not required, sir.
Tax audit is?
Not required.
Why?
Sir, the total receipt, that is
DB has a total turnover of 9 crore. Out of this, 7 crore is received during the previous year. These amount are received through account paycheck. How much is received through account paycheck?
4 crores. Achhi,
7 crore. Apart from this, it also received an advance of 4 crore for supply of goods. Out of such advance, it received 46 lakhs in cash. So total how much is the receipt?
11 crores.
Out of 11 crore, how much is received in cash?
46.
So out of 11 crore, only 46 lakh is received by cash. How much percentage it is?
4.18%.
4 point,
18%.
which is less than 5%.
Therefore,
Therefore, not applicable tax audit because the turnover is up to 10 crore. Correct? If turnover would have been 11 crore, then is tax audit applicable? Yes, then though it is applicable mandatory. About 10 crore always mandatory. Correct? Now, there is a repetition of few points over here. We will see them first and then we'll go ahead. Okay? So they have given, the institute has given first of all the discussion on Form 3CA, Form 3CB and Form 3CD. Shall we start? Tell me, Palani.
Yes, sir.
Now tell me, who will fill Form 3CA? I have already told you this. Repetition. Don't read now. Without reading, and you can't say or what. In exam, everything is open book or what? Huh?
Sir, Form 3C is for companies who are liable to audit and other.
Why only companies? Why are you saying the word company for Form 3CA? Anybody can come in Form 3CA, na?
Any person who is liable to
Any person who is liable for audit under other laws like company law, LLP law, Form 3CA. Right or not? And therefore, if the person is not liable for audit, then Form 3CB, correct?
Correct.
Further, see here, listen, each and every point, listen carefully. Right hand side, if the company is having a different accounting year, is it possible or not? Array, the accounting year of the SSC is different from our financial year, is it possible or not? Yes, then they are supposed to make what? Tell me. Common sense. If the accounting year is different from our accounting year, then what are they supposed to do?
We have to prepare a new financial for our.
They have to make a new P&L account, new financial as per our financial year. Correct or not? Shall I go ahead? No. Logical answer. Left hand side. Think. There is a lot of things to think in this chapter. Huh? You have to apply your mind with me. It's not a theory topic. It's a very beautiful topic. Shall I say? You have to think. On the left hand side, are you doing audit?
I am doing audit under any tax, sir.
Are you doing audit under tax audit law?
No, not required to do.
As a tax auditor, are you doing audit?
Not required to do.
No. On the right hand side, are you doing audit?
Yes, sir, I am doing audit.
So on the left hand side, will you comment on P&L account, balance sheet account?
No, sir.
On the right hand side, will you have to comment on P&L balance sheet also? Be very careful. Why? Because on the right hand side, you have done the audit of P&L and balance sheet. Remember or not?
Yes, sir.
Louder. Your voice is not coming today. You need to eat something, I guess. You're feeling hungry or what? Huh?
Yes, sir.
Hungry?
Yes, sir.
I'll give you a break after some time.
Okay, sir.
Tell me fast, left hand side, are you doing audit of P&L balance sheet?
No, sir, I am not doing audit.
In this case, it is not required for the tax auditor under whatever AB to give his opinion. You will not give your opinion unnecessarily. Something which you have not seen, why will you give opinion? Huh?
Yes, sir.
As to true and fair view of the accounts. Okay. It would be only necessary for him to annex a copy of the audited account as well as the copy of the audit report in Form 3CA. The auditor is required to give the details in Form 3CD by the SSC are true or correct or not, subject to qualification. Okay. On the right hand side, he has to do a lot of work. In this case, the tax auditor is required to give his opinion whether or not the accounts are audited by him to give a true and fair view. Balance sheet was proper or not, P&L was proper or not, okay. And the rest of the things are same only like left hand side. Is it clear? Sure. Now, can I revise a tax audit report? Can I? I made a mistake. Can I revise it? That is the question. I have a question to all of you. Can I revise it? If yes, by which date? By which date? When can I revise? Please tell me. You all are Maharathis. You all are Bahubalis of tax audit, na? Huh? You all are Bahubalis of tax audit, na? Then answer na few points, please. Palani, not a Bahubali or what? Kattappa you are. Then? What are you then? What are you? You guys are Bahubalis of tax audit. You have been doing tax audit for the last 2 years, 3 years. Huh? Yes or no? Tell me.
Yes, sir.
In what circumstance you can revise a tax audit report and by which date? Check please. Don't remember, don't know anything. As per Rule 6G, report of audit in Form 3CA along with Form 3CD may be revised if there is a payment by such person after furnishing report under section 40 or 43B. Remember, in section 40 there are a lot of disallowances, and 43B there are a lot of disallowances for not deducting TDS, not paying TDS, for not paying certain items on time. Remember or not? So when the CA filed the audit report, at that time I did not deduct the TDS, I did not pay the TDS, or I did not pay the GST. Okay, but after that I paid it. After that I paid it before the due date. Paid it what? Now the CA is very, he was in a hurry. CA was in a hurry. So on 1st September itself, he filed the tax audit report. Now I have time till 30th September or not? Forget about 30th September. I have time till 31st October or not to make the payment. For payment, I have time till 31st October or not? So I made the payment later on, yeah. I should get the deduction or not? Please tell me. So why the hell you are qualifying in the tax audit report? So in such case, CA will what? CA will what? Then in such, if I paid the tax by 31st of December, October, then what will happen? Then CA will revise your tax audit report. Okay. Are you clear or not? Yes, sir. Check. There is no limit to revise the tax audit report. It means what? Number of times a CA can revise is infinite. Correct? Time limit is till March he can do. Okay. Till March. I guess it is given also at the end. No, not given. Forget it. Okay, sir. So, see, this problem will always arise. Why it will always arise? Listen now. When the CA will file the audit report? 1 month before the due date of filing. 1 month before the due date of filing of return. And after that, you will file the return. Correct? Yes, sir. And you will pay the tax, you will pay the GST, you will pay the excise duty, you will pay the employer contribution, right? You will pay the interest in the month of October. Remember or not? So this problem will arise. Every time the CA will file the audit report on 30th September last date, and after that you will file the ITR till 31st October, this 1 month gap will create problem. Yes? Yes, sir. So are you clear till here? Sure? 100%? Clear, sir. Now, what is Form 3CD? What is Form? It is an annexure. This everybody has to fill. Okay? Clear, sir. What is 3CA and 3CB? It is a report of 2-3 page, not very big. Okay? And what is 3CD? It is a very long report. Okay? Very long annexure. Okay? Yes, shall we start discussing this? Yes, this form prescribes the statement of particulars to be furnished under 44AB. For everybody, both corporate, non-corporate, everybody has to file. This has been designed to facilitate the determination of assessee's income from PGBP. Correct? Yes, sir. Now, as per para 19.3 of the guidance note on tax audit, so ICAI has given its own guidance note, as I have told you earlier. While furnishing the form 3CD, it is advisable to consider the following. So they have given some points which you have to keep it in mind. Okay? Yes, sir. Shall I read? Yes, sir. Now, every point, if you understand, then only say yes. Don't say yes just for the sake of saying yes, please. Okay? Yes, sir. The first one, if a particular item is covered in more than one clause, is it possible that one item is covered in more than one clause? Yes, you will come to know. You will come to know. Then you have to make cross reference. Okay? Yes, sir. Say suppose clause 21 also GST is mentioned. Clause 44 also GST is mentioned. So you have to make a cross reference at both the place. Okay? Yes, sir. Now, if there is any difference in opinion between whom? Difference in opinion between whom? and the then as an auditor you should state both the opinion. Okay,
Yes, sir.
state both the opinion. Okay,
Yes, sir.
shall I go ahead?
Yes, sir.
If a particular clause is not in form 3CD, is not applicable. Okay,
Not applicable.
it's not necessary na, that all 44 clauses are applicable. And most of the clauses, have you done tax audit?
What, sir?
The most of the clauses are not applicable only.
Yes, sir.
So you have to write not applicable. You cannot keep it empty. Okay,
Okay, sir.
you cannot.
Keep it empty.
You have to write not applicable. In computing the allowance or disallowance, in computing the,
Allowance or disallowance.
he should keep law applicable in the relevant year. He should keep what?
Law applicable in the 11th year.
Now see, this line tells that they are themselves not confident about themselves. Okay, see, which year tax audit you are doing?
I'm doing 23, 24.
You should follow which law?
I should follow Finance Act 23.
23, 24 law, correct?
Yes, sir.
Even though the form of audit may not be amended. So they are very confident that the form may not be amended sometime. So even if the form is not amended, but you have to follow the law. Okay. Is it clear?
Clear, sir.
Now, if the assessee has furnished prescribed particulars in parts or in
Piecemeal.
or relevant form is incomplete or assessee does not give information against all or any of the clauses. Now, how will I come to know that which point to be written? You will only give me the information, na? Client will give the information to the CA, na? Are CA is not Bhagwan, na? He'll come to know what mistakes you have done. CA will ask, you will give. CA will ask, you will give. I'll report. If you are not giving, then
Not report.
you have to qualify this in form 3CA, 3CB. Check. In your report, audit report, you have to
Qualify.
that I have not got sufficient information. Okay.
Okay, sir.
The information in form 3CD should be based on the books of accounts, record, documents, blah blah. That is very simple. Okay. Next, can you rely on certain judicial judgments? Please tell me.
You already said there, sir, support the judicial judgments. Yes, sir.
Are can you rely on judicial judgments or not? Please tell me now.
Yes, sir.
So you have to mention the fact that you have relied on judicial judgment. Okay.
Okay, sir.
And the last point is repeating again. It is if some clause is at more than one place, give cross reference. Okay.
Okay, sir.
So from here onwards, we are going to start our form 3CD 44 clauses. Shall we start?
Yes, sir.
We will see some simple clauses first, then we'll take a break.
Okay,
After
sir.
the break, we'll try to cover maximum today so that tomorrow very less portion is pending. Okay.
Yes, sir.
First clause. Palani, sit straight. Huh? Sit straight without any kind of support to your hands. Okay.
Yes, sir.
Shall I discuss?
Yes, sir.
Now, what is the first clause in the tax audit report? The first clause is the name of the assessee. What? Now, we are going to do the detailing of that. What are we going to do? Which name should be there? The name which is specified in the... You have to repeat with me. Repeat with me. Specified in the...
PAN.
Now, is it possible that your PAN name and your trade name is different?
Yes, sir.
Then you have to mention that also. Check.
Yes, sir.
Okay.
Okay, sir.
Listen to my minute detailing, please. Minute detailing has to be kept in mind. Shall I go ahead? Now, if the tax audit is in respect of a branch, is it possible that you are doing a branch audit, not the entire company audit? Is it possible?
Yes, sir.
It happens, especially in case of what? Banks and all, you do a particular branch audit only, not the entire company audit. Okay.
Okay, sir.
Then you have to mention the name of such branch along with the
Name of the assessee.
name of the assessee. Okay.
Pakka.
So what all things I said you?
Sir, first is name as per
Name as per PAN. Then
Second is if the trade name is different,
trade name is different, then give that different name also.
then branch tax.
Branch tax audit report. Mention the name of branch. Now, is it possible that your name is changed in the current year?
Possible, sir.
So, if there is a change in name of the assessee, if the change takes place during the previous year, name at the end of the year should be stated. Which name should be stated?
31st March should be stated.
31st March should be stated. However, if the change in the name has taken place after the close of financial year, is it possible that the change of name has happened in May, June, July, right? But before signing the audit report, but
Before signing the audit report.
should also be mentioned. Are you clear?
Pakka, sir.
In either case, fact of the name of change should be suitably clarified as an observation in the audit report. Okay. So if it is changed during the year, then also mention. If it is changed after the year, but before the audit signing, then also mention. Okay.
Okay, sir.
So this is your first clause. Over.
Yes, sir.
Shall we move ahead with the second one?
Yes, sir.
We will do some simple ones first of all. Okay.
Yes, sir.
Then we'll take a break. After the break, we'll do the big ones. Okay.
Yes, sir.
Second clause. What is the second clause?
Address clause.
The address to be mentioned should be same as communicated by the assessee to the income tax department. Okay.
Okay, sir.
Which address you should mention?
Same as communicated to the income tax.
Income tax department. If the tax audit is done in respect of branch, then the address of the branch or unit should also be given. Okay.
Okay, sir.
In case of company, the registered office of the company should be stated. In case of other assessee, the principal business has to be stated. Principal business place has to be stated in the audit report. Okay. From where the income tax office, as a chartered accountant, from where I will verify. Please tell me the address, whether it is correct or not. Assessee will give anything. Assessee will say Antilia, Cuff Parade, Mumbai.
Check with the GST number, sir.
Yes, they have to check it, verify the details on the income tax records portal. Can they check from portal? Are in the profile that is there na in the portal? Address is there or not?
Yes, sir.
Income tax login address is there.
Yes, sir.
If you log in the income tax, you will get the address of the assessee. Okay.
Yes, sir.
Now, if he finds assessee is giving some different address and portal is saying something different, then what shall he do?
Change address in the portal.
Why will he change? It is not my duty to do all those things. Always remember your duty. Huh? Don't become an accountant. Be a chartered accountant.
Yes, sir. Yes, sir.
If you find something wrong in the books, you will start to change or change in the books or what as an auditor? That is your responsibility or what?
No, sir.
Then what is your responsibility as a chartered accountant?
I have to say put an observation in tax.
You have to report it. That's it. Okay. Check it, please. So if there is a difference, then report. Okay.
Yes, sir.
The third clause, shall I read? Permanent account number, Aadhaar number. Okay, you have to mention what? An Aadhaar for individuals. Okay, because Aadhaar is only for individuals, not for others.
Yes, sir.
Now it may be noted that in case of e-filing format, PAN mandatory is field and Aadhaar is optional field. Aadhaar is not mandatory field to file. Okay.
Yes, sir.
Okay. Now we need to say clause 4, slightly bigger clause. Shall I say? Now in this clause, you become a chartered accountant in this chapter. Palani, you are deemed to be chartered accountant today. Okay.
Yes, sir.
What I said?
Yes, sir. Deemed to be chartered accountant.
You are deemed to be a chartered accountant today for the purpose of this chapter. Okay.
Yes, sir.
Okay. Now what am I supposed to mention here? Whether the assessee is liable to louder
Indirect tax.
pay indirect tax like excise duty, service tax, sales tax, goods and service tax, custom duty, etc. Is it possible the assessee is liable for all these things?
Yes, sir.
If yes, please furnish what?
Registration number.
GST number, any other identification number. Are you clear?
Pakka, sir.
So now on right hand side, they have done detailing. Okay.
Clear.
You will get the idea by reading the left hand side. Okay.
Clear.
But how to do that? How to do that practically? That is given on the right hand side. Okay.
Yes, sir.
Now the auditor is required to examine from appropriate evidence. What he is supposed to examine? The registration number. Is it possible that if multiple registration numbers are available, then all of them should be reported. Okay.
Okay, sir.
Like in GST, you have multiple registration, na? IGST, CGST, this, yeah, this, that. Array, for state purpose, you have to register for VAT for some product. Yes or no?
VAT, yes, sir.
Yes.
VAT and petrol
For some product, you have to register what? For excise, alcohol, etc. Right?
Yes, sir.
For
Yes, sir.
petrol, etc.
Yes, sir.
Petroleum product also there, na? Multiple registrations are there or not?
Yes, sir. Yes, sir.
You have to mention all of them. Okay.
Yes, sir.
The auditor should obtain the list of what? Indirect taxes applicable to the assessee. Okay.
Okay,
So
sir.
you should tell the assessee that give me the list of indirect taxes applicable to you. Okay. It is recommended that the tax auditor should obtain from the assessee list of indirect taxes applicable. And also a copy of what?
Registration certificate.
Now the things are getting repeated from year till year. Check. This much is repeated. See. Right?
Okay, sir.
Correct or not?
Correct, sir.
Now last paragraph. Where the indirect tax law does not require any registration. Is there any indirect tax law where registration is not required? Like custom law. I have told you in DT also custom law. In custom there is no registration.
Oh, yes, sir.
In custom there is.
No registration.
Then there has to be some number which you have to give, like import export code. Okay.
IC code. IC code.
IC code do you have or not?
Yes, sir. Sir.
Yes, then
sir.
give that. Okay. So what all things you learned out of this paragraph? Please tell me.
Sir, the registration number of any other indirect tax laws.
The registration number of all the indirect taxes law should be obtained from the assessee. Okay.
Yes, sir.
List of all the taxes applicable to the assessee should be obtained from the assessee. Correct?
Correct, sir.
Yes. From where you will verify all these things? You can verify from the portal also, right? It is not mentioned here, but you can verify, na? From GST portal, excise portal, right?
Yes, sir.
Now, next paragraph. Status. Status means what?
What type of person?
What type of person you are? Person is defined under section 231. Remember?
Remember, sir.
So you have to mention which type of person you are. Okay.
Sir.
So it should not be confused with residential status. Remember, residential status is different from person, right? Okay. And in case of proprietorship concern, the status should be quoted as what? Tell me. Individual. Okay. Then you have to mention previous year assessment year. Okay. And if your business is started in the current year, then your previous year will start from the date of commencement. Remember? Or if the business is started in July, then the previous year start from July, na, not April. Yes. You have to mention that. Okay. Then point number 8, you have to mention under which clause of 44 AB you are liable for tax audit. There will be 4 or 5 clauses are there now, more than 1 crore, more than 10 crore. When you file the audit report now, then they ask that, that option is asked.
Yes, sir.
Remember in which clause you are doing audit.
Yes, sir.
So you have to mention that clause here. Is it clear?
Pakka, sir.
So let us move on to the next clause now, clause 8A of tax audit report. Okay, shall we? So in this clause, there are a lot of sub clauses. Clause 8A, then 8B, etc. were there. Now they have removed it. Okay. Now in this clause, we have to report over here whether the assessee has opted certain special provisions. Right? Are we aware of all these special provisions? 115BA, 115 BAA, BAB, BAC, BAD, and now even one more section BAE for cooperative society. Remember, new section has come. So assessee is required to pay tax at the rate specified in the Annual Finance Act, correct? However, generally we pay tax as per what? As per the Finance Act rates, correct? Generally. But there are certain sections, right? Like these sections, which provides us what? To pay tax at what? As special rates, correct?
Income Tax Act.
Right, which is given under the Income Tax Act, but we have to forego certain deductions and exemptions, correct or not? Right? So the assessee can opt to pay the tax under the rates or the one made available by any of the aforesaid sections. Now, what is the duty of auditor? The duty of auditor is as follows. The auditor has to mention whether the assessee has obtained any of the aforesaid sections. Okay. What is the duty of the auditor? He has to mention if the assessee has opted for 115 BAA, BAB, BAC, BAD, etc., etc., etc. Okay. Right or not? Now, further, we know that from this year onwards, 115 BAC is applicable for all assessees like individual, HUF, AOP, BOI, artificial, juridical person. Remember, till last year, 115 BAC was only applicable to individual HUF. But now it is applicable to what? Even AOP, even BOI, even artificial juridical person can claim that benefit. Okay. Companies have which option? Companies have option to pay under 115 BAA, 115 BAB, right? Similarly, cooperative societies have which option? To pay tax under 115 BAD and to pay tax under 115 BAE, correct? Yes or no? Tell me please. The assessee has to examine the tax auditor has to examine the income tax return of the previous year to verify whether the option has been exercised by the assessee. Okay. Now, how do you exercise this option? See here, please. How do you exercise this option? You have to fill a form. I have told you in class. Remember? You have to fill a form before the due date of filing of return. Right or not? In the first year, though, you have to file the form now. If you want to opt. Except for 115 BAC, it is not a alternative regime now. Understand that. 115 BAC is now a default regime. But for getting the old regime, you have to opt it or not. Obviously, na. Array in 115 BAG, what is happening? BAC. The old regime has become what? Optional now. And the new regime has become compulsory now. Yes or no? So for that optional regime, you have to opt or not. So for that, you have to fill a form. All these forms have to be filled. Check. See. Yes. For listen now. See, that's the reason I see on the board. Don't see in your books, please, Palani. Underline. I'll give you this book, this chapter now separately. Why do you want to underline? See na here. That is more important, beta. Shall I? The doubt which you are raising for 115 BAC, everything is written here. Don't worry, it's very comprehensive. 115 BA, BAA, BAB, BAD. You have to fill these 4 forms. But for 115 BAC, you have to shift out of the default regime. Remember or not? Yes, and what is the default regime? The default regime is the new regime, correct or not? Okay, sir. Correct, sir. So for that, there is a separate form, Form 10 IEA, where you will now be paid tax as per what? As per the old regime, correct? Correct, sir. Array, in rest of the provision, you are filing form for new regime. In 115 BAC, you are filing form for the old regime because new regime is by default over there, correct or not? Now, in case the assessee has not filled the relevant form, then written representation can be taken from the management. Yes, you have to take a representation from the management na, that you have filled the form properly. Yes. Or if something which you are not able to check as an auditor, what do you do? Tell me. MR letter, take it from the management, right? Where reporting is made solely on the basis of assessee's representation. What? Reporting is made solely on what basis? Representation. Yes, you have not been able to check in detail. You have not been able to check in detail. So you are reporting only on the basis of what? Assessee's representation. Okay? Okay. So in that case, you have to mention that fact in the form 3CB or 3CA. Okay, sir. So you have to mention that where? In your original tax audit report. Okay? Form 3CA and 3CB is what? Tax audit report. And what is 3CD we are learning? That is annexure. Right. So is this clause, what we have learned in this clause? Tell me fast. Whether we are opting for all these special provisions or not. If yes, the auditor has to check it once. Okay. Auditor has to check whether the relevant form has been filled or not. Right?
The form is not there, get a
If the form is not, if you are not getting the form from the client, then take the representation from the client. Correct? And then you have to report that in the tax audit report also. Correct or not? Tell me fast. Now, let's move on to the part B. What is part A then? The part A has all the basic details if you see, right?
first 8 clause.
Most of the points in part A,
Name, address.
most of the points in part A are not going to change on a year-to-year basis. Yes or no?
Yes, sir.
Yes or no?
Yes, sir.
They are going to remain same only in most of the cases, right? Now let's move on to part B now. What is part B now? There are a lot of things in part B. Part B, clause 9A, then 9B. Shall I see the 9A first? What is 9A? If a firm or AOP indicate name or share of profit. So if you are a firm or AOP BOI, then you have to indicate what?
Name of the partner.
Name of the partners, profit sharing ratio. Check. Okay. Is it clear?
Yes, sir.
Now, apart from that, lot of things are there. This is the first thing. Now, where the partner is in a representative capacity, is it possible that you are a partner in representative? The actual partner is HUF. Who is the partner? I've given you all this example in class in partnership firm chapter.
Karta.
The actual partner is HUF, but Karta is talking on behalf of HUF. Okay.
Yes, sir.
So what is Karta? Karta is a
Individual.
representative partner. Or individual, I know that. Karta will be individual only. Karta is what?
Representative capacity.
A representative partner. So if the partner is a what kind of partner? A representative partner. Then you have to name the beneficial partner or the member. Who is the beneficial partner? The beneficial partner is what? HUF. Okay.
Yes,
Is it clear?
clear.
The detail of partner or member during the entire previous year has to be furnished. Okay. Now, from where the auditor will verify these things? From where?
Partnership detail.
Yes, it should be verified from the partnership deed or other documentary evidences. Okay.
Yes, sir.
The tax auditor should also obtain certified copies of the deeds. Okay. Documents, understanding, notice of changes, etc., including copies of acknowledgement, if any, evidences, evidencing filing of documents with the concerned authorities. Okay. In case of certain AOPs, now remember, in case of certain, do you remember there are two types of AOP where the share of the members are known and determinate
Ascertainable, non-ascertainable.
and not ascertainable. What about if the shares are
Not ascertainable.
not ascertainable? Then the relevant fact should be stated. The relevant fact should be what? Tell me. Stated in the tax audit report. Okay. Is it clear? Tell me now, Palani. Now, if there is a change in the partner, is there possibility there is a change in the partner
Yes, sir.
or change in PSR?
Yes, sir.
Then you have to mention that fact in the tax audit report. Is it clear? Is it clear?
Yes, sir. There was a point that the details of partners or members to be mentioned.
Right.
The previous, sir, that's year-end partners or number of partners will be here, sir.
All the partners detail has to be mentioned over there.
Who came, who went out, everything.
Every detail has to be there. Okay.
Yes, sir.
Shall I go ahead with the next clause? So clause 9 was with respect to partnership firm and their partners and their PSR. Correct?
Correct, sir.
Clause 10, shall we start? What is clause 10? The nature of business or profession has to be mentioned. What has to be mentioned?
Nature of business, trading,
Manufacturing, trading, service sector, etc., etc., etc. If more than one business, if
more than one business.
then every business nature nature has to be mentioned. Okay.
Okay, sir. There will be a row.
So,
1, 2, 3, 4.
you have to mention all the business separately. The principal line of the business is to be reported. If the associate has more than one business, then information has to be furnished for, repeat with me please.
All business.
That is the sector in which the business or profession falls, such as manufacturing, trading, commission agent, builder, contractor, professional, etc., etc. In case a person belongs to service sector, the nature of each type of service should be broadly stated. Okay.
Okay.
Further, they also have to mention the subsector of relating to the sector. Is it clear?
Okay, sir.
Subsector means in service, what kind of service? CA service, doctor service, this service, that service. Okay.
Sir, there will be an HSN code or SSC
There is a code. There will be code mentioned. See over here.
Oh.
Okay.
We have to sir. Okay, sir.
Accordingly, if nothing is getting fitted to your case, other case. Okay.
Okay, sir.
Is it clear?
Yes, sir.
Now, if there is any change in the nature of business, is it possible?
Yes, sir.
Is it possible that there is a change in the nature of your business? Please tell me fast. Yes. If there is any material change, what kind of change? Not small change. Not
Small change.
material change. Should be precisely set out. This change will include change from manufacturer to trader. Okay. Is it a material change?
Yes, sir.
As well as in change in principal line of business, like any addition, like any other, or other than temporary discontinuance of a particular line of business. Okay. So if there is a temporary suspension, that need not be reported. Okay. Is it clear?
Yes.
If your business is getting suspended for few months because of say employee strike or some government regulations, etc. Okay.
Okay, sir.
Then that need not be reported. Okay.
Yes, sir.
Now, from how will I come to know whether there is a change or not? Because I was not there with the SASI throughout the year, correct? As an auditor.
Correct, sir.
So, a review of business report or minutes of the meeting would enable the tax auditor to note the change. Yes?
Yes, sir.
The company's minute book will have na whether the business has changed or not during the current year. Please tell me.
Yes, sir. Yes, sir.
He may make necessary inquiries on this basis and seek information to determine. If need be, the tax auditor may get a declaration from the SSC. So, he can take what? A declaration from the SSC that there is a change or there is no change. Okay? If required. Okay?
Okay, sir.
In case of a business reorganization means what?
PPR, business process engineering, amalgamation.
Amalgamation, demerger. If there is a similar line of activity, if there is a
Similar line of activity.
no reference need to be made. Okay. So if the similar line of business are getting amalgamated, okay, no references. However, if a new line of activity emerges, the same has to be what? Come on. The same has to be reported over here. Okay. And last is even in case of hive off. Hive off means what? Demerger. The same may be reported. Okay.
Okay, sir.
So what all thing we learned from here?
Sir, what is the nature of business? If this change now, please let me know.
If there is a change in the nature of business, let me know. What about suspension? Suspension should we mention?
No, sir, not required.
No need to mention suspension. Okay. From where will we get the detail of all these things change?
Minutes of meeting.
From the business report, minutes of the meeting of the company. Okay. If you are not getting it, then take the management letter. Okay. Undertaking. Okay. Shall I go ahead?
Yes, sir.
Clause number 11A. Whether the books of accounts are prescribed under 44AA. If yes, list of books so prescribed. Okay. Shall I start?
Sales ledger, cash ledger.
Shall I start or not? Tell me now.
Yes,
Don't
sir.
you don't start, Palani. Let me start.
Yes, sir.
So, for your knowledge, I have taught you the definition of books of accounts in your syllabus, if you remember, in the last lectures. As per section 212A, books or books of accounts include what? Ledger, day book, cash book, account book, other books, whether in the written form or in the what? Electronic form or in the form of what? Digital form. Okay. Now, you will find out that there are some monetary limits which are prescribed by the law. Okay. You have to check that over here. Is it clear? So, we have done now monetary limits. We have done or not in PGBP? 1.5 lakh, it should exceed gross receipt, right?
Yes, sir. Yes, sir.
For specified, for notified profession, for others, 2 lakh 50 profit, 25 lakh turnover, right or not?
Sir.
So, you have to check all those things over here. Okay.
Yes, sir.
Now, the second point is the list of books of accounts maintained and the address at which the books are kept. Okay. So you have to mention what? Where the books are, which all books are maintained and where it is kept. Okay.
Yes, sir.
In case of the accounts are maintained in computer system. Okay. Mention the books of accounts are operated by such computer system. If it is maintained in the books, you can maintain in electronic form, right? Or you can maintain the books in electronic form now these days now. So you have to mention that fact also. You have to repeat Palani with me. If the books are not kept at one location, then please furnish the address of all such location. Okay.
Okay, sir.
Now shall I just do the detailing on the right hand side? Please tell me.
Sir.
So the address at which the books are kept are required to be mentioned. Okay.
Okay, sir.
Similarly, if it is kept at more than one location, each such location should be mentioned. Is it clear?
Pakka, sir.
Now, if the books are kept in what?
Computer system.
Then the details of address where the server is located or the principal place of business is to be given. What? What has to be given? The location of server or principal business. If the books are kept on cloud or online, is it possible now to keep on cloud or online like Google Drive, etc. is what? On cloud only, na?
Yes, sir.
Google Drive is cloud only, na? Most of you are watching lectures from cloud only, na now? Right or not? Now it is to be specified which books of accounts have been maintained in computer system and which are maintained in hard copy. So you have to specify that which all books are maintained in what? Electronic form. Which all books are maintained in what? Tell me. Hard copy. You have to mention that particular fact. Okay. Further, last thing, the tax auditor should obtain from assessee a complete list of books of accounts and other documents maintained by him, both financial and non-financial records. Okay. And make appropriate marks of identification to ensure the identification of the books and records produced from him for audit. You have to put some thappa and all, stamp and all that you have checked the books of accounts. Okay. Is it clear? So what all things you have learned in this point? The location where the books are kept. If there are more than one location, then mention all the location. If the books are kept at in electronic form, then the address of the server, where server is located, we want the address. Then if the books are kept in cloud or online, then you have to report that. Okay. Are you okay or not?
Okay, sir.
Shall I go ahead?
Yes, sir.
Now next. List of books of accounts and nature of relevant documents. The books of accounts examined would constitute what? The books of original entry and other books of accounts. In addition to the list of books of accounts examined, the extent of examination should also be reported. What do I mean by this? So you have to report over here to what extent you have examined. Have you examined 100%? Have you examined 50%? Have you examined 30%? Okay. Is it possible for you to examine everything? Please tell me.
Sir, we need not do audit, no, sir.
Arey, if you are doing tax audit now, is it possible for you to examine the entire book? Please tell me. No. So you have to mention what? Extent of examination. Okay. Whereas subclause B requires. Now see, what is the difference between this clause and the previous clause? Shall we see?
Yes, sir.
Louder.
Yes, sir.
Louder.
Yes, sir.
Yeah. Whereas subclause B requires what? Furnishing the list of books of accounts. Subclause C requires the tax auditor to state the list of books of accounts and the nature of relevant document that he has examined. Did you understand the difference between the two clauses?
Sir, what they gave and what they checked.
Yes. Subclause B talks about what all they gave. Subclause C talks about what you checked as an auditor. Is it clear? Now the list of books of accounts, blah blah. There may be a difference between the three lists. For example, the books of accounts may have been prescribed. What is the first list? What is clause A? Clause A talks about the prescribed list of books of accounts. Can there be a difference between the three clauses? There may be a difference. That's what it wants to tell you. Listen carefully. Yeah, that's not a child's play. You need to understand each and every clause very precisely. That's the reason we are doing so much detailing. There may be a difference between the three lists. For example, the books of accounts may have been prescribed, but all books might not have been maintained. Is it clear or not? Or the entire books might not have been what? Produced for examination. So these are three different clauses. Clause A talks about the list of books. Clause B talks about what you have maintained. Clause C talks about what you have checked. Are you clear or not? The tax auditor should exercise his professional judgment in order to arrive at what conclusion whether such a situation warrant any disclosure or qualification. Okay, please tell me. So if there is a need for some qualification, you can do it. Exercise your judgment, exercise your skill and check if the assessee is maintaining proper books or not. Clear or not?
Sir, which means in clause 3CD, I can type any disclosure, sir, or ask the client to disclose.
We will disclose. Why will client disclose? Reporting will be done by us only now.
Yes, sir.
Okay,
So this annexure will be prepared by us, sir, or the client, sir.
we will only prepare.
Yes, sir.
Is it clear? Shall I go ahead?
Yes, sir.
Louder, sir. Louder.
Yes, yes, sir.
Louder.
Yes, sir.
Louder. Still, my family members are not getting up. They should get up with your voice.
Yes, sir.
Hmm. Shall I go ahead? Pay attention. Next clause, clause 12. Pay absolute attention, please. It's a very important lecture. Are you declaring your profit on presumptive basis? Okay. Are you?
No. Declaring a profit.
If yes, indicate the amount. Indicate the amount of what? Profit. Okay.
Amount of profit.
And the relevant section. Okay.
Okay.
Are you clear?
Yes, sir.
Now these are all relevant sections, out of which this section is removed by the government of India. Okay. Rest all are there. Okay.
Yes, sir.
44 AF is not there in today's time.
Sir, ADA, sir, where is ADA?
ADA they have not mentioned in the report.
Okay, sir.
That is a government's mistake, not my mistake. Okay.
Okay, sir.
Are you clear?
Clear, sir.
Now in reality there are a lot of mistakes in the tax audit report. Let me tell you very clearly. If I minutely read the tax audit report, there are more than 10 to 15 mistakes in the report. I don't want to get into all those things. Okay.
Clear, sir.
Shall I read? So the first thing that we have to see over here, whether the profits and gains are taxable under what?
Presumptive basis.
If yes, mention the
Sir,
what?
profit. Profit.
Mention the profit. Okay.
Section number which it comes.
Express the mention of 44 ADA also. See, express mention of 44 ADA is not there in form 3CD. It's a mistake by the law, na?
Yes, sir.
They should mention this or not. Please tell me.
We have to mention it, sir.
But don't worry, there is a residuary clause. There is a
Very clause.
under which you can say any other relevant section. Okay.
Okay.
When you will select now, they will ask you 44 AD, ADA, 44 AD, 44 AE, 44 BB, BBB, BBBB, BBA, and then other section. Okay. Then you should click what?
Residuary clause. Any
Other section for 44 ADA. Are you clear? Therefore, the profits and gains should also be reported for what? Tell me. That also be mentioned. The amount has to be mentioned. Okay. Are you clear? The amount of profit has to be mentioned for them also. Now, the tax auditor is not required to indicate as to whether such amount correspond to amount assessable under the relevant section relating to presumptive income. As such, I am explaining. As such, the report requirement gets satisfied if the amount as per the profit and loss account is reported. Now, what do I mean by this sentence? Read.
indicate as to whether such amount corresponds to the amount accessible under the relevant section relating to presumptive taxation.
So you don't have to mention all those things whether it is corresponding to the relevant profit. Just mention whatever is given by the assessee, that much has to be reported. Okay. You don't have to go into the don't have to go into the checking of all those things. Okay, because you as a tax auditor, as a
Tax auditor.
is it your duty to check the presumptive income? Are you doing presumptive income audit? If an assessee has two business, yaar Palani, When this situation will arise? Listen to me first of all. When this situation will arise, when this clause will be relevant, you know? If I have only one business, if I have only, and that is under 44 AD, will this situation arise? Listen to my question now first. I have only one business
Okay, sir.
and that is covered under 44 AD. Will this situation arise? This situation will never arise, man. Because then 44, then tax audit is not applicable only for you. If I have only one business and that is in 4480, why will I do tax audit? 4480 assessees are liable for tax audit or what? When this situation will arise then? There are multiple businesses. One business is covered under tax audit, another is covered under presumptive income. Are you clear or not?
Yes.
Then for presumptive income, what are you supposed to do?
Presumptive income, I did not check.
You have to report. That's it. Are you doing that audit? Are you doing audit of that business? Have you checked the details of that business? No, na?
No, sir.
Just mention that much amount and get away from here. Okay?
Sir.
Understood or not? Here, Palani, I have to shout to explain you.
Yes, sir.
Clause 13. Shall we? 13A. You have to mention the method of accounting employed in the previous year. Okay? Which methods are allowed for PGBP and IFOS SSE? Cash mercantile regularly follow. Correct?
Yes, sir.
Now, hybrid system is not permitted. Okay?
Correct, sir.
Now, you can adopt two different methods for two different business. Is it clear?
Correct, sir.
One business cash, another business mercantile. That is allowed. But follow consistently. Is it clear? Tell me now loudly. Now, whether there is a change in any method of accounting, is it possible there is a change in the method of accounting? Please tell me.
Possible, sir.
Yes, if there is a change, that is to be reported. Okay?
Yes, sir.
The effect of increase or decrease in profit should also be stated. Okay? Is it clear? If there is a change, there might be impact on the profit and loss account or not. Please tell me. Report that. The tax auditor should apply reasonable check to the earlier year account to ascertain whether there is a change. Okay? So to find out the change, how will I come to know whether there is a change or not? For that, I have to see last year accounts or not. Tell me, please. So check the last year accounts and find out if there is a change. Okay? Or else take the written confirmation from the management. Okay? Are you clear or not? Now, listen carefully. A change in accounting policy does not amount to change. Okay? Accounting, if you are changing some accounting policy, it does not amount to change in method of accounting. For example, you are changing your method of valuation of stock. Is it possible? You are changing from FIFO method to weighted average. Okay.
Yes, sir.
So is it your change in accounting system? Please tell me.
No, sir.
No, that need not be reported. Okay. Are you clear?
Pakka, sir.
So what was clause B? Clause B was talking about what?
Any change in the method?
Now, if the answer to B is affirmative, affirmative means yes, then give the details of such change and the effect thereon on the P&L account. Is it clear? So if there is a change, give the effect. Okay, the details of the same, the impact on the profit and loss account. Okay.
Okay, sir.
Now, which impact has to be given only if there is some material change. Okay.
Yes, sir.
If there is some minor change, don't give all those impact over here. Is it clear?
Pakka, sir.
So if it is not possible to quantify the effect, then give the appropriate disclosure that we are not able to quantify the what change, how much change is there. Okay. Now, clause D of clause 13, subclause D, whether any adjustment is required to be made in profit and loss account as because of ICDS. Now, please tell me, because of ICDS, will there be any change in your profit? Please tell me. Because of ICDS, can there be change in the profit or not? ICDS will have an impact on your profit or not? Tell me now, please.
Yes, sir.
ICDS will have an impact now on your profit, like accounting standards have an impact on your profit, correct or not?
Yes, sir.
So we have to mention that particular thing over here. So we all know that in 4145 subsection 2 CBDT has prescribed ICDS, remember or not? Tell me.
Second point. Okay, sir.
Subsection 2, we have done 9 PGBP. Tell me.
Yes, sir.
Now, this clause. So at many places they are going to repeat the provisions. I am not going to be interested in the provisions again and again now. We have already done all the provisions. I am interested in the reporting part today. Are you clear? Now, this clause requires the auditor to state whether any adjustment is required to be made because of what? ICDS. Okay.
Okay, sir.
Then such adjustment is required to be stated what? Is required to be stated what? Separately. Are you clear? Now, the increase or decrease in the profit. The increase or
Profit.
should be reported in absolute terms. Absolute terms means in amount form. In the amounts. Okay. Not in percentages. Is it clear? Further, the tax auditor should obtain what? Draft computation of total income and disclosure required under ICDS. Okay. Is it clear? Now, for the purpose of clause D, the tax auditor should obtain draft computation. Okay, now it is getting repeated. Just cut this. This line is repeated here. Now, based on the information in the books of account, the tax auditor should consider whether any adjustment is required in the answer to F is affirmative or otherwise. Okay, if it is yes required or not required, you have to mention that. Okay, and then you have to mention that fact in your original tax audit report, Form 3CA, Form 3CB. Check. Is it clear?
Draft income computation, whatever.
Is it clear?
Sir, what fact, sir? That I have no adjustment in ICDS.
Yes, whether you have any adjustment or whether you don't have any adjustment, that has to be mentioned in the Form 3CB. Okay. Now, if the answer to D is affirmative, affirmative means what?
Yes.
What yes? What is the question in D?
So ICDS is there.
Whether there is an adjustment to the ICDS. Okay. Then you have to mention the required to quantify the amount of adjustment. What are you supposed to find out? Quantify the amount of adjustment against each ICDS. So there are a lot of ICDS, na 8 to 10 ICDS. Against each ICDS, you have to quantify separately. Are you able to understand what I am trying to say? Tell me please. You have to quantify for each and every ICDS separately. That is for borrowing cost, this much is the change. For government grant, this much is the change. For forex, this much is the change. For revenue recognition, this much is the change. Are you clear or not? Please tell me.
We also saw quantify. Previous also we saw quantify.
Are there we have to just mention the whether there is a change or not.
Okay,
We don't have to mention the amount over there. Here we are supposed to mention the amounts against each and every ICDS separately. Now, where we will refer, the tax auditor may refer the technical guide on ICDS by the ICAI. Okay, to get the knowledge of ICDS, where what you will refer? Technical guide issued by the ICAI. Okay. Are you clear? Technical guide, yes, that is a separate technical guide given by the institute on ICDS. Okay, to give further clarity to its members. Is it clear? Now, in the working paper of ICDS, checklist should be prepared and maintained along with the computation working for any increase or decrease in the income as per ICDS. Also, last year audit report should be reviewed to ascertain any effect in the current year. Okay. So, if you want to check the change, if you want to find out the change, you have to see the last year data or not. Please tell me. Now, last but not least, you have to make some disclosures for ICDS. Yes. Disclosures have to be made now. In case of accounting standards, also you give disclosures or not in notes to accounts. Tell me. What? Yes. This clause requires disclosure of a significant income computation and disclosure policy adopted by a person for computation of income chargeable under the PGBP. In this clause, if the information is furnished is based on the income computation furnished by the SSE, appropriate disclosure of this fact should be mentioned in Form 3CA, 3CB as the case may be. So this entire clause was about what? No, it was not about only ICDS, it is about method of accounting, change in method of accounting. Okay. Okay. So this clause, there is a difference in this clause and this clause, Palani. This clause talks about
Method of accounting. Change in method of accounting.
the change in method of accounting, and this clause talks about no change in not ICDS. Because of ICDS, what is the change in the profit? Okay. So these are two different things. Now clause 14. Shall we start? Clause 14. What is clause 14? In this clause A, you have to mention the method of closing stock valuation. Okay. Okay. And then you have to also mention the deviation, if any. Okay.
Okay, sir.
Deviation from the method prescribed under section 145A. Okay. So income tax law prescribes certain methods of stock valuation. If you are deviating from that, then you have to mention that. Okay.
Pakka, sir.
So first thing which you are supposed to ascertain over here is what? Tell me fast.
The method of valuation.
Method of valuation. Where there is a change in the basis of the determining the cost, market value, net realizable value, even though there is no change in the method of valuation. The auditor should understand the procedure followed by the assessee in taking the inventory of closing stock at the end of the year and valuation thereof. Therefore, the tax auditor should obtain the inventory of closing stock. So first of all, I have to take the details from the what client. I am not God that I will come to know how much is your closing stock. Yes or no? Tell me.
Pakka, sir.
Then I should review the method of the valuation. Okay. Then I will obtain from the assessee inventory valuation sheet. Okay. With quantitative details. With
Yes, sir.
they will give you quantitative details or not on 31st March. Tell me.
Yes, sir. Yes, sir.
And if there is any excess or some shortage, etc. Okay. You have to report that. Okay.
Shortage should be reported.
Is it clear or not?
Yes, sir.
Further, ascertain whether the method of valuation is such that the value of closing stock includes any kind of indirect tax. Is it possible that your closing stock includes a GST, it includes excise duty, it includes VAT, etc.? Yes? Tell me now fast.
Yes, sir.
Then you have to mention that fact also. Okay.
Yes, sir.
Is it clear? Louder.
Yes, sir.
Now we are going to start with such clauses which are directly related to your income tax provisions which we have learned in class. Okay.
Okay, sir.
So means it is directly related to certain sections which we have done in detail in class. Okay, like this one. Give the following particulars of capital asset converted into stock in trade. Remember or not? We are converting our. Tell me in a fast. We are converting our. So what all details they want? They want the description of capital asset. What they want?
Description of capital asset.
Means what kind of capital asset it is? Jewelry, building, land, right?
Yes, sir.
Date of acquisition they want. Okay.
Okay, sir.
Cost of acquisition it want. Okay.
Okay, sir.
And the amount at which it is converted. That is FMV on the date of conversion. Correct or not?
Yes, sir. Yes, sir.
Now, they have given the entire bhashan of the provision now. Entire bhashan is here. Section 247 defines the term transfer. Remember, transfer includes conversion of capital asset into stock in trade. Remember or not?
Remember, sir.
Yes, but there are certain non-taxable transfers also which are given in section 47, correct? Then they are saying that from here the tax audit reporting starts. The particulars with respect to under this to be stated under this clause should be furnished with respect to the previous year in which the capital asset have been converted into stock in trade. So which year data you are going to give? The year in which what? The year in which capital asset is converted into stock in trade, that year data has to be given. Is it clear? This clause does not require details regarding taxability. You are not supposed to give the details of what? How much is the amount of capital gains, indexation, all those things don't do. Just report few items which are mentioned over here. Okay. Like you have to first of all mention what? Tell me fast. See on the board. Whether it is share, security, land, plant, machinery, building. Okay.
Okay, sir.
Second, you have to mention the correct date on which it is converted. Is it clear? On which it is acquired. Okay. And then find out whether the asset is what? Long term, short term. You know now how to compute long term or short term in such cases.
Yes, sir. Yes, sir.
Till when period of holding should be counted?
For 9 to 2 years, sir.
Arey! I'm not asking in how much time land or building or plant or machinery or furniture becomes long term. I am asking from where till where you are supposed to count the period of holding. In case of conversion of capital asset into stock in trade.
From the original date of asset to the date of conversion.
Yes, you have to purchase, you have to count from the date of purchase till the date of conversion. Yes or no?
Yes, sir.
Now in this clause, the cost of acquisition is also to be mentioned. Okay? In case of depreciable asset, mention what? Tell me.
The WDV of the asset.
Yes. And the last, the valuation of stock in trade is to be examined with reference to what? AS2. Clear? You will do as per what? AS2 or NDS2. Correct or not?
Not as per ECS, sir.
No. Okay.
Okay, sir.
So is this clause clear? In this, you are supposed to give the description of these four things. Okay.
Yes, sir.
Louder, louder. Louder, man.
Sir,
Akka.
sir.
Shall I go ahead?
Sir.
Now, items, see, listen carefully. There are multiple points in this clause now. Items, amounts, not credited to P&L, being the item falling within the scope of 28. Should it be credited or not? Please tell me.
Yes, sir.
Louder, louder.
It should be credited, sir.
If an item is coming under section 28, should it be credited to P&L or not?
It's not yes, sir.
Yes, it should be. Now you are not crediting. Then mention that fact. Okay.
Yes, sir.
Let the government come to know that assessee is hiding these incomes. They are not crediting these incomes to what? Tell me. P&L. Now, under this clause, various amounts falling within the scope of 28 which are not credited to P&L are to be stated. Okay. What if it is already credited to P&L? Should I mention that also? No. Okay. Like for example, benefit or perquisite. Benefit or perquisite received from someone. Should it be credited to P&L or not? Please tell me. Now, if it is not credited to P&L, then it has to be reported. Clear? Tell me faster, zara, louder. Similarly, duty drawback, refund of custom, refund of sales tax, refund of service tax, refund of GST, etc. are okay. That has to be mentioned. If it is not credited to what? See, this line is very important. This is for all the clauses. A, B, C, D. Right or not? Tell me fast. Now listen carefully. So in this clause, what are you going to mention? Please tell me.
The items which are not related to P&L relating to refund of custom duty.
Yes. Now whether there is a refund or not, how will I come to know?
Refund or not, I come to know from P&L, sir.
Not PNL. PNL, they are not hiding now. Palani, I'll kill you. They are not showing in PNL. That is the reason we have come here to report. If it is there in the PNL, then the reporting is not required only.
Shipping bill, sir. Shipping bill, GST refund, GST portal.
Yes, you have to examine all the portals. Okay. And you have to find out whether there is any refund or claim which has been admitted by the authorities. Okay. The word admitted by the authority would mean admitted by the authority within the relevant previous year. Okay. So in 23-24, whatever refund is admitted by the GST department, you have to mention all of them. Okay.
Okay, sir.
Credit or claims which have been admitted as due after the relevant previous years need not be reported here. Are you clear? So that this is important. If something is admitted when? After the relevant previous year, if something is admitted by GST department, that need not be reported here. Are you clear? Now, if the assessee is following what? Cash system of accounting, it should be clearly reported by the auditor that acceptance of claim during the relevant year without actual receipts has no significance. It's very clear, right? Because in case of cash accounting, you'll only report what is received as actual refund. Yes, and not which is admitted by the. Now, there are two steps. See, first, the department admit that there is a refund. Okay. And then they give you refund. Okay. So in case of accrual system, if it is admitted, you have to mention that. Okay. In case of cash system, when it is received, you have to mention that. Okay.
Yes, sir.
So this is what it has been mentioned over here. Similarly, escalation clause accepted during the year. Okay. Mainly for construction people. Yes.
Yes, sir.
Don't forget one thing. What are we learning? We are learning point 16. What does 16 says?
Amounts not credited to P&L account.
Not credited to P&L account. Escalation clause accepted during the previous year. So all those escalations which are what?
Accepted during the previous
But
year.
not credited to P&L are to be mentioned here. Okay. Escalation claims would normally arise to pursuant to contracts, including contracts entered into earlier year, if so permitted by the contract. Only those claims to which the other party has what? Tell me.
Signified
Unconditional acceptance. It is very easy for me to escalate anything, but other party should agree na to give me that money. Tell me.
Yes, sir.
Arey, I will escalate the price by any amount, but other party should agree na that I will give you this much price for the contract. Tell me.
Yes, sir. Yes, sir.
So what has to be reported? Only if there is an unconditional acceptance. Yes? Okay. Mere making of claim by the associate, a claim under negotiation or claim which are sub judice cannot be constitute claims. Okay. So debatable items will not come under escalation clause. Okay. Only which are what? Accepted by the authorities. Okay. Other party. Okay. Now, any other item of income. Any other item income means what? Any other item of income? Anything can come. Do you remember that employee contribution is also income in the hands of employer? Are yes or no? So you have to mention that fact over here. Okay. Are you clear? Now, any other capital receipt. Now, can capital receipt also become your income? Some capital receipts, not all, right? Some capital receipts are your income or not? Tell me, please. Like non-compete fees, like compensation received for termination or modification of a contract. Remember?
Yes, sir.
So the auditor should use his professional expertise first of all to find out what is capital, what is revenue. Okay. The capital receipts are generally not credited to P&L. Correct or not? Yes.
Yes, sir.
Capital receipts are generally not your income. Yes.
Like this, books of account, sir.
No. Even in books of accounts, it is not credited. Are generally not credited to P&L. Okay. So auditor should take enough care to find out whether it is capital or not. Okay.
Okay, sir.
He should check the books of accounts, bank account, etc. He should obtain a management representation, etc. to identify whether it is what? Tell me.
It is received or
Whether it is a capital receipt or whether it is a revenue receipt. Is it clear? Please tell me. So this is the clause which talks about certain items which are
not credited to P&L.
not credited to P&L, but they are liable for tax. Yes?
Yes, sir.
Now coming to the next point. Question number 17. Clause number 17. What is this clause? Now this clause is about 50C and 43CA. We all are aware of what is 50C and what is 43CA. Remember or not?
The stamp duty value or
Yes, you have to compare the stamp duty value with your what?
fair market value.
So what all data is required? If you are transferring for less than stamp duty value, then these sections are applicable, correct? Less than how much? Less than 110%. Remember or not?
10% cap.
So what all up to 10% it is allowed, not difference, correct?
Yes, sir. Yes, sir.
Above 10% it is not allowed. So what all details they want? They want the detail of the property, okay? The consideration, okay? The stamp duty value they want, okay?
Yes, sir.
So the auditor, what are you supposed to do as an auditor? You have to furnish the details of the nature of the property, okay? Whether it is land, building along with the address. Is it clear?
Yes, sir.
Then you have to list down all the properties transferred by the assessee during the year, okay? Tell me now fast.
Okay, sir. Okay, sir.
And then you have to mention the tax auditor has to furnish the amount of consideration received or accrued during the relevant previous year of the audit in respect of blah blah blah. He has to take a report from where? He has to should obtain from the assessee relevant information with regard to the sale of land and building. If the property is not registered, is it possible the property is not registered? I have told you, na, there are unregistered property also. On them also 50C is applicable. Remember or not? So you have to take an valuation from third party, like a lawyer, etc., etc. Check. Is it clear? And in exceptional cases where the auditor is not able to obtain, he may state the same through what? Tax audit report. Okay. So if the assessee has not maintained proper documentation for valuation, okay, then you have to mention that fact in your tax audit report. Is it clear or not? Please tell me. Shall I go ahead? Louder, Zara, louder. Louder. Now, clause 18, very important clause. Okay, which is with respect to what? Fixed assets. Shall I? Now, with respect to this law, the tax auditor has to examine the following. First of all, classification of asset. Is it necessary to classify the asset? Fixed asset. Classification is required or not? Block of asset classification is required or not? Tell me now, please.
Required, sir.
Classification of the asset. Classification thereof to a block. Okay. Actual asset, actual cost or WDV has to be determined by the tax auditor. Yes or no?
Determined by the tax auditor. Okay.
He has to mention now all those things, right or not? Then you have to mention the date of acquisition, date on which it is put to use, correct or not? Applicable rate of depreciation, what all additions you have made, what all deductions you have made, correct? Adjustment on account of sale, etc., salvage, etc., scrap, insurance, etc. All those things have to be mentioned or not? Tell me, please. Now we are going to talk about all of them one by one. Okay, all these points one by one. Okay, shall I?
Sir, what is the main heading, sir?
Main heading is this.
Okay, sir.
This is the main heading. Okay. The first thing, the depreciation of asset or block of asset. Why it is written asset or block of assets?
There you said no class A or class B.
SLM or WDV.
Oh,
Correct or not?
oh, yes, sir.
And some people follow SM also, SLM also, na power generating people.
Power generation, sir.
Now, for the purpose of determining rate. So, for determining rate, what is important? Classification of asset is important or not to determine the rate? Tell me.
Yes, sir.
Array, to find out the rate of an asset, do you need to classify the asset or not first into plant, machinery, building, furniture, whatever it is? The tax auditor should ensure the classification as made by the assessee in consonance with what? The legal principle. Assessee will say anything, but we as an auditor, we have to see what? The legal principle. We can see judicial pronouncements also, past assessment history also. Yes? Tell me now.
Yes, sir.
Can I see a case law for determining the tax rates or not?
For classification of assets, sir.
Yes, I can see. Can I see the past history or not of assessment? This asset was depreciated at what rate in earlier years? Please tell me.
Yes, sir.
Tell me now.
Yes, sir.
Now, second, rates of depreciation from where we will get. I have told you in the class, for rates, you have to follow income tax rules. Remember or not? Please tell me. You can also follow the department circulars, department's judicial decisions. Yes. For rates, you can follow department circular or not. CBDT might clarify that this will be taxable at this much rate. Correct?
Yes, sir.
This may be depreciable at this much rate. Or you can follow the case laws also. Okay. Under subclause 8 to be information in respect of description of asset, block of classifiable and rate of depreciation are to be stated. This will include information about existing assets. In respect of existing asset, the computation of WDV would involve stating the opening WDV. The tax auditor should ensure the opening block of assets matches with the income tax return filed. Yes, should we check this or not? Opening block of assets should match with the last year closing or not? Please tell me. So you should match that with what? Last year income tax return, compare the opening WDV of the current year. Are you clear? Please tell me fast.
Income tax returns are not in tax auditor.
No, income tax returns. Okay.
Yes, sir.
Now, actual cost. What is actual cost? Is the term actual cost defined under the income tax law? Yes, it is defined. For determining actual cost, now all provisions are there. This is all what we have done earlier in the chapter. Okay. The tax, as an auditor, you have to check all those things practically. Okay. The tax auditor has to be guided by the legal provision. Since determination of actual cost has got accounting implication, he can rely on the relevant accounting standard also, guidance notes also. Okay. Is it clear? Now, depreciation is allowable on intangible assets also. Is it allowed? Tell me faster, yeah. Is depreciation allowable on intangible assets also under income tax law?
Sir, 25%.
Yes, but not. Goodwill is not qualified from 1/4/2021. Remember or not? Right?
Right.
Now, we need to mention the addition or deduction in the asset during the year. Shall we?
Yes, sir.
Now, there are a lot of provisions which we have done are going to be repeated here. First of all, if you purchase asset in foreign currency, remember, then you have to see the implication of 43A. The payment, the gain or loss on foreign currency has to be adjusted on the date of payment in the WDV of the asset. Remember or not?
Remember, sir.
We have done this provision in the class. Tell me with example. If I import an asset and if I borrow that asset, import that asset, and if there is a foreign currency loan on that, then when shall I adjust the forex gain or loss? Where should I adjust? On the date of payment, I should adjust in the WDV of the asset. This is what it wants to say. Check from year till year. Okay. Similarly, if there is an asset which is not put to use and you have taken a loan, shall I capitalize that or not? Please tell me. If I have taken a loan for buying an asset, yaar, why are you thinking so much, yaar? I have to capitalize now. All these clauses we have done or not in class? 36(1)(3), explanation 8 to 43(1). Tell me. Then, if there is any subsidy, grant or reimbursement with respect to an asset, shall I reduce that from the asset or not? Please tell me. See this. Tell me. Similarly, if I purchase any asset and if I make the payment of more than 10,000 rupees by other than account pay, check account pay, draft, etc., then that shall be ignored or not for the purpose of actual cost. Tell me. More than 10,000 rupees you are paying in cash, in bearer check. Allowed or not? Allowed or not? Not allowed. You should not take in the actual cost. Remember or not? Then, if there is some GST input credit which we have already taken, shall I deduct that much from the cost or not? Please tell me. I have taken a GST credit on an asset, yaar. So that much amount, what shall I do? Reduce from the cost. Remember or not? So whatever provision we have done, that is getting repeated over here. Yes or no? Now, the addition or deduction during the year have to be reported. How much we have sold, how much you have purchased. Okay. The date also has to be reported along with the dates you have to mention. Okay. What?
We already reported no adjustments, disposal.
Where? Where?
This one, particulars of this one, ATT.
Yaar, you are doing detailing of that clause only.
Oh, yes, sir.
Already reported. This is reporting or what? This is just a heading. Shall I go ahead? Then as an auditor, what else? What else you are supposed to do? You are supposed to ascertain the date of put to use. Necessary or not? Date of put to use.
Whatever he says, you use. Okay, sir.
Whatever he will say, you will accept. How the hell? You can do that? As an auditor, you will do that only. Whatever he will say, you will accept. You have to do research. I'm telling you now how you will come to know. Wait na. You have to go and check the production records of the SSE. The SSE is saying the SSE is saying that I am using from 1st April. The production started in July. How the hell you are using from 1st April? You don't have apply. You cannot apply your mind or what as an auditor? Huh? Palani? What is the SSE saying?
He said production will start from 1st July, but I put the machine to use from 1st April.
How is it possible?
No, not 1st, sir.
Then you cannot apply your mind or what? Whatever SSE will say, you will accept. When the asset has been put to you, the tax auditor should call for the basic record like production record, installation details, excise record, service tax, goods and service tax, record relating to power connection. Power connection tell you or not? Tell me as an auditor. This is what auditor has to do. Copy paste is not the work of auditor. A power connection will help you to identify or not whether the machine was in use or not. In the absence of any specific documentation, take a representation from management. Check. Okay.
Okay, sir.
And last but not least, you are supposed to determine what depreciation and the WDV. Okay.
Okay, sir.
The amount of depreciation in the WDV at the year end is calculated by taking the relevant figure at the beginning of the year plus addition and deletion. Is it clear? How will you compute the depreciation and WDV? By taking opening plus purchase minus sale only, na?
Yes, sir.
The WDV at the beginning shall be checked properly. Okay.
Yes, sir.
And if the assessee is claiming any depreciation based on any judgment, okay?
Judgment. Okay, sir. Judicial pronouncement.
If the assessee is claiming the depreciation based on the judgment of Mysore Minerals Limited. Remember Mysore Minerals Limited? Beneficial owner is the owner and not the legal owner. Remember or not?
Remember, sir.
Then you have to mention that fact over here. That a judgment has been followed by the assessee. Okay? Is it clear?
Clear.
Clause 19. Shall I go ahead?
Ready.
Now in this clause there are so many sections. See.
So
Which all
many sections.
sections are there? Check. 33AB. What is 33AB?
Tea, coffee,
Tea, coffee, rubber. 33ABA.
no, this is not.
Site Restoration Fund.
Sir.
3511 Scientific Research Revenue Expense. 3512 Donation to Scientific Research. 3512A Donation to Scientific Research Companies. 3513 Social Science Statistical Research. 3514 Capital Expenditure of Scientific Research. 352AA. I am telling now everything. You listen to me. We have done all of them earlier. 352AA IIT National Laboratory Donation. 352AB in-house research by Indian companies. By companies, sorry, not Indian companies. 35ABB telecom license. 35AD investment link deduction. 35CCA payment to certain association and institutions for rural development. 35CCC expenditure on agriculture extension project. 35CCD expenditure on skill development. 35D preliminary expense. 35DD VRS amalgamation expense, sorry. 35DDA VRS. 35E taxation of mines. All of them are done with our class. Yes. Now, in case the assessee has obtained what?
Separate audit report.
There might be required that certain separate audit reports are required. Yes, yes. For example, in 35AD, whether the deduction is claimed properly or not. Okay. Scientific research is claimed properly or not.
So you are telling about certification, sir.
Yes. In case the assessee has obtained a separate audit report for claiming deduction under any of these sections, he must make a reference to that report. Okay. The tax auditor should indicate the amount debited to P&L and the amount which is admissible in accordance with the law. Okay.
Yes, sir.
The amount not debited to the P&L but admissible should also be reported. Okay. There are two types of amounts. One is debited to P&L and which is allowed. One is not debited to P&L and allowed. Like example, building. Is building debited to P&L? Tell me. Purchase of building is debited to P&L or what? Still it is allowed as a 100% deduction or not in many sections. Tell me.
Correct, sir. Correct.
A deposit to NABARD is debited to P&L or what? Deposit to NABARD. Still it is allowed as a deduction or not under PGBP. You have to mention all those facts. Okay. For example, 33AB allowed deduction in respect of amount deposited, which are not routed through P&L, right? The tax auditor should verify the claim of deduction by examining whether the assessee is fulfilling all the conditions or not. Okay, because in all these sections there are lot of what? Conditions which you have to verify. Okay. The auditor should also ensure the eligibility of the expenditure or payment for deduction, including approval from central government in certain cases. Okay. If any judicial pronouncement has been followed, that has to be what? Please tell me. That has to be mentioned. Okay, that has to be mentioned. Okay. So let's move on to the next clause, that is clause 20. Shall we? Are you ready with full energy? So next clause 28 talks about bonus or commission to employees. Is it allowed as a deduction or not? Please tell me. Bonus or commission to employees. Please tell me. So first of all, here they have mentioned the provision. Check it please. The entire provision is mentioned over here. And then they have mentioned what? In this clause, as an auditor, you have to obtain the list of all the eligible employees. And you also have to find out the basis of calculation of the bonus. On what basis the company has calculated what? Tell me. The bonus to employees. Is it clear? Please tell me. Louder. Now this clause talks about the details of the contribution received from employees. Okay. Now what has to be done? Do you remember that if you receive any contribution from employee, first it becomes your income. Remember 22410. And then if you pay within the funds due date, statutory funds due date, which is 15th of the following month. Remember? Then you have to mention all those things. Okay. And if there is any extension, can there be any extension by the respective law? Instead of 15, they have extended to 20th. Is it possible? So you have to mention that. Okay. Is it clear? So under this clause, this can be taken into consideration for determining the due date of payment. Under this clause, the detail regarding the nature of fund, what kind of fund it is, ESIC fund, okay, provident fund, clear or not? Then the details of the amount deducted, how much deducted, due date is what, actual date is what, okay. If you have filed tax audit report, you might be knowing that you have to make a columnar annexure, yes. And monthly detail you have to give from April to March, okay. Right. Everything has to be given monthly. Now, under this clause, requirement is only for what? Disclosure of amount. Only is for what? And the tax auditor is not expected to express his opinion about allowability or otherwise. Okay, we are not supposed to give unnecessary bachan that whether it is allowed or whether it is not allowed. We are not asking, they are not asking us all those things. They are just asking us the details, give that and get away. Okay. Are you clear? The auditor should verify what the employment or contract details. Okay. The auditor should get a list of various contribution receipts recovered from the employees. What all things you are recovering from the employees? Okay. Take a list from the company. You are recovering ESIC, you are recovering PF, you are recovering gratuity, what all things, list down, okay? And then verify from the agreement, verify from the ledger account, review that, and if it is voluminous, too much transaction, because practically it is not possible now. If there are 50,000 employees in your company, can I check for each and every employee? Please tell me. Then do test check. Then do what? Tell me. Test check. Is it clear? So this clause is mainly about what? Is mainly about employees contribution. Employees contribution. Now clause 21 talks about what? Check. In 21 there are multiple clauses now. 21A, B, okay, C, D, E, F. Are you clear? G, H, I, C. 21 is a big clause. Shall I start?
Yes, sir.
But this is entirely PGPP. Don't worry. If you have done PGPP, this is very simple for us. Shall I start?
Yes, sir.
Now we all know that capital expenditure is not allowable. Correct or not?
Yes, sir.
Capital expenditures are, don't waste time. You are wasting, you are wasting time, and that is delaying our batch.
Not allowed.
Capital expenditure is
Not allowed.
not allowed unless specifically provided. If it is specifically provided, is it allowed?
Yes, sir.
Like example. There are so many capital expenditure which are allowed. Yaar, give me one or two example na.
Sir, the advance given for land is forfeited.
Expenditure I am saying, so you are saying advance share given for land are forfeited. There are so many capital expenditure we have done in PGPP na. Tell me na. Some of them which are allowed yaar. 3580 scientific, so many are there yaar. Palani.
Yes, sir.
I ask you ABCD, you start in Tamil. I ask you Tamil, you start in English. You are into a different zone only. When I am asking you something, you are giving some other answers only. Capital expenditure is not allowable unless specifically provided. The details of the capital expenditure, if debited to PNL, should be maintained. Okay. It should be reported in the e-filing portal. Is it clear? Louder.
Yes, sir.
Personal expenses are not allowable. Correct?
Yes, sir.
Yes.
Yes, sir.
Now, as per the Companies Act also, specifically requires auditor to inquire whether any personal expenses has been charged to revenue account. Okay.
Okay, sir.
Even Companies Act tells that to report personal expenses.
Clear, sir.
So if it is there, then report. Is it clear?
Clear, sir.
Similarly, advertisement in a brochure of a political party. Do you remember? Not allowed. Correct or not?
Yes, sir.
That also should be reported. Is it clear?
Yes, sir.
But that can be claimed as a deduction under 80 GGB GGC. Remember or not?
Super, sir.
We have done all these adjustments in class lot of times, right? Now the amount of payment to clubs, etc. If you are making some payment to clubs, etc. Okay, that should be mentioned over here. Is it clear?
Clear.
If they are personal in nature, that has to be referred earlier also. Okay.
Yes, sir.
Then penalty and fine should also be mentioned over here. Which all things?
Penalty and fine also.
Obtain a letter from the management in writing. Details of all the payment by way of penalty or fine. Okay. But the fine covers two types of fine we have done in class. One is for breaking a law. One is for breaking a contract. Remember?
Sir.
One is for violation law. One is for contractual breach. Correct or not?
Sir.
Now what is prohibited is what? What is prohibited? Tell me. Which law, which penalty is prohibited?
Penal in nature is prohibited.
Penal in nature is prohibited. Compensatory is allowed. Check.
That is contract.
So whatever we have done so far in PGBP, it is getting repeated here. Okay.
Yes, sir.
Right or not?
Right, sir.
So here in this question, it is saying that there is some delay in supplying the goods, or you have to pay some interest. Okay.
Sir.
So whether this is required to be reported, please tell me.
Delay in supplying the goods.
There is some delay in supplying the goods. So I have to pay some interest to you. Contractual breach. Is it supposed to be reported?
Yes, sir.
Not reported. Compensatory penalty you will not report. Something which is allowed, why will you report that? Why will you report something which is allowed? Like that, so then report everything. Now, what is then in the books of account? Report everything then. What is the objective of tax audit? Palani, don't misunderstand the entire concept of tax audit. What is the objective of tax audit? Why are we doing tax audit?
Whatever the expenses in the books of accounts is correctly allowed or not allowed, that we have to check, sir. Correctly.
Government is interested in what? Government is interested in your allowed portion or not allowed portion. CBDT is interested in what is allowed or what? So what you are going to, which kind of penalties you are going to report here? Penal penalties, which are breaking law. For contractual obligation, if you are paying any penalty, that will not be reported here. Okay. Are you clear or not? Please tell me. Now, similarly here, 40A. What is 40A? TDS disallowance 100%, 30%. Remember?
Yes, sir.
40A, 1A. Remember or not? So this is the entire provision they have repeated over here. This is the provision. Okay. Now, what is the responsibility as a?
Responsibility as a tax auditor.
What is your responsibility? The tax auditor is required to report the details of the payment on which tax is what?
Not deducted.
Report if tax is not deducted, or if the tax is
Not paid.
not paid. You have to report it. Is it clear?
Okay, sir.
Right or not? Shall I go ahead?
Yes, sir.
The second clause, 48.2b. 48.2b, I have to explain you once again because you don't remember anything. Remember, there were state government companies which was controlled by state government. They used to take out the money from their company in the form of royalty, license fee, service charge instead of dividends. Instead of dividends, remember? No, there was no case law on it. Please, there was nothing on it. Listen na me. If you don't know that, listen to me. Don't know that, don't say anything in between. Don't mix up unnecessary concepts, na Palani. Listen to me na if you don't remember. There is a Maharashtra state government and there is a Maharashtra state government undertaking. So Maharashtra state government will pay what? Listen to me. There is a Maharashtra state government, there is a Maharashtra state government undertaking. So Maharashtra state government has shares. I am not interested in explaining the provision again and again, Yar Palani. But you don't remember, so I have to explain it. So government is having shares in what?
The public sector company.
Its own company. Its own company. State government undertaking it is. Remember or not? So the state government undertaking will pay dividends or not? So the dividends are allowed as a deduction or not? Allowed.
Sir, dividends which I pay is not.
Are dividends in general are allowed as a deduction or not? If you don't remember this, then I'm leaving the class right now itself. Is dividend allowed as a deduction or what?
The dividend is an appropriation of profit.
Are allowed as a deduction or not? Tell me, why are you giving me bhashan on that? It's an appropriation, it is that, it is that. I'm just asking you a simple question in yes or no. Is it allowed or not? It is appropriate. Why do you want to extend the discussion unnecessarily? Something which we have discussed so many times earlier. Tell me, is it allowed as a deduction or not?
No, sir.
Not allowed. So instead of giving dividends, they are paying royalty, they are paying service charge, service fee. Remember or not? I have explained you with logic in the class. Remember or not? Tell me, please. So you have to mention that all. That's what. Check it. Balani, revise now, please. If you don't remember, PGBP also at this point of time, very dangerous situation. It has to be done on the tip of your finger. Shall I go ahead? Then salary paid outside India to non-resident has to be reported here. If TDS is not deducted, not paid. Okay. Then, do you remember this? Don't remember anything. Listen to me. Employer paying. Employer, listen to me at least. Then don't interfere in between. Employer paying tax on non-monetary perquisites of the employees. Remember? You are an employee. I am paying tax on your perquisites. Then that tax is disallowed. Remember or not? You have to mention that fact. Report all these things. Okay. As an auditor, what shall I do? You should examine the TDS returns. What shall I examine? TDS returns. And in case where the assessee submits any sum debited to P&L account is not inadmissible, the tax auditor may exercise his judgment in the light of the applicable laws and report accordingly. So if the assessee says that no, it is not disallowed, it is not disallowed, it is allowed, it is allowed, it is allowed, apply your mind as an auditor. Don't just listen to assessee. Assessee is a hopeless creature. Okay, apply your mind, apply your skill, knowledge. If you have relied on any judicial judgment, okay, then you have to mention that particular thing. Okay, if the case is voluminous, you cannot check each and everything, then do what? Tell me fast.
Test check.
Test check. Is it clear?
Yes, sir.
Now, next one is about 40B and 40BA. What is 40B and 40BA?
Sir, related person to payment.
Related person. Don't remember the provision also. Related person. Partnership firm provision. What Palani? The auditor is the tax or don't laugh. I'll kill you. The tax auditor is required to state what? How much is inadmissible amount? How much amount is what? Not allowed. In 40B, there is some limit or not? There is some limit or not in 40B? 12% for interest. For remuneration, what is the limit? How much? Up to 3,90,000. Okay. Listen to me. Are you listening or not to each and every point? Please tell me. Sure.
Yes, sir.
The tax auditor is required to state the inadmissible amount under 40BA, 40BA. Okay. Inadmissible amount means what?
Not allowed.
Not allowed. You have to mention that. Okay. The remuneration has to be determined as per 40B, right?
Yes, sir.
The auditor should obtain from assessee a detailed working of the inadmissible remuneration. Okay.
Yes, sir.
The auditor also has to verify the agreement because it has to be written in the agreement. Remember or not? The remuneration should be authorized by deed. Remember?
Yes, sir.
The interest should be authorized by, tell me please fast. Deed. Then the interest which is after the period relating to the deed, then it is not allowed. Remember or not?
Yes,
If you don't remember, tell me. Don't say yes sir unnecessarily. I'll ask you. What do you understand with this paragraph?
sir, the partnership deed will specify the time limit. If it exceeds if it is more after the time limit, the interest will be disallowed.
No, I didn't understand. What are you trying to explain?
So the partnership deed will say up to this period I will pay interest.
No, it is not talking about that. If you don't understand, then tell me please. Don't say just yes sir, yes sir, yes sir. It doesn't make sense to say yes sir, if you don't understand. The entire purpose of sitting for the lecture will be defeated, Palani. What it is then? Please tell me. It is talking about the remuneration and interest has to be prospective. It cannot be retrospective. Read paragraph.
Clear, sir.
Now, in case of AOP BOI, remember for AOP BOI, 40BA specifically disallow all kind of remuneration and interest. Remember or not? For AOP BOI, nothing is allowed. For partnership firm, it is allowed. For AOP BOI, it is. Now, in order to determine the amount of inadmissible amount, the tax auditor should obtain the computation from whom? Tell me. Assessee will compute the amount of what? Book profit. Okay. Now, coming to your favorite section 48.3. Shall I start? 48.3, remember or not?
Exceeding 10,000 if I pay.
Yes. Now, this entire section is now, this is the provision now. 10,000, 35,000, blah, 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 blah. Is it clear?
Yes, sir.
Now, the list should be verified. You also have to see the Rule 6DD exceptions. Yes? Right. Now, practically, it may not be possible to verify each payment. Correct or not? Okay?
Yes, sir.
So, obtain a suitable certificate from the assessee to the effect. Okay?
Yes, sir.
Now, where the reporting has been done on the basis of what? You are reporting on the basis of what?
Certificate of that.
Certificate. You are saying that it is not practically possible for me to check 1000 transactions, so I am taking a report. I am taking a certificate from assessee. Then mention that particular thing in form 3CA, 3CB. Is it clear?
Please, sir.
Okay. And then the auditor has to put this disclosure. Check. What is the disclosure? See, read loudly.
It is not possible for me or us to verify whether payments in excess of 10,000 have been otherwise done by account check or bank draft or prescribed electronic mode, as the necessary evidence is not in the possession of the SC.
Is it clear?
Yes, sir.
As an auditor, you should mention this in your audit report. Are you clear? Now, this is what this small section is all about. This clause is all about. Okay, shall I go ahead? Provision for gratuity. We all know that 40A7 disallow provision for gratuity. Remember or not?
Remember, sir.
But do you remember it is allowed in the year of payment? Remember?
Yes, sir.
Remember or not? We have done a lot of adjustments also based on this.
Yes, sir.
Now, the tax auditor should call for the order of what? Principal Commissioner or Commissioner of Income Tax. Because they give the approval for gratuity fund. Okay?
Okay, sir.
So, verify the date from which it is effective and also verify whether the provision has been made as provided in the trust deed. Okay? Are you clear? Now, the next clause I am not much interested, not very important. Do you remember? We have done this also in class, that any contribution to unrecognized provident fund is disallowed. Remember or not? So, this entire clause is about that only. Let's not talk much about it. There is nothing great in that. Let's move on to the next clause now. Clause G of the same clause. 21 is very big. Huh? This is 21 only, na? Or 20? 21. Okay? Shall I read?
Yes, sir.
Now, this is talking about what? Talking about what?
Contingent liability.
Palani, I want your inputs, huh? Otherwise it is not possible for me to teach this chapter, please. Particulars of any liability, of a contingent liability. The assessee is required to furnish what?
Particulars of any liability of
Contingent nature. Okay. The tax auditor, for verifying the details of contingent liability, may conduct a detailed scrutiny of various accounts. Okay. So they can check the outstanding liability detail, okay, provisions detail, okay,
Yes,
to
sir.
find out if there is any contingent liability. Is it clear?
Yes, sir.
They may also verify reporting under CARO. Okay, CARO, I hope you know that what is CARO, right?
Yes, sir.
Contingent liability shall not be deductible. Correct. It is not deductible, right?
Yes, sir.
Contingent liability is not required to be reported in notes to accounts. Okay, it is not required to be reported. Okay,
Okay, sir.
it has to be just reported here. In notes to accounts, it is not there. Okay,
Yes, sir.
and one last clause, not last, second last, in fact. But the last one we have already done earlier. So there is nothing great. Second last is 14A. 14A, what we mentioned? What is 14A? What is section 14A of the Income Tax Act? Not remember.
No, sir.
Expenses which are incurred to earn exempt income. Remember or not?
Clear, sir. Remember, sir.
The expenditure which are relatable to exempt income. So if you do not do PGPP, then tax audit report cannot be understood by you. That is the reason this chapter is correctly removed from audit and put into tax. Yes or no? And what audit teacher will teach you all these things? Audit teacher knows or what all these things? Huh? Are audit teachers have detailing of all the income tax provisions or what?
No, sir. No, sir. No, sir.
You will say that they are also chartered accountant. So what? I am also a chartered accountant. I don't know audit. I am also chartered accountant. I don't know FR. The same way an audit teacher will not know income tax the way we know. Okay.
Yes.
So rule 8D mentions the amount to be disallowed. Remember or not? 1% of the annual average of the monthly average. Remember or not? Something like that.
Sir.
So what are you supposed to do as an auditor? You have to verify the amount of inadmissible expenditure. Okay.
Clear, sir.
Right? So you have to do as per rule 8D. Now all these things are unnecessarily relevant. It's not relevant into this time. Rule 8D gives you a fictional mechanism. Yes?
1% of the average.
Follow that now. Why do you want to follow all these unnecessary things? Your institute is saying you have to disallow based on what? You have to disallow based on how much hours the assessee has worked, turnover. All those are not relevant in today's time after Rule 8D. Rule 8D tells you the exact mechanism how to disallow the expenditure in relation to what? Exempt income. Now, last but not least, amount inadmissible under 3613. Proviso to 3613. What is 3613?
Sir, bonus or commission?
3613 is bonus or commission? It is interest on borrowed capital. Okay.
Yes.
3612 is bonus or commission. Don't write unnecessary section in exam if you are not remembering. Don't write section number. It's of no use if you don't remember the number precisely. Leave the section, just write the content. So what is 3613? 3613 talks about interest on borrowed capital. What is proviso to 3613? We have done earlier in today's class itself. Proviso to 3613 says, listen, proviso to that if till the time the asset is not put to use, till the time the asset is, till that time the interest shall not be allowed. Okay. Are you clear?
Yes, sir.
Once the asset is put to use, you can claim the deduction. Clear or not? Tell me please.
Yes, sir. Yes,
So
sir.
that fact has to be mentioned by the tax auditor in the audit report. Okay.
Okay, sir.
Now coming to next clause, which I feel personally might be very important for exam. Remember, there is an amendment made by Finance Act 23 in section 43B with respect to MSME. Remember, if you make any payment to MSME people,
40 minutes you have to make up.
then you have to make the payment within the due date. If you make the payment within the MSME due date, then it will be allowed on accrual basis. Remember?
Yes, sir.
And if you make the late payment, then it is allowed on payment basis. Remember or not? Now, this clause is not talking about that. Okay. Listen carefully. Listen, otherwise you will get confused. Huh? This clause is not talking about that. Okay. This clause is talking about the interest which is inadmissible under section 23 of the MSME. Listen carefully. Are you supposed to make the payment on time? Tell me please fast. Louder. Louder. If you don't make the payment on time, what will happen? Tell me. Interest, you have to pay some interest, right? So this clause talks about that interest is what? It means that interest is what?
Not allowed.
Not allowed. Okay. So this clause is talking about that. Okay. And what was 43B? If I don't make the payment on time, then that expenditure itself is not allowed. Are you clear or not? Did you understand the difference between the two? Yes. This is talking about, this is there since old, long. This clause is there long back. Okay. First of all, we have done all this definition if you remember. What is micro enterprise? What is small enterprise? What is micro enterprise? What is small enterprise for businesses, for provision services? Remember? We have done all these clauses in class, if you remember.
Yes, sir.
Where the investment is greater than 10 lakhs, less than 2 crore, blah, 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 blah. Okay. Then the interest payable is not allowed under the income tax law. Are you clear? Now, what all things are to be checked over here? The inadmissible interest has to be determined. As an auditor, what has to be determined? Now, section 16 of the MSME provides for the date from which the rate and the rate. Provides the date and the rate from which the interest will be payable. Is it clear? If the buyer fails to make the payment, if the buyer fails to make the payment, he is liable to what? Liable to what? Compound interest, not only interest. Okay. With monthly rest to the supplier on the amount from the appointed date, or as the case may be, from the date immediately following the date agreed upon at the 3 times of the rate notified by RBI. Okay. So, no deduction will be allowed of such interest under the income tax law. Government treat that as a penal interest. Okay. It is not allowed. Okay. Now, while reporting under the clause 22, what all things has to be kept in the tax auditor's mind? The auditor, while reporting in respect of clause 22, should seek information regarding the status of the enterprise. Okay. So, when I am reporting, first of all, I need to find out what is your status. Micro, small, medium, what is your status? Accordingly, I will report. Okay. Now, cross-check the financial statements. Okay. For what? For what I will cross-check the financial statement? Whether the payment is made on time or late, you have to cross verify that. Okay. Obtain the list of supplier. Obtain the suppliers who can be classified as what? Micro, small and medium. Okay.
Yes, sir.
So it is the responsibility of the auditee. Auditee means what? The client to classify and identify those suppliers. Okay. How will I come to know your supplier? Review the list to obtain. So once you take the list, you have to review it. Okay.
Yes, sir.
Verify from the books of accounts whether any interest is payable. Okay.
Yes, sir.
Then verify the interest payable on the test check basis. Okay.
Yes, sir.
Now verify the additional information provided by the auditee under section 16 in his financial statement. If no test check basis, then the tax auditor is satisfied that the amount so debited to the P&L account should be reported under clause 22. Okay. And then they have said that in section 43B also there is an amendment check where you will not get the deduction at all of what? Of the expenditure also. Are you clear? Tell me please.
Yes, sir.
So there are two things over here. One is about
Expense, sir. Interest, sir. What
one is interest. If you make the late payment, you have to pay interest and that interest is disallowed. Okay.
That's clear, sir.
Second is,
Second.
what is the second thing which is the Finance Act 23 amendment?
43 is fine. Do not make the payment.
If you do not make the payment, what is the due date for MSME?
Payment due date, sir.
Payment date for MSME?
Generally, it is 45 days from the date of sending the bill, sir.
No. If there is an agreement, then maximum 45 days.
If it's no agreement, 15 days.
If there is no agreement, 15 days. Are you clear?
Yes, sir.
Next clause. Making payment to certain related party. Okay.
Yes, sir.
Excess payment to relative. Disallowed or not? Tell me.
Yes, sir.
Now, this section enjoins the AO power to fix what? Disallowance. Okay.
Yes.
So, what is the assessee What is the auditor is supposed to do? Auditor has to obtain the list of all the specified person. Okay.
Yes, sir. Yes, sir.
Detail of the payment made to them, scrutinize all the payment, call for all the contracts and agreement between the assessee and the specified purpose person, and if the transactions are voluminous, do test check. Okay.
Yes, sir.
Is it clear? Nothing great as
Yes,
such.
sir.
Nothing great as such. Okay. Shall I go ahead?
Yes, sir.
Now, clause 24. This is about amount deemed to be profits and gains under 33 AB or ABA. Remember in 33 AB and ABA, that is tea, coffee, rubber, etc. There are a lot of deemed incomes. Remember? 33 AB, tea, coffee, rubber. Can I tell you some deemed incomes? That if you sell the asset within 8 years. Remember deemed income?
Yes, sir. Within 8 years.
Yeah. And if you withdraw the money from NABARD and do not use in the same year, then also deemed income. Remember? So in this clause, you are supposed to report that. Check it, please. Report the deemed income. Report the
Deemed income.
under chargeable under various provisions. Okay. So you have to verify the details regarding the deposit account. Also verify the accuracy of details given. Whether the assets acquired are sold before the expiry of 8 years. You have to mention all those things. Is it clear?
Yes, sir.
Shall I go ahead?
Yes, sir.
Now, amount chargeable to tax under 41. This is also deemed income, correct?
Yes,
In
sir.
41, there are a lot of deemed income, na? Remission and cessation of trade and trading liability, then the bad debts recovered, etc. Scientific research assets sold, right? Now, as an auditor, what are you supposed to do? The tax auditor should obtain list containing all the amounts chargeable under section 41. Okay. So you have to take a list from the assessee that which all amounts are chargeable under section 41 and then examine the past record to satisfy himself about the correctness of the information. Okay. Why am I supposed to see the past records? Because if there is some recovery of bad debts, then I have to check the bad debts also now in the past. Yes. That how much was the bad debts and how much got recovered out of it, correct? Now, as an auditor, you should state the profit chargeable to tax. The information has to be given irrespective of the fact whether the relevant information has been credited to P&L or not. Remember, very important point. Huh? You have to mention all the information. If credited, then also mention. If not credited, then also mention over here. Okay. Then you also have to check whether there is any remission or cessation of trading liability. Check, please. Is it clear? So this is what this clause is all about. This clause 25. Now, clause 26, very important practically and academically at both the levels. Okay. Clause 26. Clause 26 now. Very important clause which talks about what? Section 43B implication. Okay. Certain deductions allowed on what basis? Now, what is required to be reported is only the deductions which are, listen, first important thing to be kept in mind. If something is allowed, if something is
Allowed.
and if it is not paid, and if it is
Not paid.
then you have to report it. Then you have to
Report it.
second thing. If something is not allowed, if something is
Not allowed.
and if you have not paid, and if you have,
Not paid.
there is no need to report. Is it clear? Because that is already not allowed, correct?
Yes, sir.
Yes or no?
Yes, sir.
So, this is the first thing that you have to keep it in mind. Check this. Okay. Now, if the assessee is maintaining its books on mercantile basis, the auditor should verify the aforesaid particulars on the books of accounts, vouchers, documents of the immediately succeeding assessment year, blah, 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 blah. The tax auditor should clearly distinguish the liability incurred during the previous year of all specified sum for the liability that pre-existed on the first day of the relevant previous year. So, there are two types of liabilities which are there. Can I say one which is incurred during the previous year? It means the expenditure is of current year, correct?
Yes, sir.
Second, which is pre-existed on the first year. What do I mean by that? Pre-existed on the first day.
The expense was payable.
The expense was payable in the last year, still not paid, correct?
Correct.
So, you have to mention both of them separately, okay?
Yes, sir.
Okay.
Yes, sir.
Now, something which is just got repeated, which I have told you, that in 43B, there is an amendment. with respect to MSME Act. Okay, you have to pay within 45 days. Is that there is an agreement? If there is no agreement within 15 days, remember or not? Correct. So this is entirely the 43B MSME Act provision. Check. Okay. This is entire MSME Act provision. MSME Act provision is entirely repeated here. Check. Correct. Shall I go ahead with the next clause? The next clause is about SENVAT or GST availed or utilized. What do I mean by availed or utilized? GST availed means what? Credit is taken. Okay. And utilized means what? Set off against payment is utilized. Okay. So you have to report what? GST? GST or SENVAT, whatever it is. Okay. SENVAT, why they are using? Because there are some laws in which SENVAT is still applicable now. Yes? Like petrol, like you can say alcohol, etc. Right? Now. So, GST availed, GST utilized should be reported. In some cases, SENVAT or GST availed may be lesser than the SENVAT or GST utilized. Yes? Yes or no? Yes. So, in order to avoid misleading conclusion or inferences, report the opening balance and the closing balance of GST. Regarding the reporting of accounting treatment of SENVAT or GST, the clause requires that its treatment in profit and loss account and the treatment of outstanding GST credit in the account have to be reported upon. The tax auditor should verify and maintain the information in his working paper for the purpose of reporting in the format given in the e-filing utility. Okay, so this clause is just talking about certain details with respect to what? GST credit. But don't worry, there is a detailed clause on this, that is clause 44. Which clause?
Clause 44.
Clause 44 is much detailed than this clause with respect to what? GST credit. Okay. Now, this clause is talking about what? Prior period expenses and income both. Okay. Okay. So, if the income is pertaining to what? Earlier year. Okay. But you have received in the current year, you have accrued in the current year, but pertaining to earlier year. Correct? So, what has to be done in that case? Shall we see? It may be noted that the information under this clause would be relevant only in cases where the assessee follows mercantile system. Obviously, because only for mercantile system there is a concept of prior period. Now, if you are following cash system, then whenever you receive and whenever you pay, you will get the deduction and income. Yes. So, for mercantile system, this clause is relevant. The tax auditor should obtain the particulars of earlier year expenses, earlier year income debited or credited in P&L. Okay. It may be noted that there is a difference between expenditure, very important, there is a difference between expenditure incurred, between expenditure in any earlier year debited to P&L and the expenditure relating to any earlier year which has been crystallized during the previous year. There is a difference between the two, please. There are some expenses which are crystallized in the last year, okay, which are, but you are debiting in the current year. You are, those are prior period, okay. Now, something which was not crystallized earlier, you are not aware that what liability was not finalized. That liability got finalized in the current year, even though it is an expense of earlier year, but it got finalized in the current year. So that is not prior period. Are you able to understand or not? I have given you an example in class. Remember, I'll tell you. For example, there was some issue which was going between the company and the employees with respect to bonus. So the employees went to the court. And the court said that for the last 5 years, the company has to pay bonus. So the company paid bonus for the last 5 years. So is the liability crystallized earlier or it got crystallized today? It is not a prior period. Correct or not? Yes? The expenditure will be allowed in such case. Check. And it will not be reported also. Is it clear? Shall I go ahead? Now, some specific cases with respect to IFOS now. Shall I start? Do you remember that in 5627B, a closely held company in which public are not substantially interested, they have to issue the shares at market value only, not more than that. Remember? Suppose if the market value of the FMV of the share is 30 rupees and if the issue price is what? 200. Then the differential amount can be called as IFOS. Remember or not? Please tell me. So you have to check that particular implication. This is the provision. It will be IFOS. This can be checked from where? MCA record, share register, correct? Because that will tell you whether the shares are issued or not, and if issued, then issued at what rate. Yes. You can also obtain a valuation report from the certified valuer for determining what? Tell me. The fair market value of the SSE. Okay, of the shares. Is it clear? Shall I go ahead? Now, the next point is about, do you remember that? If you receive any advance, if you receive any, and if you forfeit that after, on or after, what? 1/4/2014. Do you remember that? Then it is income from other source directly. And if you forfeit before 2014, then you remember that you reduce from the cost of acquisition. So this is what this clause is all about. Check whether any amount is to be included in the income chargeable under income from other source. If yes, then the nature of amount and the amount of thereof. Is it clear? So let's detail this. Let's do the detailing also. This clause requires disclosure of whether any amount is chargeable to tax under what? And if so, furnish the prescribed details. Okay, 5629 is what? It is about all these things. That is what the provision is given over here. Okay. Now, the auditor is not required to report any such forfeited amount if it is in the respect of personal capital asset. So remember, if there is a what? Forfeiture of what? Because personal capital assets are anyways not capital asset, correct? So you are not supposed to report those amounts. Okay. Now, if an advance has been received and outstanding for a considerable time, okay, or has become time barred, there is no requirement to report and such amount unless and until it is forfeited by an act of the SSE. Similarly, forfeiture of an amount received as an advance towards what? Capital asset is required. Towards stock in trade is not required. Is it clear? Forfeiture for what? Is required, not stock in trade. Okay. So you can take a representation letter from the management also, whatever amount they have forfeited during the year. Is it clear? Because in practical life, how will I come to know that which amount is forfeited for which asset? Yes. As an auditor, how will I come to know that which amount is forfeited for what? Which assets? Okay. Now, next one is also with respect to IFOS and 56.210. What is 56.210? Gift tax. Okay. So, first of all, you have to mention what? This clause requires reporting as to whether any amount is included under income from other source under 56.210. From any person or persons, money, immovable property, etc. Receipts of other assets other than immovable property or assets would not be covered then under this section. For example, remember, only three items are covered here. One is money, remember? One is immovable property, another specified movable property. Remember? As I have told you in class also, if you receive anything in the form of stock in trade, then it is not covered under IFOS. Remember?
Yes, sir.
Not covered. You can again take a management letter, obtain a representation from the SSE, correct? Okay.
Yes, sir.
What is the nature of income? Nature of asset will be either money, either immovable property, or share, security, drawing, painting, and also virtual digital asset now. Remember? So in short, you have to first of all answer whether there is any receipt of all these things. If yes, you have to mention the nature, whether it is money, whether it is asset, whether it is immovable property, whether it is share, security, painting, drawing, and also the amount thereof. Is it clear?
Yes, sir.
The next clause is about amount obtained. You are taking any loan on hundi from someone. Remember hundi? I am taking a loan from you. I am giving you one receipt. That is an hundi. Remember?
Yes, sir. So,
Yes. 69D. 69D was covered over there. Remember or not?
yes, yes, sir.
So if I have received any money from you, if I have taken any loan from you or repaid any loan to you, remember, other than account pay check, this clause has to be reported. Remember, then it is income. 78% tax is applicable in your case under section 115 BBE without any deductions. Remember or not? So here you have to obtain what? List of complete borrowings and repayments on hundi. From which all people you have taken on hundi and to which all people you have what? Repaid on hundi. And also you have to take the amount involved, how much you have taken, date of payment, mode of payment. All these things has to be taken by you as a tax auditor. Are you clear? Now, certain clauses with respect to what now? Transfer pricing. Shall I start? First of all, whether primary adjustment to transfer pricing has been made. Do you remember what is primary adjustment? Primary adjustment is the normal adjustment which we do under transfer pricing. It is the difference between your price and the arm's length price, correct? So, you have to obtain a certificate from the SSC as to what transfer pricing adjustments have been made. The burden of proof is on with the management to prove that there is a primary adjustment or not. Is it clear? The burden of proof is on the SSC only always, because under transfer pricing, who computes the arm's length price first? Louder. The SSC has to compute the arm's length price first, correct or not? Please tell me. So the burden of proof lies on the SSC only to identify whether arm's length price is computed properly or not. Clear? Then there are a lot of small things over here, which we have done all of them in class. The clause 30A requires reporting of whether primary adjustment to transfer price has been made. The tax auditor is required to verify whether any primary adjustment is made. It is also necessary that the disclosure of each and every type of primary adjustment is made. Okay. There might be 5 different transactions with 5 different associate enterprise. Yes or no? Everywhere there might be some primary adjustment, correct? You have to report all of them. Okay. Further, is that possible that the primary adjustment was made in earlier years? Then that also should be reported. Why? Because till the time the money is not brought back to India, do you remember that we have to make a secondary adjustment on that amount? I am asking you a simple question. A primary adjustment was made in earlier year in 2021. Are we supposed to report that also? Why? Because if there is a primary adjustment, that is considered as deemed loan, na? Until when the interest will be imposed, yaar Palani? Till the time it is not repatriated to India, na? First of all, the interest, you make primary adjustment, okay? Then you have an option to bring back the money in 90 days, correct? Now, if you don't bring back in 90 days, then till when interest will be imposed? Till the time I get the money, or till the time I have one option to pay additional tax, right? So all those things are mentioned over here. The entire bhashan, entire income tax provision is reflected over here. I'll just read it for you all. Such primary adjustment may need to be reported in tax audit report. The tax auditor then needs to report the relevant clause of 92 CE1. Under clause 330AB, the requirement is to report whether the excess money is repatriated to India. Okay, you have to say whether it is repatriated. The auditor should verify whether the excess money has been received. Within the time, he should report accordingly. If not reported, then what are you supposed to do? You are supposed to compute interest, yes or no? Tell me now, please. Now, till the time, since the reporting is for previous year, it is advisable for the tax auditor to ensure the amount of interest till the end of the previous year is furnished. In case the interest up to the date of filing of audit report is given, it is advisable for the tax audit report to provide a breakup of the amount of interest imputed till the end of the relevant previous year and for the period post the end of the relevant previous year, ending with the date of filing of tax audit report. So, it is possible now that on the date of tax audit report also, you have not brought back the money. Possible or not? You have to give a breakup. That till the end of the year, this much is the interest. Okay. And after the end of the year, this much is the interest. Is it clear? Then you have to obtain a certificate from the SSC whether any advance pricing agreement was entered into, correct? Because see, primary adjustment can happen because of multiple reasons. Tell me, can I suo motu do primary adjustment? Can department also do primary adjustment and I accepted that? Can primary adjustment can also happen because of advance pricing agreements? Please tell me. It can happen because of multiple reasons. That is what it is written over here. Last but not least, you also have to obtain a prior management representation on the information obtained to be accurate and true, basis which he should make the disclosure in the tax audit report. Hence, the primary owner should be with the what? Tell me. Management. Are you clear? Please tell me. I hope it is clear. Now, next one is also a transfer pricing clause. 94B. Remember limitation of interest?
Up to
30% of EBITDA is allowed, above 30% disallowed. Clear? Now, from year till year, it is entirely provision. See, entire provision is given here.
Understood, sir.
Okay, from here the reporting requirement starts. Now, how much is disallowed over here? Above 30% disallowed, correct?
Sir, correct, sir.
Compare with interest payable to associate enterprise, whichever is lower. Remember?
Remember, sir.
But remember, I have told you in class, only that interest will be disallowed over here, which is otherwise allowed. Okay?
Yes, sir.
Something which is already disallowed cannot be re-disallowed na here.
Yes, sir.
So, therefore, any interest disallowable under 14A, under 41A, 48.2 shall not be considered here. Check.
Understood.
Similarly, any interest which is already disallowed under 92B cannot be disallowed here. Check. Right? Suppose your interest is 100 rupees. How much?
My interest is 100 rupees.
Arm's length is 70. How much?
Arm's length is 70.
So 30 rupees is anyways disallowed, correct?
Yes,
So
sir.
that 30 cannot be again disallowed here, na? Now only 70 rupees can come over here, correct or not? Yes. Plus there is a threshold of 1 crore here, remember or not? Please tell me. 1 crore. The interest has to be greater than 1 crore, correct?
Yes, sir. Yes, sir. Yes, sir.
The threshold is there or not? Tell me please fast.
Yes, sir.
Plus, do you remember that in the class I have done that there was some language, there was some issue in the language of the law. There are two views which were possible. When we take 30% of EBITDA, interest in excess of 30% of EBITDA, one view was you can take the full interest. Other view was you can take only the interest payable to associate enterprise. Remember or not? So both the views are taken. Okay, here. Okay, that is what it is mentioned here. You can take what? Tell me.
Take any one view, sir.
Any one view. Both the views are allowed. Both the views are allowed. You can take any one, but the better view is you should take only interest paid to non-resident associate enterprise. Okay, that is a better view. But both of them are correct. Okay.
Okay, sir.
Now, then further they have mentioned over here that it's not only the direct loan which is given by the non-resident associate enterprise. Indirect loans are also covered. Remember, if a third party is giving you a loan, and associate enterprise is what? Depositing a matching amount. Remember, if a third party is giving a loan, then associate enterprise is giving guarantee, then that is also covered in 94B. Remember or not? So that is what it is given over here. Okay. Is it clear?
Clear, sir.
Now the next clause, clause 30C. Shall I read? Now this is on GAR. This is on what? Do you remember in GAR we have to identify whether the assessee has entered into an impermissible avoidance arrangement? Remember or not?
Sir,
So this clause requires the tax auditor to report what? Impermissible avoidance arrangement and to quantify the tax benefit, right? Because the tax benefit has to cross how much?
God, 2 crores or 3 crores?
3 crore. Okay.
Yes, sir.
The tax auditor should also examine if in any earlier year whether their reference has been made for declaring what? Impermissible. In earlier year also something was disallowed, correct?
Okay, sir.
Now the tax auditor should examine the following. Okay. Do you remember that if GAR is declared, then the AO has to give the matter to the commissioner, then the commissioner will send the matter to the approving panel. Remember that long procedure was there to declare a transaction as impermissible avoidance arrangement. Remember or not? See, you have to give an opportunity of being heard to the assessee, the AO will give an opportunity. Remember? If the assessee explains everything, then GAR will be dismissed, correct? But if the assessee does not explain or does not reply, then you have to send the matter to approving panel. Remember? So all these things have been mentioned over here. Okay. Is it clear?
Yes, sir.
Now this is getting repeated again and again. So sorry for that. Okay. Now coming to some very important clauses, practically very important. Shall we? 269 SS and 269 T. T. 269 SS is for taking a loan. 269 T is for not giving a loan. Yeah, it's for repaying a loan.
Okay, sir.
Okay.
Okay, sir.
Now, what all things are required? Listen carefully now, please. It's a very important clause. Now, once I explain 269 SS now, once I, then 269 T will be automatically done. Okay. So there are a lot of clauses based on this only. So don't worry. Most of around 7 pages are this only. Shall I start with 269 SS? You have to pay absolute attention. Are you paying absolute attention? Louder. You are not paying. Are you paying absolute attention? Please tell me. So please pay attention. Okay.
Okay, sir.
You have to pay attention. Particulars of each loan. What?
Each loan
Or deposited exceeding the amount. What is the amount which is mentioned in 269 SS? 20,000 rupees. Okay. During the previous year, you have to mention the name, address, PAN, Aadhaar, if available, of the lender or depositor. Okay. Amount of loan or deposit. Okay.
Okay, sir.
Then whether the loan or deposit was squared up during the year. What do I mean by squared up?
Settle down.
Settled down, whether it is paid off or not. Correct. Then maximum amount outstanding at any time during the previous year. Okay.
Okay.
Then whether the loan or deposit taken or accepted by check or by draft or using electronic clearing system through a bank account. Okay.
Okay, sir.
And in case the loan or draft or deposit is by check, whether it is by account pay check or not. Check is not important. Which check is important? Tell me.
Account pay check.
Account pay check. So all these informations we want. Okay.
Okay,
So
sir.
let's read the detailing. Shall we do the detailing?
Yes, sir.
Now this clause seek what? Particulars of what? Each loan and deposit where it exceeds the limit specified. Okay. Limit is how much? 20,000 or more. Okay. The particulars of each loan has to be mentioned where it is 20,000 or more. Okay. Now there are 6 specific particulars. Yes.
Sir.
We have seen 6 points are now here. Tell me.
Yes, sir. 600.
Now, including permanent account number, Aadhaar number. The tax auditor should obtain the details from the SSE, verify the same from the records. There will be practical difficulty in verifying. Okay. There will be a practical difficulty or not in verifying the loan, whether it is actually taken by account pay check or not.
Yes, sir.
Yes or no?
Yes, sir.
In such cases, the tax auditor should verify the transaction with reference to such evidence which may be available. In the absence of satisfactory evidence, you can give this note. You can give this note. It is not possible, blah, 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 which you have also given in 48.3. Remember? Same note you can give that we are not able to verify it properly. Remember? Now, there is one Finance Act 23 amendment. Remember, for cooperative society, the limit is increased. For certain cooperative society, the limit is increased to 2 lakh. And FA 23 amendment it is. Which amendment? Palani? FA 23 amendment. Okay. Now, what all details you want? The particulars of any specified sum taken. Do you remember specified sum taken was advance with respect to immobile property? Remember? If I take advance from somebody with respect to an immobile property, then that also should be mentioned in 269 SS. That is also covered into, that also cannot be obtained by other than account pay check, account pay draft, ECS or such other electronic mode. Remember? So you have to ascertain that also. The tax auditor should ascertain whether the associate has any immobile property which has been transferred or proposed to be transferred, blah, blah, blah. The auditor should satisfy himself about the proceeds arising from such transfer duly credited to the bank account. You have to check all those details and you have to check whether it is received by account pay check, account pay draft, ECS or such other electronic mode or not. There are 3 things which are covered in 269 SS. One is loan. One is
Loan.
another is deposit. And third is specified sum. Remember? You have to report about all of them. Okay.
Okay, sir.
Now, this clause is about 269 ST. I'll come to this 269 ST in 2 minutes. Okay.
Okay, hold.
Now, we will come to what? 269 T now. 269
T.
T. Now, this clause, same. The way on taking loan you have to report, the same way on repaying also you have to report six items. Check.
Yes, sir.
Remember or not?
Yes.
Clear?
Clear.
So now it is repeating till here. Okay, so we are not going to talk about till here once again. Okay.
Okay, sir.
So now coming to 269 ST. So once you do 269 SS now, once you do what?
Yes, sir.
269 T is automatically done. Is it clear?
Yes.
Now let's talk about what?
ST.
ST. What is ST? Remember, in ST, you cannot receive 2 lakh rupees or more from any person other than account pay check, account pay draft, ECS, such as electronic mode. Remember or not? See, like for example, particulars of each receipt,
Each receipt.
of an amount exceeding. How much is the amount?
Amount exceeding 2 lakhs.
2 lakh or more. 2 lakh or more. Exact 2 lakh is also covered. Okay.
Yes.
From a person in a single day. Remember, or in respect of a single transaction, or in respect of single occasion. Remember, 3 points were there.
Yes, sir.
Say, from morning till evening, I should not receive 2 lakh or more in cash. Remember? Now, if I sell you goods of 2 lakh rupees today, then I cannot receive 50,000 rupees in 4 days also. Remember? Or if there are some events and occasion, Palani's wedding is there, Palani's Sangeet is there, Palani's what is there? Roka is there,
Okay, sir.
whatever is there. Okay. All of them taking together also, I cannot receive 2 lakh or more in cash. Remember?
Oh, clear, sir.
So this clause talks about lot of things. Pay attention. What all things they want? They want the Palani's name, address, PAN number, nature of transaction, amount of receipt, date of receipt. Okay.
Clear, sir.
Now, shall I read from the right hand side? Detailing.
Detailing, yes, sir.
Now, this section does not distinguish between capital and revenue. Every kind of payment is covered here. Okay.
Okay, sir.
Once the receipt or payment exceeds the limit, it has to be reported. Okay.
Okay, sir.
What is the limit? Lower than 2 lakhs. Not covered. Okay.
Okay,
Now,
sir.
but individually it is lower than 2 lakh, but aggregate it is 2 lakh or more. Will it be repeated? Will it be reported?
Yes, sir. Covered, sir.
Individual it is less than 2 lakh, but aggregate in a day it is more than 2 lakh rupees. Will it be covered?
Yes, sir.
Yes, it will be covered. Okay. Similarly, clause 31 requires particulars to be furnished in respect of transaction exceeding 2 lakh where the assessee has received the amount from a person, whereas clause BC, BD or clause 31 requires information about the transaction exceeding 2 lakhs where the payment has been made by the person to the assessee. Now read this paragraph, it's very important. What does clause BA and BB requires?
See the amount exceeding 2 lakhs.
BA and BB, let's talk about that. BA and BB requires that particulars to be furnished in respect of transaction exceeding 2 lakh
That is clear, sir.
where the assessee has received the amount from a person. Whereas subclause BC and BD requires information about transaction exceeding 2 lakhs where the payment has been received by what? Has been made by the assessee to a person. So one is about receipt, one is about payment. Okay.
Yes, sir.
Is it clear?
Clear, sir.
While it is comparatively simple to work out receipt or payment to or from a single person in a day, the tax auditor will have to exercise care and caution while arriving at a particulars of receipt or payment to a single transaction relating to a single event or occasion. See, it is very easy to identify. See na Palani, it is very easy to identify from morning to evening how much payment is received and how much payment is made. Correct? But it is very difficult to identify what? If the transaction is done today, say 3 lakh rupees goods sold today. Now, in how many days it was received in cash? That is very difficult to identify or not? Please tell me.
Correct, sir. Correct,
So
sir.
that's what it is trying to tell. You need to exercise what? Lot of
Caution.
caution. Okay. So there are some examples given over here. You can just read this. Read this example, please. You will understand. For example, for a function organized by a person, assessee, Contractor may have given catering contract as well as contract for flower decoration. In such a case, while the transaction may be different, yes, but the occasion or event would be same, correct? And provision of 269 will be attracted by aggregating all of them. Yes. It is possible that the assessee may have purchased goods or services while simultaneously he may have sold goods or services to the same party, consideration for which exceeds 2 lakhs. In such a case, if the amount of consideration for purchase is set off against the amount receivable, such set off is not received or contemplated under 269 STD. If the amount of such set off exceeds 2 lakhs, then the tax auditor may give appropriate note to the effect that such set off not being a receipt of payment has been included in the particulars given under the relevant subclause. What do I mean by this paragraph? Please tell me. If I sell something to you, if I purchase something from you, correct? Then I will only take the net receipt from you, na? I will not take the full amount and then I will pay it to you, correct? Then in that case, what am I supposed to check? Up to 2 lakh, not a problem. Over 2 lakhs, problem, correct? Now, if the receipts or payments are otherwise than by 4 modes, the tax auditor will have to verify the mode of payment or receipt, correct? He will have to classify the receipt or payment as follows. Otherwise than by check, right? He has to check now. First of all, he has to classify all the payments into check or non-check, correct? Now, non-check are gone. They are gone. Now, in check also, we have to check what? Account pay check, account pay draft, etc. Okay. So, this is what this clause is all about. Okay. Now, there is a repetition of this clause here also. Okay, don't worry. It's a repetition. Now, we will move on to the next clause now, which is the next clause, clause 32. Shall I? So, let us go ahead with the next clause, that is clause 32. Okay. Which is with respect to losses. Okay. And UAD.
Okay, sir.
UAD.
Okay, sir.
So, details of brought forward loss are you supposed to give in the tax audit report? Brought forward losses are there, right?
Sir.
And depreciation to the extent available, containing information relating to the assessment year to which it pertains. Okay. The nature of the loss, business loss, capital gain loss, which loss, and the amount. Okay.
Okay, sir.
Or the allowances not allowed under 115 BA, BAC, BAD. Do you remember? If the losses are pertaining to these sections, remember? Then those are not allowed to carry forward. Remember or not?
Sir. Okay, sir. Fine, sir.
What I'm trying to say is, in section 115 BAC, BAD, BAA, etc., it was written that if your loss is pertaining to certain expenses, remember, if your loss is pertaining to certain expenses which are not allowed under these sections, okay, so those losses are not allowed to what?
Yeah, we
Carry forward. Remember or not? Correct.
Remember, sir.
Now, what all things you are supposed to do? Let's detail it. There is a amount of brought forward loss or UAD, okay, that needs to be quantified as per the return, as per the assessment order, okay, or as per the appellate order, because there is a possibility in return the loss was something else, in the assessment order the loss was something else, in the appeal order the loss was something else. Can it change or not? Please tell me.
Understood. Yes, sir.
Yes,
We can
because
check, sir.
because there might be some disallowance, there might be some deductions, right, because of which the loss might change, right? Remember or not?
Remember, sir.
Now, depreciation on goodwill will not be allowed. Yes or no? From 2021, correct? So, if there is any UAD pertaining to goodwill, that will not be allowed to be carried forward, correct?
Correct.
Now, the brought forward loss may relate to different heads, correct? Like property income, PGBP, speculation business, capital gains, etc., which are covered under various sections from section 30, 70 to 79, okay?
Yes, sir.
Now, in remarks column, information about pending assessments or appellate proceedings or delay about filing of return should be given. Okay. So whatever assessments are pending, you have to give that in the remark column. Whatever assessments are appeal are pending, you have to give in the remark column. Okay.
Yes, sir.
For giving the above information, the auditor should study the assessment order. What should auditor study?
The assessment order.
Assessment order should be studied. The income tax return should be studied. Assessment order should be received. Appellate order should be studied, right?
Yes, sir.
Further, tax auditor should keep in mind that provisions of 71B, that is for house property loss. Okay, 73A, that is 35AD loss, and 78. These are special provision in case of change in the firm or on succession. Okay. Now again the things are repeating, I guess. The auditor should obtain all the assessment order. It is repeating, right?
Yes, sir.
Now, in case of any undisclosed income, do you remember that which is found in the course of search and seizure? New section 79A has come, which says that no losses will be allowed against such income. Remember?
Remember, sir.
Further, the auditor has to confirm and verify any search and survey has taken place. Okay. So
Okay, sir.
for that, the AO has to verify from its department, right? The department will give the information. So this is what this particular clause is all about. You have to mention all the clauses with its relevant what? Nature, amount, year. Okay. Now, the next one is section 79, which is only applicable to a closely held company. Remember?
Remember, sir.
Where 51% of the shareholders should be same in the year in which the loss was incurred and the year in which you want to set off. Remember?
Remember that, sir.
So the auditor will get the information about the changes if the shareholder from where? From the registrar of members. Yes?
ROM.
Registrar of members. So the auditor should obtain the details of the changes in voting pattern year on year and verify the reasons for any such changes. The tax auditor should obtain necessary representation to this effect wherever is not feasible to verify. Okay?
Okay, sir.
The comparison of the composition of the shareholding is to be with reference to the last day. You have to compare on which day? On
The
last day of the year in which you incurred the loss and the last day of the year in which you want to tell me
set up the
set off the loss. You have to compare these 2 days, right? Please tell me.
Yes, sir.
So this is what this section is all about. Okay. Shall I go ahead?
Ready?
Next clause is about speculation loss. Okay.
Okay, sir.
Now we have to verify from the books of accounts and other documents whether the assessee is carrying on what any
Speculation business or not.
business. On verification, if the auditor is of the opinion that the audit is carrying on speculation business, then it has to be carried forward as per section 73. It may be noted that it is not necessary that the same speculation business needs to be continued. Okay. Your business can be closed also. Okay. Similarly, the next clause is for 73A. 73A talks about 35AD specified business loss, right? Now, the auditor has to verify the specified businesses over here, whether the assessee is actually carrying on what? Any of the specified business, 3580 business. Okay.
Yes, sir.
In case the auditor is of the opinion the assessee is carrying on specified business, he has to furnish the details of the loss incurred. Okay. This loss can be set off against what? Against any other specified business. All those bhashan is given over here. Okay. Now, this is also repeating. It is also talking about speculation business only. Check.
Understood, sir.
Next one, very, very, very important. Chapter 6A, profit link deductions mainly and 10 AA. Okay. Now we all know that in profit link deductions and in 10 AA, there are a lot of conditions that the assessee has to fulfill, correct?
Correct.
So auditor has to verify all those things. Okay.
Okay, sir.
Auditor has to ensure that the assessee fulfills all the conditions specified. The auditor has to obtain all the necessary evidence. Okay. He has to check all the documentary evidence. Okay.
Okay, sir.
And there may be cases that where there is a difference between the amount claimed and the amount computed by the tax auditor. Okay.
Yes, sir.
So you are saying the deduction is 1 crore. I am saying the deduction is 80 lakhs. So there might be difference in opinion. So for that, you might give me somewhat judicial pronouncement. Okay.
Yes, sir.
So I have to mention that judicial pronouncement also. If the claim of the assessee is well founded and settled by a judicial pronouncement, then I have to keep that particular thing in my working paper also. Correct?
Yes, sir.
In appropriate circumstances, judicial pronouncement should be mentioned in the report also. Correct?
Yes, sir.
Now, at the beginning of this chapter, I have told you that in this chapter, a chartered accountant is not only liable to give what? Tax audit report. Okay. But also what? Tell me.
Tax audit report. Several certificates for claiming.
Certain certificates and other reporting requirements also required. Correct. In that, one of the reporting requirement is with respect to 10 AA, ATIA, ATIB, ATIC. Remember or not? You have to give lot of reports whether all these deductions are computed properly or not. Check it, please. These audit reports or certificate may have been given by tax auditor or by any other auditor. Yes? Yes or no? Now,
Yes.
don't worry, we have a complete case study on it, which will come later on, case study 3 and 4, which we are going to do it. Okay?
Case study. Okay, sir.
Yes, we will do it later on. Okay?
Okay, sir.
Now, the next clause is very, very, very important practically and academically at both the levels. That is with respect to what?
TDS.
TDS, very important. Left hand side we will see first. Whether the assessee is required to deduct or collect what? TDS or TCS as per the provisions of chapter 17B or chapter 17BB. If yes, what all things we have to give? First, what we are going to give first? 10. Then the section number under which TDS will be deducted. Okay. Then the nature of payment. Nature of payment means what? Professional fees, contract. Then the total amount paid. Total amount paid to the customer. Okay. Other party. Then the total amount on which tax was required to be deducted. Generally, tax is required to be deducted on the full amount, right? But in some cases, tax is required to be deducted on the excess amount also, like 194Q. Correct?
Yes, sir. Yes, sir.
So this is, did you understand the difference between point number 4 and 5?
Sir, that is total amount received. Here, on what amount the TDS has to be deducted.
Right. Did you understand the difference?
Yes, sir.
I hope it is clear. Okay. Now, total amount on which tax is deducted. Okay.
Yes, sir.
And the amount of tax deducted, and then if there is any shortfall. Okay.
Okay, sir.
So all these things we are supposed to give as a tax auditor. Okay. Now let's see. While answering the issue of applicability of TDS, there might be a lot of debate. Yes, between the assessee and the auditor. Correct.
Yes, sir.
Assessee will say it is not deductible. Auditor will say it is deductible. There might be difference in opinion. Nah.
Yes, sir.
There might be difference in opinion with regard to applicability of the provision. Okay.
Okay, sir.
In such a case, the tax auditor has to report what?
Difference of opinion.
In the tax audit report in form 3C and 3CB. Check. Okay.
Okay.
Now, the primary responsibility is of the assessee to prepare an information in such a manner that the auditor can verify. See, the assessee will prepare all the details and will give to the auditor, and the auditor will check it. Okay, whether the TDS is deducted or not properly. Auditor is not going to prepare the annexure and all for you. Okay. The tax auditor is required to verify that no items have been omitted. Okay.
Okay, sir.
The extent of check should also be indicated because it is not possible for you to check each and every transaction. Yes. For example, for salary, there are 50,000 employees. Can you check the TDS of each and every employee over there? Please tell me.
No, sir.
Practically impossible. Okay. Then the tax auditor would be well advised to do so. It may be noted that while determining the amount to be reported, the tax auditor has to check and verify the payment made by the assessee and should not only restricted to verification of expenses debited to P&L or the TDS returns filed and provided by the assessee. Example, an advance payment should also be liable for TDS. Now, please tell me, the point I am trying to say, auditor is required to check all the payments and not only which are debited to P&L. There are many payments which are not debited to P&L still liable to TDS. Like for example, are advance payment liable to TDS?
Yes, sir.
They are not debited to P&L, no? They are not debited to P&L.
Not.
Is purchase of property liable to TDS?
Yes, sir.
Is it debited to P&L?
No, sir.
So the point they are trying to say, we are supposed to see all payments. All payments, not only which are debited to P&L. Correct or not?
Correct, sir.
Now, we also have to see DTAA to find out rates in force. Yes or no?
Yes, sir.
This clause also requires the tax auditor to furnish the total amount out of the amount deductible, which is at the rates less than. Means if there is any what? Tell me. Shortfall in deduction of TDS. Okay.
2011A. Yes,
Like
sir.
for example, under 194C requires 2% in case of payment made to a person other than individual. Correct?
Yes.
But you deducted only 1%. So same has to be reported or not? Please tell me.
Correct, sir.
The same has to be reported. Okay.
Okay, sir.
Now, the tax auditor should also consider applicability of higher rate. Is it possible that there might be some higher rate because of PAN, or because of not filing of return of last year twice the rate? Remember? So you have to check those implications also. You can take the copy of TDS and TCS return, reconcile with the same with the books of accounts. Okay. The tax auditor shall take into consideration the relevant sections. Obviously, I have to check the section before deducting TDS, before checking the compliance of TDS, correct? I have to check CDVT notification, circular. There are a lot of case laws. All these things are there or not in TDS chapter. Please tell me. Tell me, please. And if the auditor has not agreed with the interpretation, then the same has to be what? Tell me. The same has to be reported. Are you clear? Now, the third point, this point deals with the statement of TDS. Statement of TDS means what? TDS returns. Okay.
Okay, understood, sir.
The tax auditor has to ascertain and report as to whether the assessee is required to furnish statement of TDS. Okay. If yes, then the auditor shall provide further details in a table containing follows. Is it clear?
Clear.
The information given in clause 34A and 34B should be reconciled with the disallowances report under clause 40A. Okay. And then you have to cross verify. Do you remember that in clause 21B we have disallowed the TDS amounts on which TDS was not deducted? Remember? In clause 21 we have done now.
Yes, sir.
So you have to cross verify the cross link the things over here. Cross reference has to be given. Are you clear? So in clause 21 you have to give a reference of this clause 34. Okay?
Yes, sir.
Are you clear? Now, the tax auditor should keep in mind the laws, obviously. Obviously, he has to keep in mind the laws. What is so great in this sentence? I don't understand. So as to detect any contravention or default in the provisions of TDS in case of voluminous. Okay, the tax auditor should report significant deficiencies. Okay. Last but not least, in some cases, you are liable for interest, right?
Yes, sir.
For non-deduction and for non-payment, right? So you have to mention that amount also over here. Okay.
Okay, sir.
So this is all about TDS and TCS compliances. So what all things they have said with respect to TDS and TCS? Please tell me.
Sir, first I have to nature of service, amount of payment.
Nature of service, amount of payment, how much amount is going to be paid, on how much amount TDS will be deducted, right? How much tax will be deducted, how much shortfall is there, how much is required to be deducted, how much is deducted, and what is the shortfall, correct?
Correct.
All those things has to be mentioned. Let's move on to the next clause. Next clause is about quantitative details. Okay, if you are a trading concern, which concern?
Trading concern.
Then the department wants the details of your goods, opening stock, purchases, sales, closing stock, shortfall. Is it clear? You have to give quantitative details. Okay, the tax auditor should obtain whether the assessee is a examine trading concern or not. If yes, obtain certificates with respect to all these things. Okay.
Okay, sir.
Now, in case of manufacturing assessees, also you need to do all these things. What all things will be required for manufacturing assessees? Now there are two things. For raw material, we want all the details, and for finished goods, we want all the details. Okay.
Okay, sir.
So for raw material, we want opening stock of raw material, purchases, how much is consumed, sales, closing stock, yield of the product. What do I mean by yield of the product?
Efficiency, sir. How much put
How much raw material you put to make how much finished goods. Correct?
Yes, sir.
And we want that percentage also. Right? So you have put a raw material of 1 lakh to make a finished goods of 1.5 lakh. Okay.
Okay, sir.
So you have to mention that percentage also. Okay. For finished goods also, we want all these details. Check. Similar details are there. Is it clear? I hope it is clear. Now the next point is about deemed dividend. It's about what?
Deemed dividend.
Check. Deemed dividend under 222E. What is deemed dividend under 222E? Which is only applicable to closely held company. Which company?
Closely held company.
So if there is a closely held company which holds 10% or more equity shares in another person. So if any shareholder holds 10% or more equity shares in a closely held company, and if that company gives me what? Loan. Then it is deemed dividend. Okay.
Yes, sir.
So I have to furnish the details. Amount received, date of receipt. Okay.
Clear, sir.
But the deemed dividend will be restricted to what? Your accumulated profits. Remember or not? So accumulated profits have to be determined as on the date of payment. Okay. And if earlier, if any deemed dividend was considered, that much has to be reduced from your deemed dividend. Remember or not? Suppose at the beginning of the year, profit was 5 lakh. Okay. And the company gave me 3 lakh rupees loan. So 3 lakh is deemed dividend.
Yes, sir.
Now the company gave me another 3 lakh loan. Now 3 lakh cannot be deemed dividend. Only 2 lakh will be deemed dividend because the balance profit is only 3 lakh, only 2 lakh, correct?
Correct.
Because earlier profit was 5 lakh, I got 3 lakh, that is deemed dividend. So remove 3 lakh. Now only 2 lakh can be deemed dividend in future. Okay. The tax auditor may not be able to determine the accumulated profit such as on the date of payment. Okay. So if the tax auditor, suppose if the loan was given on 15th of December 2023, okay,
Okay.
then how to determine the profit on this date?
Huh?
How to determine the accumulated profits on this date? Not possible, na?
Yes, sir.
So you have to do it on time basis. Time basis means proportionate basis. Okay. So from 1st April to 15 December, whatever profit is earned by the company, that much will be accumulated profit. Are you clear?
Yes, sir.
Proportionate basis, proportionate. 8.5 month profit will be proportionate. Okay.
Oh, okay,
So
sir.
suppose the total profit of the entire year is 12 lakh. Therefore, 8.5 lakh will be what?
Accumulated profit.
Accumulated profit. Is it clear?
Yes.
Now, the assessee should be a shareholder, and wherever the beneficial shareholder is not registered shareholder, the closely held company should make an appropriate remark. Okay. Now, the assessee should also, the auditor should also verify the TDS compliances under 26 years. It should verify from 26 years because deemed dividend will be liable for 10% TDS. Yes or no?
Yes, sir.
That should also be verified from the website. Okay.
Okay, sir.
Is it clear?
Clear, sir.
Now, the next is very, very irrelevant. Next 2 points are absolutely irrelevant for us as a day-to-day auditor. Here we are supposed to report the cost audit requirement. Check. Which requirement?
Cost audit requirement.
So whether any cost audit was carried out, if yes, give the details. If any disqualification, disagreement, which is reported by whom? Tell me. The cost auditor. Check please. Similarly, here also, if there is any audit under other law, like excise law, etc. Is it clear? So we have to give a report of what excise auditor has to give as opinion. So whatever is the opinion of the excise auditor and cost auditor, you should mention over here. Is it clear?
Understood, sir. Clear, sir. Clear.
Understood now?
Yes, sir.
So nothing great as such, not very much relevant for us as a chartered accountant. Okay. Now coming to some important points now. That is, we need to mention certain ratios here. Which ratios? And that too we have to give in a comparative basis. Last year data also should be given and current year data should also be given. Okay. Shall we see which ratios are to be given? Shall we see? Turnover ratio, total turnover first of all has to be given of both the years. Okay. Last year and current year. Then GP ratio, NP ratio, stock turnover ratio. Is it clear?
Yeah.
And material consumed to finished goods ratio. Okay.
Okay.
Now, these ratios have to be calculated only for assessees who are manufacturing or what? Now, while calculating these ratios, tax auditor should assign meaning to the terms. Okay, because you have to define all the terms. Now, what do you mean by GP? What do you mean by NP? What do you mean by turnover? Yes? So, auditor can assign meaning to the terms. Okay. Okay. Now, in point number 4, what is there?
Huh?
Stock in trade. Okay.
Okay.
Now, pay attention. What is there in point number 4? Please tell me.
Stock in trade demonstration.
Now, which stock in trade to be taken? Check. The point mentioned in point number 4, only closing stock is to be considered. Okay.
Understood, sir.
The term stock in trade will therefore use that does not include stores, spare parts, loose tools. Okay. Only finished goods and raw material. Okay.
Yes, sir.
Only finished goods. Even raw material and WIP will not include. Okay.
Okay, sir.
Since the objective is to compute stock turnover ratio, how much stock is converted into?
Cash.
Into cash. And you cannot convert your raw material and WIP into cash, na? Yes. So material consumed would apart from the raw material consumed include stores, spare parts and loose tools. Under this calculation clause, calculation of the ratio is also to be stated. As such, computation of various components based upon which these ratios have to be worked out is required to be stated under this clause. There should be consistency between the numerator and the denominator while calculating the above ratio. Okay. Any significant deviation should be pointed out. Is it clear?
Yeah.
And the ratios have to be given for the business as a whole and not to be given any product wise. Okay. So you might be selling 10 different products. So for 10 different products, 10 different ratios are not required. Okay. Only one ratio is required for the entire product. Is it clear?
Yes, sir.
I hope it is clear. Now clause number 41. Shall I read? So this clause talks about if there is any demand raised. If there is any
Demand raised.
Or refund. Refund under what? Under any tax law. Under
Any tax law.
other than the income tax law and wealth tax law. Okay. So if there is any demand raised under what? Under GST, under excise, under customs. Okay.
Yes, sir.
So the assessee may be assessed under various tax laws other than the income tax law. The auditor should obtain the copy of what? All the demand or refund orders. Okay.
Done, sir.
Further, he should exercise his professional judgment for reporting under this clause. It may be noted that even though the demand or refund order is issued during the previous year, okay, it may pertain to a period other than the relevant previous year. Obviously, it may happen, right? It may pertain to earlier previous years, correct? The demand order is issued in the current year, but it pertains to
Old previous year.
old previous year. Then in that case, that also should be reporting. Okay.
Clear, sir.
The auditor should also verify the books of accounts and order passed by the respective department for ascertaining whether any such demand has been raised or refund order has been issued under any other tax law and accordingly report the same. They can cross-verify all the things on the portal, right? If there is any adjustment of refund against demand, is it possible to adjust the refund against demand?
Yes, sir.
So department, you are supposed to pay 10 lakh rupees. Department is supposed to give you 8 lakh rupees refund. So they will adjust na against you. So that also should be mentioned, okay? So there might be some contingent liabilities also, for which there is a what? There might be some contingent demand also, na?
Yes, sir. Futuristic cases.
Cases which are pending, the liability may come, may not come, right? So that should also be mentioned over here, okay? Now, shall we go ahead with the next point? Now, this is an important point practically and academically at both levels. Whether the assessee is required to furnish Form 61. Whether the assessee is required to furnish Form 61A, Form 61B. First of all, we need to understand what are these three forms, right? Do you know what are these three forms?
SFT. 61A is SFT.
61A is SFT, 61B is also?
SFT.
SFT.
If I don't give PAN.
Yes, if I don't give PAN, then you have to give this form, correct? Excellent. Okay. So these are certain forms which a company is supposed to collect, right?
Yes, sir.
And they have to give it to the department, okay? So you have to check these forms. First of all, this clause has to be introduced where the tax auditor has to report whether the taxpayer is required to furnish a statement in these forms, okay?
Okay, sir.
Now, as per Rule 114D, every person referred to in Clause 8 to K of Rule 114C and Rule 114(2)D who is required to get his accounts audited under 44AB and who has received any declaration in Form 60. This form is used by an individual or person other than company or firm who does not have a PAN or enters into any transaction is required to furnish Form 61 containing particulars of such form, okay? So listen carefully. What is Form 60, you know?
If I don't have PAN,
suppose I am a bank. Listen, I am a bank, okay? And you are my customer. You don't have a PAN. So you will give me Form 60.
Understood, sir.
And then I will report that in which form?
Form 61.
Form 61. Is it clear?
Yes, sir.
So this is what Form 61 is all about. What is Form 51A? It is a SFT form, okay? So the auditor, S61A, 61B is with respect to SFT and reportable accounts, okay?
Okay, sir.
And 61 is with respect to PAN details, okay?
Yes, sir.
Now the tax auditor should verify these, whether the assessee is liable to report the transaction in this form or not. If yes, whether the assessee has filled the form or not, right?
Yes, sir.
Or if the auditor is further required to state whether the form contains information of all the details or not furnished properly or not. In case it is not, the tax auditor should furnish the details of the transaction which are not reported. Okay, it is your duty to answer It is your duty to tell the department which all transactions are not reported by the SSC. Is it clear? If the volume of deficiency is large, the tax auditor may state such deficiency in the form 3C and 3CB also, correct?
Yes, sir.
They can also examine the forms through what? Income tax portal, correct?
Reporting portal. Okay,
They
sir.
can also verify through the income tax portal. Is it clear to all of you? Please tell me.
Understood, sir.
Now, whether the assessee or the parent entity or alternate reporting entity is liable to furnish the report as referred to in subsection 2 of section 286. Okay. Now, what is this? CBCR. Remember CBCR?
Country by country reporting.
Yes. First of all, you need to find out an obligation, who is a parent entity, who is an alternate reporting entity. Remember?
Sir.
This clause puts obligation on two people. One is parent entity, one is reporting entity. In some cases, also on constituent entity. Remember?
Remember, sir.
Check whether the threshold global threshold crossed for 6,400 crores or not. Remember? Remember or not? To CBCR to apply, the global turnover should exceed 6,400 crore. Na?
Yes, sir.
Are yes or no?
Yes, sir. Yes, sir.
Now the obligation is on three people. First is on the parent itself. Correct? Check that.
Correct, sir. Correct, sir.
In some cases, it is on the alternate reporting entity. In some cases, it is on the constituent entity. Correct?
Correct.
And if neither of the parent or alternate reporting is reporting, then the constituent entity will report in India. Correct?
Correct, sir.
Remember, I used to give an example. If Sony Japan is not reporting, then Sony India has to report.
Yes, sir.
Or if Sony Japan is not sharing the agreement with us, automatic exchange of information agreement, then Sony India will report. Remember?
Yes, sir.
So the tax auditor should verify if any of the four situation exist or not. Okay. And then check whether the assessee has filled the form or not. Okay.
Yes, sir.
Okay. Now, if he has furnished the following details, whether the report has been furnished by the assessee or its parent entity, you have to tell who is furnishing, whether the assessee is furnishing or parent entity is furnishing or alternate reporting entity is furnishing, name of the parent entity, name of the alternate reporting entity, date of furnishing CBCR, it is within 12 months from the end of the financial year. Remember or not? So actual date on which you have furnished the report, you have to report that, you have to mention that. Okay. Not again very important academically. Okay. So now one last clause is there, which is of GST. Shall we see? Breakup of total expenditure we have to give of the entities which are registered and entities which are not registered. You might be purchasing from two kind of people, correct? From registered dealer and from?
Unregistered dealer.
So you have to give the breakup of that. Okay.
Okay, sir.
Under the GST, specifying the total amount of expenditure incurred during the year. Expenditure in respect of entities registered under GST relating to goods and services exempt from GST should also be given separately. Okay. So let's see which all details we have to give. Let's see the right hand side first of all. This clause requires to provide the details of the expenditure in respect of entities what? Registered under GST, which is further subclassified into four categories. Okay. Now registered people are categorized into how many categories?
Registered people are under four categories.
First, expenditure relating to goods or services exempt from GST. Is it possible?
Yes, sir.
You are purchasing something from a registered dealer, but that goods is exempt from GST. Correct?
Correct.
Or you are purchasing something under composition scheme so that you will not get the credit also. Correct?
Correct.
Or you are purchasing from other registered dealer. Okay?
Sir.
Other registered means where GST is applicable. Okay?
Clear, clear, clear.
And fourth one is total payment to registered dealer. Okay?
Okay.
There is a difference between C and D. What is the difference between C and D? In C, what are you supposed to give?
Sir, expenditure relating to other registered dealers.
That is value of all inward supply from registered dealer other than supply from composition and exempt supply. Okay?
That is ITC. Okay, sir.
So here you are going to give all the details except these 2 points. Okay?
Understood, sir.
So here you are going to give the expenditure. Here you are going to give the total payment. Okay? Expenditure means how much you have incurred on accrual basis and how much you have paid on payment basis. Okay?
Advance, including advance. Okay, sir.
Okay. The word payment should harmoniously be interpreted as expenditure as the combined heading is expenditure in respect of entities registered under GST. Hence, the total expenditure in respect of registered entities, that is sum total of value of A, B, C, should be reported in D. So in D, you're supposed to report all the payments. Okay.
Okay, sir.
Sum total of all the amount should be mentioned over here. Okay. And then they have mentioned the status. You have to check the status of the customer, whether they are registered or not, etc., etc. All those bhashans are given over here. Okay, whether the GST certificate is cancelled, whether it is inactive or not, whether it is cancelled, whether it is going to be cancelled, whether any remark made by the government, so on and so forth. All those things are given over here. Is it clear? Now then, the institute has given the summary of the entire 3CD over here. Okay. You can go through all these summaries if you want. Okay, this is the summary of whatever we have done, but not very important. We have done in very detail. Only this summary will not be sufficient on the day of exam. Okay, so that's it. This is what this chapter is all about. Then there is one last thing which we have already done in PGBP. That is what is the penalty for not doing tax audit? Remember or not? Remember, na?
Yes, sir. Yes, sir.
That's it. Okay. So now you come to question bank, please. Come to chapter number 35, all of you, please. Now we are going to do today the questions which are there in your study material on tax audit report and ethical compliances. Okay.
Okay, sir.
So now there are two types of questions which are there over here. First, there are some case studies which are there over here. We will see case studies in a while. Okay. First of all, we will do the questions over here. Okay.
Sir, you said something called case. This is case study, sir.
Yes, this is case study. What is that case study? I'll brief you up in a while. Don't worry. Page number 35.1 to all of you come. Test your knowledge. 35.1 to test your knowledge. Question number 1. You need to answer this question to me. Read the question and get me the answer, please.
Okay.
What did you say? Ayyappa. Ayyappa, you said.
Yes, sir.
Ayyappa means God, na? Okay. Now, this is a question which is on tax audit, correct? Sunlight and Company, a partnership firm engaged in trading of electronic goods, has a turnover of 265 lakhs. Okay. Examine whether Sunlight and Company is required to get its books of accounts audited mandatorily as per 44 AB. Turnover 2 crore 65 lakhs. Now, this is the aggregate of all receipts. What is the cash receipts out of it?
14 lakhs.
So 14 lakhs is the cash receipt. So how much percentage is the cash receipt?
14 lakhs.
Cash receipt is?
5.28%.
How it is 5.28%? Array 14 divided by aggregate of all receipts. You will compare with the total receipts. Now, why are you comparing with the turnover? Yaar? Are you mad or what? Huh?
4.31.
Tell me what is the total cash receipt? Total cash receipt.
16 lakhs.
It is 16 lakhs divided by
320.
total receipt 325. How much it comes to?
4.92%, sir.
4.92%. Is it within the limit?
Yes, sir.
4.92%. What is the total payment?
Payment is 1 lakh, 1 crore 30 lakhs.
1 crore 35 lakhs. Cash payment?
6 lakh 90.
Tell me how much percentage?
5.15, sir.
5.15. Is it exceeding the limit?
Yes, sir.
Therefore, what is the turnover limit for this assessee for tax audit?
1 crore.
Only 1 crore. 10 crore limit will not be available. 10 crore limit will only be applicable if your cash receipt and cash payment does not exceed 5%. Remember or not? Please tell me. So because the cash payment exceed 5%, only turnover limit is only 1 crore. Therefore, tax audit is mandatory. Correct? Now, will your answer change if the cash receipt indicated is 13 lakhs instead of 14 lakhs? Oh, tell me.
Sir, what to do with this, sir?
Check the solution, then what to do if you don't remember. If the cash receipt is,
13 lakhs, 14 lakhs.
then the percentage of turnover receipt in cash of 13 lakhs to the turnover of 265 lakhs will be how much?
4.91.
4.91 crore, 91%. Okay, listen, it's a very intelligent question. Now you are comparing what? The receipt with turnover. Why? Because in 4480, do you remember that? Now, if your cash receipt is up to 5% of turnover, then you can follow 4480 up to 3 crore. 4480, there are two limits now, 2 crore and 3 crore. Remember or not?
Oh, clear, sir.
So if your cash in 4480, we compare in 44,
80.
we compare cash receipt with turnover, and in 44AB, we compare cash receipt with total receipt. There is a difference in the denominator. Are you able to understand this or not? Please tell me.
Sir,
So now, if my cash receipts are what? Tell me. 13 lakhs instead of?
14 lakhs.
Therefore, my total receipts compared to the turnover will be only 4.91%. Correct? Therefore, what will happen to me? Tell me. I'll be eligible to claim 4480 up to 3 crore turnover, and my turnover is 2 crore 65 lakhs. Correct? So can I claim 4480 or not? Please tell me.
Yes, sir.
And if I claim 4480, am I supposed to do tax audit?
Not required.
Then tax audit is not required. Check it, please. Intelligent question. Yes. Very intelligent. Very intelligent. Palani. Question number 2, you will solve. Solve and then let me know. So Mr. Abhinav Ahuja runs a travel agency. Okay.
Okay, sir.
His commission, total commission receipt for the year 23-24 is 287 lakhs. The detail of receipt and payment made by him during the year are as follows. Okay. So what is the question, which is Mr. Abhinav contended that he is not required to get his accounts audited since his turnover does not exceed what?
3 crore.
3 crore. And is eligible to declare income as per presumptive. First of all, he is not eligible for presumptive income. Why?
Agency business.
Yes. If you are engaged in commission business, agency business, 4480 is not available. Remember or not?
Remember, sir.
So now we need to check 4480 is not available. Now we need to check whether 1 crore limit is applicable or 10 crore. Okay.
Okay, sir.
For that, let's see the receipt. Let's see the total receipts. Total receipts is how much?
287 lakhs, sir. Top.
Total receipts. Out of that, can you tell me which all can be considered as cash receipt?
13 lakh.
Whether Beam UPI can be considered as cash receipt?
No, sir.
No, that is online. Account paycheck online. Bearer check is cash receipt. Yes or no?
Yes, sir.
So only this is cash receipt. Rest all can be considered as online. So just do 13,35,000 divided by
Sir,
what?
52,500.
Extra 52,500 is also received in cash. Okay. So in the numerator, 52,500 more will come. Correct?
Yes, sir.
Yes or no? Tell me please. How much it comes to?
4.83%.
So 1335 plus 52,000 is the cash divided by 287 into 100. Come, how much it comes to?
4.83.
Let's check it from here. 4.83. Is it clear?
Yeah.
So always remember in 44AB, what we compare?
44AB, we compare cash receipts with total receipts.
And in 44AD?
Cash receipts with total turnover.
Yes. Now what is the total payment and how much is the cash payment?
Cash payment is 20 lakh 3,000. Total payment is 258,000,000.
So it comes to
7.9.
gone.
Tax audit applicable.
Gone. 10 crore limit cannot be made applicable. Yes or no?
Sir. Yes, sir.
Do tax audit. Okay.
Yeah.
Is it clear?
Pakka, sir.
So easy chapter.
Yes, sir.
Question number 3. Solve fast, very fast. Alani. How is this question? Ayyo.
Yes, sir.
Ayyo question or simple? What do you mean by Ayyo?
Ayyo means something worried, sir. Something worried or something.
Something worried. This question is Ayyo or simple?
Sir, it is eye opening only, sir.
It is a simple question. We have done a similar question earlier. X Limited, an Indian company, paid interest of 95 lakh to X INC, a non-resident associate enterprise. Okay, this is X Limited. This is X INC, correct? Non-resident. Hey, how much interest you are paying to it? 95 lakhs. Okay.
Okay, sir.
X also obtained a loan of 5 crore rupees at 10% from YINC, a foreign company in which it holds 20%. So there is another company YINC. So it took a loan of how much? Tell me now.
5 crore,
And paid interest of how much?
10%.
50 lakhs. Year interest is how much? 95 lakhs. Okay. Now, this entity, is it associate entity? No.
Yes, sir.
No, because only 20% stake, correct?
More 51% stake should be said. Okay, sir.
Only 20% stake is there, na? 26% stake has to be there, correct?
Correct, sir.
Now, this is not associated, but this entity has deposited how much?
2 crore.
2 crore. So, do you remember? If your non-resident associate entity has deposited a matching amount and then that loan is given to you, then that interest is covered under what? 94B. Remember?
Remember, sir.
So how much is matching over here?
2 crore.
2 crore is matching. Therefore, entire 50 lakh will not come. Only 20 lakhs will come. Correct?
Correct, sir.
Now, 95 plus 20 comes to how much?
115 lakhs.
115 lakhs. Is it greater than the limit specified in 94B?
It is greater than 1 crore, sir.
Yes. Therefore, 94B will be applicable. Are you clear or not?
Yes, sir.
This is what this question is all about. Examine the reporting requirement. Yes, it is applicable. 94B is applicable. You have to report where? In form 3CD, clause 30BA. Is it clear?
Yes, sir.
And in form 3CA and 3CB also you have to mention if there is a difference in opinion. Oh, is it clear?
But tax audit, we have to remember the class number, sir.
You have to try to remember if possible. Okay.
Okay, sir.
Very difficult to remember, I agree.
Okay, sir.
Now, question number 4, beautiful question. Go through it or we will do it together because this you will not understand.
Yes, sir.
Shall I read?
Yes, sir.
Here I have to give you some explanation. ABC Limited is engaged in transportation of what?
Building materials, sir.
Building material and transportation of what?
Goods to a contractor.
Goods to a contractor. Okay.
Okay, done, sir.
It made payment for hiring dumpers for this.
Is a hiring dumper?
Dumpers. They are hiring dumpers for transportation. Okay.
Okay, sir.
The company has not deducted tax at source on the ground that since the payment was for transportation of goods and not for renting of machinery equipment, such payment could not be termed as rent paid for use of machinery under 194I. Okay. So this is a very, very difference in opinion point. You have to be very careful with the first paragraph. I am reading it. ABC Limited is engaged in what? Transportation of building material and transportation of goods to contractor. What is the primary role of ABC Limited? Transportation. Correct?
Correct, sir.
Now it made payment for what?
Transportation.
Because for transportation it wants something, na? Dumper bumper required na for transportation. Yes or no?
Correct, sir.
What is ABC Limited engaged into? So for transporting goods it requires something, na?
Dumper.
So it made payment for hiring dumper. The company has not deducted TDS. On what ground? Since the payment was for transportation of goods and not for renting out machinery and equipment, such payment could not be termed as rent paid. Assessee is saying what?
It is for the transportation of goods.
It is for transportation of goods and not for hiring the dumper. Okay. This is the argument of the assessee. Why are you shocked? Assessee might be correct, might be incorrect. That we will see, na?
Okay, sir.
But we are not making any conclusion who is correct.
Okay, sir. Done.
We need to understand the point of view of both the party first. What is the point of view of assessee? Tell me, repeat once again.
Sir, the assessee is saying I am doing only transportation service. I am not renting out any machinery.
Yes, assessee is saying I am only doing transportation. I am not doing any machinery renting. Therefore, 194I would not be applicable. The tax auditor, however, is of the view that. What is the tax auditor saying? The transaction being in the nature of what? of shifting goods from one place to another would be covered under 194C. Okay, he relied upon a Gujarat High Court judgment. Is it clear?
Okay, sir. Done.
Now, what is the reporting responsibility of tax auditor in such a case and the consequential ethical implications? Shall we see?
Ethical implication. Okay, sir.
Now, in clause 34A, form 3CD, tax auditor is required to report whether the assessee is required to deduct or collect tax. Yes or no? Clause 34 is about TDS implications, correct?
Understood, sir.
Now, while answering the applicability of TDS, a number of debatable issues may arise. Yes, we have seen that in the chapter. Correct or not?
Yes, sir.
Before the assessee as well as the tax auditor. The tax auditor may have a difference of opinion with regard to what? Applicability. Correct? So, in that case, what is the obligation of tax auditor? Please tell me.
Both the views, sir.
He has to give both the views. He has to report the difference in opinion in form 3CA. Yes or no?
Yes, sir.
Tell me now loudly.
Yes, sir.
That this requirement is contained in the guidance to no tax audit. Also in clause 21B, he has to mention the amount inadmissible, right?
Okay, sir.
In case the auditor does not comply with the requirement under these clauses, can I say he is not exercising due diligence properly? Tell me. If he is not, what is his duty in case of difference in opinion, Palani?
Difference in opinion means here.
We are not here to comment on this. In this chapter, don't comment what is correct, what is wrong. Okay? Whether dumper will come in 194 I or C. We are not interested in that. I am not interested.
Clear.
You tell me what is your obligation as a tax auditor. Again, I am saying I am bloody not interested whether this expenditure is subject to TDS or not. I am giving my view. What is my view as an auditor? Tell me.
Yeah, my view as an auditor, this view is 190%. That's it. I will report both.
You have to report it. Yes or no?
Yes, sir.
You are not supposed to put up obligation on the assessee that you have to disallow, you have to deduct. You are no one to tell all those things. Okay.
Understood, sir.
What is your obligation? You have to report in the tax audit report properly. If you do not report, then you are under guilty. Yes or no?
Pakka.
Did you understand what I said, Palani, mister?
Sir, here we should not find fault, sir. Here we should report. That's it, sir.
That's it. Our duty is to report. That's it.
Clear, sir.
And if you do not report, then are you deemed to be guilty or not? Read. This is the relevant clause of professional ethics which you will learn in audit also.
Sir, in each and every answer we have to put this ethics clause.
Yes, you have to put this clause. You have not exercised due diligence. If the auditor has not exercised due diligence. Okay.
Understood, sir.
Understood na? Pakka. Palani, ayyo question or simple?
Sir, we will go to the next question, sir.
Tell me na, ayyo or simple? Palani. Shall I read the next question?
Okay, sir.
A search was conducted. Beautiful question it is. Now, 2 times this question is repeated. This question is also repeated in case study. Where?
Case study.
In case study also this question is again repeated. Shall I read?
Okay, sir.
A search was conducted under section 132.
Remember, sir.
In case of, now just listen to the entire facts very clearly. A search was conducted under 132 in case of LMN Jewelers.
LMN Jewelers.
A gold jewelry retail chain on 28th Feb 2023. Okay?
Nice, sir.
Is this clear till here?
Clear, sir.
As part of post such inquiry, data from the billing software was analyzed. On the analysis of the data, it was found that company was in violation of 48.3. Means?
Sir, he has made payment next of cash of 10,000.
They have made, yes, that is Palani shortcut in life. Palani.
10,000 more than 10,000, sir.
In cash. That's it. In a major way to the tune of how much?
20 crore.
Purchase of gold. 20 crore purchase of gold in cash. Okay. Now, in order to verify the finding, culled from the digital data, some of the customers' whereabouts were available from the computer records. So, we want to verify now. As a department will verify or not? Tax auditor will not come now, will come later. First department will do search.
Okay, sir.
The department will contact the customers or not?
Customer. Okay, sir.
Yes?
Yes, sir.
Arey, whether you have sold him to the jewelry or not in cash. Arey, department will verify the contact the customers or not.
Understood, sir.
So the department contacted customer and their statements were recorded under oath. These customers admitted under oath that they sold golds and received the amount all exceeding 10,000 in cash. Gone or not? Assassi is gone.
Yes, sir.
The fact which emerged from the inquiry is that Element Jewelers Limited purchased old gold and make payment for these purchases in cash, even if they exceed what?
10,000.
10,000. Okay.
Understood, sir.
So what is the mistake done by the assessee? Understood?
Yes, sir.
Now, as an auditor, what you do? What you have to do? Tell me.
I have to report. That's it, sir.
See what you have done. However, the tax auditor has mentioned yes. Has mentioned what?
Yes.
Where? In response to a statement in subclause A of clause 21D on whether the expenditure covered under 48.3 rule which were made by account pay check, the tax auditor said yes. Tax auditor said what?
Yes.
Yes. Is he supposed to? Are 20 crore rupees cash payment made and you are saying yes, the payment were made by check.
I checked that. No, sir. No.
Do you read? Do you listen to me carefully or not when I am saying Palani? Listen to me, Palani. How much cash payment has made?
20 crores, sir.
And in clause 21, what is the requirement? Palani, it doesn't make sense to repeat the same thing again. You please pay attention once and for all properly, yaar. Please, yaar.
Yes, sir.
In clause 21, what is the question in clause 21? Read na. What is the question written in clause 21?
Covered in section 48.3 and to rule 60D were made by account page.
And what you said? What you said as an auditor? What you should have said? See what the auditor has to say. The tax auditor submitted the standing that the standing instructions were given by the management. What? Of the entity that to the employees to make payment about 10,000 only through account pay check, account pay drive, other permissible modes. And copy of these instructions were verified by him. So what is the auditor saying?
He has verified.
He has not verified anything. You don't read the question properly. You don't read anything properly, Palani. You'll be in trouble in CA final if you don't know how to read the things. I cannot teach you all these things, please. I cannot teach anybody how to read English, please. What is written over here?
The standing instructions are given by the management to the employee.
Yes.
And a copy was given to auditor.
Yes. What is the standing instruction given by company to employees?
That anything above 10,000 should be made in account pay check.
Yes, that instruction you have taken. Only that much is sufficient to report in tax audit. Huh? Will you not check the transactions? Just because the company has given you a letter that everything is above 10,000, you will not check. Then what are you doing being an auditor? Company will always say, na, everything is correct. Company is giving you a letter that we have given an instruction to employee that every payment has to be more than 10,000. Will you accept that as an auditor?
No, sir.
Then why the hell you have written yes? Read ahead. He further submitted that he had also taken a representation from management that net payment in cash to any person did not exceed 10,000. Also, he mentioned that the test check conducted by him did not reveal any violation. Okay. What he said?
Sir, he said that.
Just tell me whether the auditor is at fault or not. Tell me. Then we can go ahead. Otherwise, the entire discussion will go on a wrong side.
The auditor is at fault, sir.
Can he make such arguments or what?
No, sir.
Did you understand what all points he has said?
He has said I have verified the standing instructions. I have done test check and did not find any violation. Yeah.
Point number 5. This is the probation. I am not interested.
Okay, sir.
Probation everybody knows. This is the tax audit report clause. I am not interested. I am reading from here. The tax audit, Palani, are you listening or else we'll continue tomorrow?
I am listening, sir.
The tax auditor is required to point out because these are very important sessions. All new questions added by institute. The tax auditor is required to point out, read with me, the violation of the provisions of 48.3 thereof involving expenditure to a person in a day exceeding 10,000 rupees. Otherwise, then by 4 modes. Okay.
Okay, sir.
However, in this case, the tax auditor has certified that there was no such
Instance.
Those such instances aggregate to large quantum of what?
20,000.
20,000. You are sleeping. You are sleeping. You are literally sleeping. Please, Palani, don't do this, yaar. Please, yaar. It's a very important session, yaar. Please, yaar. Please, yaar. If you say 20 crore as 20,000, it means you are absolutely not paying attention, yaar. How can I teach you this then?
Sir, 20 crores, sir. Yes, sir.
Please don't do this, yaar. Please. Please pay attention, yaar. It's a very important session, yaar.
Clear, sir.
The tax auditor should have considered the nature of business. Are you listening or not, yaar? Please. The tax auditor should have considered the nature of business. Being a tax auditor, what is your work? Only take a management representation letter and just answer based on that. Then the audit will report. Even a small kid of 5 years can do the audit then.
Yes, sir.
Whose audit you are doing?
Sir, I am doing audit of jewelry, sir.
Jeweler. Should you know the nature of business or not of a jeweler? What kind of
Yes,
business
sir.
nature it is?
Yes, sir.
Jewelers deal in cash or not?
Yes, sir.
You should have checked that detail. Why have you not checked that? Are you able to understand my questions or not?
First, you need to understand nature and should have checked the detail.
The jewelry business of the associate accordingly undertaken necessary check to verify whether there are cash payment in violation of 48.3, who should have made use of the audit tools which are available to find out such payment expeditiously and accurately where the data is voluminous. In this case, considering the nature of business, namely jewelry business, the onus was on the tax auditor to verify the same before reporting in Form 3CD. Mere reliance on the certificate issued by management is not acceptable. Also, even in case where the reporting has been done on the basis of certificate, the fact has to be reported on an observation in Form 3CA, which he has failed to do so. So, what all things he has not done? Please tell me. Please summarize all of them, otherwise I am not going ahead. As an auditor, what mistakes he has done?
Sir, first, he has relied on management representation, which is wrong, sir.
Which is wrong. He should not rely only on the management representation letter. Then,
Considering the nature of business.
considering the nature of business, he should have found out, he should have used some audit tools to identify whether cash payments are made or not. Correct?
Yes, sir. Then he should have reported in the para 3 that this is an observation.
Yes, para 3 he should report in Form 3CA. Thus, in this case, the tax auditor has failed to exercise due diligence. Yes or no?
Yes, sir.
He has failed to obtain sufficient information. Yes or no?
Yes, sir.
Therefore, he is deemed to be guilty. Are you clear?
Yes, sir.
Beautiful question. Beautiful question. Yes?
Yes, sir.
Question number 6. Shall we read?
Yes, sir.
Are you ready or not?
Ready, sir.
How much percentage ready? Tell me. How much percent ready?
Sir, I'm ready, sir. That's it.
No, how much percent? How much percent?
100% ready.
100% ready, sure. I want more than 100%.
Yes,
Ready more than 100%.
yes, 100%, sir.
Let's see. This is also a beautiful question, Palani. XYZ company, a firm engaged in interior decoration, employed 20 new employees. On what?
1st April 22.
At a monthly salary of
25,000.
to be paid by account paycheck. In addition, each employee was entitled 10% employer contribution to recognized provident fund. Okay.
Okay.
The employees were also entitled to transport allowance of 3,000 rupees per month paid in cash. Okay.
Okay. Okay.
Now the gross total income of XYZ company included profit and gain of 62 lakhs. Okay.
Understood, sir.
Now the firm claimed deduction under 80JJAA of 18 lakhs, being 30% of 60 lakhs. Okay. Now how 60 lakhs came? 80JJAA we have done lot of times, right?
Lot of times.
So they have done 20 new employees into 25,000 into 12. Okay.
12 months. Okay, sir.
30%. Now, the chartered account on the basis of the report of a chartered accountant. The chartered accountant has issued Form 10DA. He has to issue a Form 10DA, certifying that JJAA is correctly computed. Correct?
Correct.
Now, can you directly rely on that report? Please tell me. Now, see,
Yes, sir.
I can rely on the report, but the person who has given the report, now that person himself is under question now. Okay. Shall I read?
Yes, sir.
The same chartered accountant was also the tax auditor of the firm. He was the same person. The tax auditor himself gave the report. Okay.
Okay, sir.
Now, the chartered accountant contended that emoluments does not include employer contribution to PF. Correct. Correct. Okay.
Yes, sir.
But the problem over here is the total emoluments will include 3,000 rupees transport allowance also. Will it include or not?
Yes, sir.
Therefore, the salary of the employee will come to 28,000.
Correct, sir.
And if this is 28,000, please tell me, is the assessee eligible for 80JJAA?
No, sir.
Not eligible. Are you clear?
Clear.
Therefore, the chartered accountant is guilty of giving this what?
Wrong certificate.
Wrong certificate. Are you clear or not?
Clear.
So I want you to read this later on at home now. Now I'm not reading this. Is it clear?
Done, sir.
Question number 7. The income tax department collected documents from ABC Bank. From which bank?
ABC Bank.
Which revealed that Messrs. Alpha Travel and Consultancy Services has remitted substantial amount abroad. Okay. The documents collected include Form 15CB issued by Chartered Accountant, list of passengers, copy of their passport, date of travel, invoice raised by foreign party on inquiring from the passenger and verifying their passport. It is found that they did not travel abroad during the dates mentioned in the documents. Arey baap re. It means the remittance which is made outside India is for
Some other purpose.
some other purpose. Actually, there was no customer who was traveling outside India. Correct or not?
Yes, sir.
Now, how will the chartered accountant will what defend to it? We have to see that. Okay. Further, the passenger denied any sort of transactions with Alpha. Passenger said that we have not done any transaction with Alpha. The department therefore concluded that the amount were remitted abroad on the basis of false invoices for wrong reasons, leading to FEMA violations, and that the Form 15CB issued by chartered accountant facilitated such violations. During the 9-month period in question, the chartered accountant has issued 120 certificates involving 30 crore remittances. How much?
120 certificates involving 30 crore remittances.
Now, the chartered accountant submitted that he has issued 15CB based on the invoices produced by the company and verifying the KYC documents of the signatory. He, however, failed to bring on record the invoices. He further submitted that since he was not the statutory auditor, he did not examine the books of accounts before issue of 15CB or conduct due diligence of its business activity. He had charged rupees 3,000 for per certificate. Mostly the fee was collected in cash. Some part of the fee was credited to the bank account. What do you feel? Is he guilty?
He is not guilty, sir. How can he find out behind the thing?
Check. Form 15CB is a certificate of an accountant wherein he certifies that he has examined. Yes. Gone. You're gone, Palani. You're gone. He has what?
Examine.
You give a declaration that I have examined the agreement between the remitter and the beneficiary requiring such remittance as well as the relevant documents and the books of accounts required for ascertaining the nature of remittance and for determining the rate of deduction and tax at source. So you are giving a declaration that I have examined. I have
examined the agreement and the books of accounts.
The chartered accountant certifying the form undertakes to have verified the agreement between the remitter and the beneficiaries. Okay. In this case, however, the chartered accountant mentioned that he has only verified KYC of signatory to invoice and the invoices thereof. He had not only failed to justify as to how verification of invoice was considered as sufficient compliance for certifying the forms, but also failed to bring on record the said invoices. He did not have the invoice also. Yes or no?
Yes, sir.
Louder.
Yes, sir.
Thus, he failed to provide any basis on which he relied for issuing Form 15 CB certificates to the company. Therefore, gone. He's gone. Ayo. He is Palani.
Gone.
Gone. Gone, gone, gone. Are you clear or not?
Yes.
Now, let us come to what now?
The case study.
The case study questions. Okay. Now, the case study questions are what? I'll tell you. Shall I explain you the necessity of this case studies first? Tell me now.
Yes, sir.
Now, what is the necessity of this case study? This case study is nothing but the tax auditor has done some mistake, maybe. Who has done some mistake?
Tax auditor.
And the institute is taking disciplinary committee. Institute disciplinary committee is taking some action. Okay, will they take?
Yes, sir.
The ICAS disciplinary committee will take an action or not against a chartered accountant?
I will take, sir.
Yes. So how a chartered accountant is what?
What?
How a chartered accountant is going to now
Respond to the
respond to that particular action. And whether his response will be accepted by the institute or it will be
not accepted by the institute.
It will not be accepted. That is what we are going to learn in this case studies. Are you clear?
Oh, yes, sir.
So every case study will bring about, first of all, the relevant provision which is applicable in this issue. Okay.
Correct, sir.
Then which clauses the chartered accountant has violated under the Chartered Accountant Act?
Yes, sir.
What is the facts of the case?
Facts of the case.
Then what is the ultimate conclusion? Contentions of the chartered accountant?
Correct, sir.
What is the ultimate conclusion?
Yes, sir.
And what are the key takeaways? What are the learnings out of this case study? Okay.
Okay, sir.
So shall we start?
Ready?
Out of 5, 3 case study I am going to discuss because 2 are same as what we have done in the 7 questions. Okay. So the 7 questions which we have done now, jewelry wala we have done, na jewelry wala. One of the case studies based on that only. Okay.
Okay, sir.
And one of the case studies based on 15 CB. Okay.
Okay, sir.
So the first one is a new one. Shall I read?
Yes, sir.
This case study highlight the ethical aspects which have to be considered by chartered accountant while issuing what?
Tax audit report.
I want absolute attention from you. Will you?
Yes, sir.
The issue involved in this case study relate to the responsibility of the chartered accountant in relation to reporting clause 34A, 21B, that is with respect to TDS. Okay.
Okay, sir.
For non-deduction of tax at source and consequence disallowance under 40A1A. Okay.
Okay, sir.
Now 194J requires TDS blah 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 at 10%. We all know that, right?
Right, sir.
40A1A disallow 30%. That also we all know, correct?
Correct, sir.
Then the reporting requirement is all these things. We all know that which all columns we want in the reporting requirement, correct?
Correct, sir.
And in TDS also we want all these columns, correct? And this number, all these details. Okay, I'm not interested in all these things. Obviously, all these things will be given in the exam if they want to ask something like this. We are interested from here. What is the what?
Fact.
What is the fact of the case? Okay. Now, a survey was conducted. Survey was
Conducted.
on the premise of an hospital. Okay.
Understood, sir.
To which it was found that the hospital has made a payment of consultancy charges to doctors. Hospital has what done what?
Made payment of consultancy charges to doctors.
To doctors. Okay.
Either in yes.
Without deducting TDS, even though the payment exceeded how much? 30,000 limit mentioned in 194J. Yes? Till here, are you clear?
Till I hear and clear, sir.
Now, in the tax audit report, the tax auditor did not mention anything. Okay?
Okay, sir.
Okay?
Okay,
Now,
sir.
this is the facts of the case. Now, what are the contentions of the chartered accountant? Shall we see?
Yes, sir.
First of all, we are not saying whether it is a mistake or not. Okay? Right? We are no one to say whether it is a mistake or not. We have to look into the contentions of the other person. Opportunity has to be given to everybody in this country. Now, the chartered accountant contended that doctors did not provide any professional service to the hospital. Okay? What is the chartered accountant saying?
doctors did not provide any service to hospital.
Any service? How? Let's see. Okay.
Yes, sir.
The provision of 194J would not be attracted. He explained his contention that sometimes, due to unavoidable reasons or circumstances, the hospital collected the consultation fees on behalf of the doctor and same is then paid or remitted to the doctor. Such payment are not expense of hospital. Hence, the question of TDS does not arise. Did you understand the issue which is raised by the chartered accountant?
The fees is coming to the hospital.
See, what has happened? Say, doctor is there, patient is there. Okay. Now, the hospital has given us place to the doctor. Okay. The patient directly comes to doctor. Patient makes the payment to doctor. Okay. But sometime it is not possible to make the payment because of some server issue. So in that case, the hospital collects that and hospital remits that. Did you understand?
Yes, sir.
So therefore, in that case, it is not the expense of hospital. This is the argument of the chartered accountant. Okay. Now, the chartered accountant is also mentioning a judgment in favor. You have to cite some case law in your favor. He also contended that as per the decision passed by the special bench of tribunal in case of Maryland Shipping and Transport versus ACIT, 40A1A is applicable only in respect of amount of expenditure which are payable on 31st of March every year. And it cannot be invoked to disallow the amount which have been actually paid during the previous year without deduction of tax at source. In this case, all payments were made to the doctors before 31st March. Do you remember that? We have done this issue in class also. Palam Gas Service case law in the chapter of PGBP, where the assessee was making an argument. Listen, see to me, see me, see here, towards me. We have done one case law in the class that there was one assessee who was making argument that whatever payments are made, whatever amount is paid during the entire financial year, on that TDS will not be applicable. Only which is outstanding on 31st March, on that amount TDS will be applicable. Do you remember that? We have done a case law of Palam Gas Service in class. You can go and check. If you don't remember, that is not my mistake. Okay. Remember or not? Okay. Therefore, according to him, the payment made to doctors by way of reimbursement collected for payment patient does not fall under the ambit of TDS, and even if does not, the same would be not disallowed under 40A1 due to the above decision. What is the assessee saying? The chartered accountant is saying that the hospital is collecting and making the payment. Okay. Since the payment is made, it is not payable on 31st March. I have told you that when you go to, if you don't remember, then tell me, sir, don't remember. In 40A1 and 1A, it is written that where an amount is payable and in respect of which if TDS is not deducted, then that is disallowed. The word payable word is used. So the Supreme Court in the case of Palam Gas has said that payable does not include only outstanding. It also includes something which is paid during the previous year. Otherwise, the entire purpose of section 41A will be defeated. Did you understand what I said? So the same argument the assessee is making over here. Assessee is citing some other case law. Where? Some other case law earlier. Some High Court or tribunal judgment where the tribunal has said that if it is payable, then only 40A1 is applicable. If it is paid, then it is not applicable. So assessee is saying that hospital is collected and paid. So not applicable. Okay.
Oh, yes, sir.
But it may be noted that in Palam Gas Service, it was held that it is applicable. Even for paid amount, it is applicable. Even a CBDT circular is saying that it is applicable. Now, what is the conclusion? As per the guidance note on tax audit issued by ICAI, the tax auditor is required to report as to whether the tax is deductible under any section, blah, blah, blah. If tax has not been deducted, on the basis of what? Tell me. Then you have to mention that or not in the tax audit report. Please tell me.
Yes, sir.
On the perusal of the profit and loss account of the hospital vis-a-vis the working paper of the CA, it has been noted that the consultancy charges were shown as expense in P&L account. The chartered accountant was lying. The chartered accountant said earlier that CA said that these are not considered as expenditures.
Yes, sir.
CA said or not?
Yes, sir. Yes, sir. Yes, sir.
But when they gone through the P&L account, it was shown as an what? Expense in the P&L. Thus, the contention that the hospital collected fees, blah, blah, blah. Since such expenditure has been debited, TDS is applicable. In this case, the CA had ignored the reporting requirement in Form 3CD and has not exercised its due diligence. Gone. Gone. Okay. Why gone? Because the consultancy charges were shown as what?
Expenses.
As an expense. An expense in one hand is income of another hand. Yes or no?
Yes, sir.
Therefore, TDS should have been deducted. If not deducted, that expense will be disallowed. Yes.
Pakka, sir.
What are the key takeaways from here? From this case study, what you learned? The tax auditor should exercise what?
Due diligence.
While reporting under various clauses of Form 3CD. Correct or not?
Correct, sir.
In case he has a view that a tax is not deductible by virtue of court judgment, then he should what? Disclose the same in his report. So this is how the institute has designed the case studies for you all. Okay.
Okay, sir.
Shall I go ahead
Yes, sir.
with the second case study? Please tell me. The second
Okay, sir.
case study is same. I am not reading. See. 30 crore, ABC, PQR jeweler.
Element சொல்றாங்க. Okay, sir.
Same case study. Okay.
Okay, sir.
You go through it please later on. Okay.
Done, sir.
Shall I read the third case study now?
Yes, sir.
Are you ready or not, Mr.? The great Mr.
Sir, ready, sir.
Sure.
Sure, sir.
Shall I read?
Yes, sir.
This case study highlights the ethical aspects which have to be considered by a chartered accountant while issuing what?
Form 10C.
What is Form 10 CCB?
certificate.
Some certification that the profit link deduction is properly computed. Okay.
Okay, sir.
Now, while issuing Form 10 CCB, chartered accountant has to ensure that compliance with the conditions stipulated under the relevant sections are fulfilled. Okay.
Clear, sir.
Now, since the profit link deductions are available for a specified period, 10 years, in case of a deduction under ATIA, the chartered accountant has to ensure that the 10-year period has not already elapsed. Okay.
Okay, sir.
In case he notices the error after issuing the form, the 10 years period has not already elapsed. In case he notices the error after issuing Form 10CB, he should withdraw the report immediately and inform the same to the assessee immediately. Okay. So what you understood out of this paragraph? Read it once again. You have not paid attention to what I have read.
To some extent.
There is nothing great in this to understand. In this section, chartered accountant is supposed to issue one report. Okay.
Yes, sir.
Louder.
Yes, sir.
And in the report, he has to check all the conditions, correct?
Yes, sir.
One of the condition is that 10 years is not expired. Okay.
Understood till there.
Now, while signing the report,
some error was there.
while signing the report, okay, he signed it. But later on,
I found an
he
error.
realized that he has wrongly signed. Okay.
Yes,
So he
sir.
withdraw the report. He withdraw the report. Okay.
Yes, sir. Yes, sir.
This is what the facts of the case is. Okay.
Okay. Fact. Ida fact.
This is the relevant section. Okay.
Relevant law.
This is the relevant rule and Form 10 CCB requirement. Okay.
Okay, sir.
So we will read from here. Facts of the case. Shall I?
Fact. Fact. Okay, sir. There's a word about
Where says XYZ and company is a firm engaged in developing, operating and maintaining highway projects. Filed return for AY 1617 on 30th September 2016. Claiming deduction on the basis of report of Form 10 CCB issued by chartered accountant. Chartered accountant issued the form and the assessee filed the return. Okay.
Okay, sir.
However, in August 2017, it came to the notice of chartered accountant that the 10-year period for which the company had been eligible to claim deduction had in fact claimed deduction had expired in AY 1615. Just read this entire paragraph once I want you to. Then I will read it. So now I will read it once, the facts of the case, what exactly is happening. Okay. So Nexus XYZ is a firm engaged in what? Developing, operating and maintaining a highway project. Filed its return of income for AY 1617 on 30th September 2016. Okay.
Yes, sir.
claiming deduction under section 80 IA on the basis of form 10 CCB issued by chartered accountant. Okay. So
Yes,
on the
sir.
basis of a CA certificate, they have claimed the deduction. However, in August 2017, that is after 1 year, it came to the notice of chartered accountant that the 10-year period for the company had eligible to claim deduction has already expired in 15/16. Now the chartered accountant withdraw the audit report and filed a revised audit report and filed the revised return under 139(5). Now during that time, it was allowed to file revised return within 1 year from the end of relevant EY. Okay. Now today you cannot file a revised return. Understood or not? Because today you have to file the revised return by 31st December 2016 only. Correct?
Yes, sir.
But that time it was 1 year from the end of relevant EY, so there was no issue in filing a revised return. Okay. Accordingly, the firm filed a revised return under 139(5) for 16/17 on September 2017. Okay. The AO completed the assessment on the basis of the revised return and issued what?
Assessment order
On 1st of March 2019. Is it clear?
Yes, sir.
So now what to do? Tell me please. What is the can you find any fault of this year?
The CA, he did not find, I mean, he has withdrawn the report also.
So he has done everything correctly now according to you. Yes?
Sir, sir.
So now the chartered accountant intended that as soon as he came to know the error, he withdraw his report, correct, and informed the assessee accordingly.
Correct, sir.
And assessee accordingly filed a revised return withdrawing the claim under 80 IA. He informed the Commissioner of Income Tax about the same in March 2019 at the first available opportunity, since he was neither the tax auditor of the company nor was he representing the assessee before the tax authorities. He added that the AO had completed the assessment on the basis of revised return, correct? Further, according to him, his report in Form 10 CCB was neither the subject matter at the time of assessment nor at the time of penalty proceeding. The basis for conclusion: the claim for deduction under 80 IA was made by the assessee on the original return supported by Form 10 CCB issued by chartered accountant. However, as soon as the chartered accountant realized the error, he withdrew the report. Okay, so he is not guilty. Is it clear? He is not guilty at all. The chartered accountant should exercise due care while issuing audit report. What are the key takeaways? What are the key? The chartered accountant should exercise due care while issuing audit report and ensure that all conditions stipulated under the relevant provision of the Income Tax Act 1961, including the time period for claim of deduction, are satisfied. In case he notices an error subsequently, he should immediately withdraw his report and communicate the same to the assessee immediately. Is it clear?
Sir.
Now, shall I go ahead?
Yes, sir.
Now, case study. What is this case study? Case study 4, one last case study, because the case study 5 is same as what we have done earlier in question number 7 of test your knowledge. Okay. Case study 4 we will see. Now this is a big one. Huh? See. It's a beautiful case study. It's a beautiful one. Shall I read?
Yes.
This case study highlights the ethical aspects which have to be considered by a chartered accountant while issuing audit report in Form 10 CCB and conducting the tax audit. The issue involved in this case study relates to the responsibility of the chartered accountant to ensure compliance with the stipulated conditions for claim of profit-linked deductions under Chapter 6A. While issuing audit report, he has to ascertain whether a certain activity carried on by the assessee would constitute manufacture for claim of deduction under 80IE and whether the condition for claim of deduction have been satisfied in a case where the assessee is the company which had taken over a sole proprietorship concern. Okay, I want you to read this much first. This is a dangerous case study. Paragraph by paragraph we will interpret. Okay. Read this much. Shall I? Now again I am reading. This case study highlights the ethical aspects which have to be considered. Ethical aspects by the chartered accountant while issuing an audit report under Form 10 CCB conducting tax audit. The issue involved in this case study relates to responsibility of chartered accountant to ensure compliance. So this case study first of all talks about the responsibility of the chartered accountant to ensure compliance with the stipulated conditions for claim of profit linked deduction under Chapter 6A while issuing audit report. He has to ascertain whether a certain activity carried out by the assessee would constitute. He also has to ascertain what? Whether the activity which he is carrying on is what? Tell me.
Constitute
Manufacture or not. For claim of deduction under ATIE, whether the conditions for claim of deductions have been satisfied in a case where the assessee is a company and which has taken over sole proprietary concern. The actual case on the basis of blah 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 blah. I'm not interested much. I'm interested in what? I'm interested in the facts of the case. Shall I read this?
Sir.
Tell me na Palani.
Yes, sir.
Alpha Packaging Services Limited, located where?
Guwahati.
Has been claiming deduction under 80 IE of the Income Tax Act 1961 since previous year 1617. Okay. On the ground that it was engaged in manufacture or production of an eligible article or thing. Okay. So what is there in this paragraph?
Sir, that company was claiming 80.
Company is claiming 80 IE on the ground that it is manufacturing or producing article or thing. Correct?
Correct.
Now, a survey was conducted on the company, followed by a scrutiny of the case, showed that the company was merely involved in packaging washing powder of a leading brand. Okay?
Yes, sir.
So, company was only doing what? Packing.
Of the washing.
Turf obtained from Unilever Limited and giving the same back to them. Okay? The tax audit report as well as the report in Form 10 CCB for claiming deduction under 80 IE was issued by what?
Same chartered accountant.
Was issued by the same chartered accountant. Okay?
Ah.
Is it clear?
Clear.
Now, a show cause notice was issued by Assistant Commissioner of Income Tax to the chartered accountant stating that the company got undue relief under ATIE for the last 7 years on the basis of his report. The ACIT is saying that chartered accountant was giving what? Wrong reports. Are you clear?
Clear.
To the effect that the concern was involved in manufacturing or production of an eligible article or thing. Okay.
Yes, sir.
Now, the contentions of the ACIT. Contentions of the?
ACIT.
Because the ACIT was raising a question, right?
Yes, sir.
So, what is his contention? Check. The ACIT contended that the report in Form TCB, then CCB by the chartered accountant is not correct. Since the company is not in any way involved in what? Manufacturing or production of any article or thing. The company is merely involved in what? Packaging of washing powder that was given by the Element Limited. It was not involved in manufacturing of any pouch or cover or sachet which was independently sellable as a product in market. Okay. Are you clear?
Sir.
Now, the company is not a new undertaking. Is it clear? Because it had taken over a proprietary concern and hired the plant and machinery of the said proprietary concern. Hence, it did not satisfy the claim for condition for claim of deduction under ATIE. Is it clear? Is it clear?
Yes, sir.
Now, let's see the CA submission and what the ACIT is counter-attacking. Beautiful discussion. Shall we? The CA said that the report in Form 10 CCB was only a declaration, it was not a certificate. Okay. The ACIT said the contention is not acceptable as Form 10 CCB is a declaration by chartered accountant that the undertaking satisfies the stipulated condition for claim as per the Income Tax Act and meets the requirement and meets the required condition. Is it clear?
Yes, sir.
Array, is it clear? So what is the first point over here? What is the CA saying?
He is saying it is a declaration.
It is just a declaration. It is not a certificate. The ACIT is saying, no. You have to check all the conditions, sir. It is actually a certificate, not a declaration. Yes?
Yes.
Second, the CA said that we have relied. Reliance means we have relied on. We have relied on the certificate of Directorate of Industry Assam. So we have relied on whom?
Certificate of Industry.
So the assessee was engaged in what? Was located in Guwahati, right?
Guwahati, yes, sir.
Guwahati is a part of, Guwahati is a capital of Assam, correct or not?
Correct, sir.
So the activity which amounts to manufacture or production is different under each act, correct or not? The definition of manufacture will differ not from act to act.
Correct, sir.
The chartered accountant issuing Form 10 CCB has to ensure that the same amounts to what?
Manufacture
As per the definition given in section 229 BA of the Income Tax Act 1961. Are you clear?
Clear.
Now, the assessee is also very adamant, not stopping. Reference to Supreme Court, ITO versus Orient Tiles and Marbles, wherein it was held that only when the marble blocks are cut into slabs. What?
Only when the marble slabs are cut.
There is an activity of polishing and ultimate conversion of block into polished tiles. Such slabs and tiles ultimately produced are held to be manufacturing activity, and because a new product has emerged. Now, what is the ACIT said? Even according to Supreme Court, now what is the assessee arguing? Please tell me what is the chartered accountant arguing?
Even polishing, cutting is
Cutting of marble block and polishing is also amounting to manufacture. Correct?
correct, sir.
So what is the ACIT saying? Beautiful judgment, beautiful discussion by ACIT. Huh? Even according to the Supreme Court ruling, the condition to be fulfilled is that there should be emergence of a new and distinct commodity. Correct?
Yes, sir.
Here you are converting what? Marble blocks into what? Tiles now.
Slabs, tiles.
So is the product changing or not?
Yes,
The
sir.
ACIT is saying here the washing powder remains washing powder even after packing. Yes or no? Very logical argument or not? Please tell me. Because if you put washing powder in a pack, it does not become some other powder. Na? It remains washing powder only. Now, the proprietary business was taken over by the company with all assets, liabilities except plant and machinery pertaining to old units. The plant and machinery was not transferred to the company but was given on hire to it for using the machine. Payment of hire charges was made and shown in the statement of profit and loss. Hence, the company has not violated what? Any condition. Are you clear? The assessee did not own plant and machinery, and such asset hired by the assessee amounted to what? Transfer, and thus the company was not entitled to deduction under ATI. Are you clear? Are you clear?
Clear, sir.
And last but not least, the conclusion. What is the conclusion? The definition of manufacture was inserted in 2009. When it was inserted? Before 2009, the definition of manufacture was not there. Since the case in question actually related to the period prior to the insertion of the definition of manufacture in the Income Tax Act, it was decided that though packing or repacking of product is not manufacture, the further activity of removing, dusting, grinding can be treated as manufacturing because the said activity changes the quality of the product and makes the product commercially marketable in different form. This conclusion emerged on the basis of court ruling in relation to excise law and other case laws holding that the provisions of taxing statute granting incentive for promoting growth should be construed liberally. Now, what the court is saying, what the conclusion is here, you know. See, na, see, Palani. Very, very, very beautiful conclusion. Huh? Generally, what happens? That what they are saying that ATIE section is brought for what? Is to punish assessee or is to give benefit to assessee?
Give benefit.
So you should construe it what? Very liberally. Are you able to understand?
Yes, sir.
Don't interpret it very
strictly.
very strictly. Okay. So assessee is doing a lot of activity. Like the activity which is assessee is doing is removing dust, grinding, because of which the quality of the product is changing. Okay. So the washing powder is not washing powder. It is becoming a better washing powder. Are you able to understand or not?
Yes, sir.
Certain tribunal and high court rulings have held in order to constitute an industrial undertaking, the industrial unit need not necessarily own its plant and machinery, and hiring of plant and machinery would not inhibit the ability of industrial. So it is not necessary. Now, is it written anywhere that you should manufacture from your own machinery? No. You can take the machinery on rent and still manufacture it. Yes or no? Please tell me.
Yes, sir.
Now, considering the rationale emerging from the court decision as regard whether the activity of packing constitute manufacture and whether hiring of plant and machinery from sole proprietary concern which was taken over by the would be in violation of the stipulated condition, the benefit of doubt was extended to the chartered accountant. See, the benefit of doubt was extended to whom?
Chartered accountant.
And he was not guilty of professional misconduct. Are you clear? Because there was a lot of doubt, na? With respect, whether actually it amounts to manufacture or not, there was a lot of doubts. So that doubt benefit has to be given to the CA. Now, what is the mistake of CA in this? Yes or no? And then they have mentioned the key takeaways. So from here, you can take it from here. Okay. Now, in today's time, there are a lot of anti-avoidance measures also like GAR and all. Correct? We can impose GAR also in such cases if there is a tax evasion.
Yes, sir.
Provided the tax benefit is more than what?
3 crores.
3 crore rupees. Now, the case study 5 is exactly similar to question number 7 of test your knowledge. It's a very small case study also. See, just one page. Okay.
Yes, sir.
So this is what this chapter is all about. Okay. So here we complete the entire syllabus. Okay.